is that, yeah.
Okay, good morning, everybody. Let's go back on the record. You'll notice that we've lost a few up here for commissioners. Just to comment about that, we've had some things come up for commissioners. One commissioner is on the way and will be here momentarily. Another commissioner we hope to be here momentarily. It has a little bit more complicated things that they're dealing with. I did want to ask council now, just in abundance of caution, if one or both the commissioners don't make it in a timely manner, do you have any objections to them reading into this case, given the circumstances?
We have no objections.
Public staff has no objection.
County has no objections.
Okay. All right. Well, with that, Mr. Hartman, good to see you again.
Good to see you.
Okay, I think we have a few more commissioner questions that we'll go through with you, and then let's see how it goes. So I think Commissioner Kleinfelter, I think, or Commissioner.
If I may, I want to correct one number. I said 263 customers or potential customers that were paying the minimums that would have waived impact fees relative. It is 237. I went back and checked and talked to the county, and some of them have changed. So the number changed. It's 237.
Okay, thank you for that clarification. We'll reflect that in the
Thank you.
transcript. All right, Commissioner Kleinfeld.
Good morning, Mr. Hartman. I have just a couple of fill in the gaps questions. I'm not going to cover material that's already been covered in other questions. You have access to your appraisal either electronically or in hard copy?
Yes, sir.
Right. I'm looking at the income approach section, and I'm looking at page 4-5, as you've numbered it, 4-5. And I'm understanding, reading what you're saying there, but you have that. I'm sorry, I should wait.
Go ahead.
I should wait.
Go ahead.
You reference the county's June 30, 2021 financial statements, and then you say, after reviewing that, you say another county representation reflected something. What was the other county representation you're referring to there? Because I couldn't connect it to anything in the materials.
I believe that's the audit.
The county's 2021 audit, financial audit. Is that included in is any of the supporting materials in your appraisal? If so, I overlooked it.
No, it's not.
Okay. Ms. Sanford, Mr. Drews, that's referenced in several other documents. Is that in the record anywhere? The county's I should say, Mr. Wheatley, you're probably the more appropriate person. Do you know if the county's 2021 audit is in the record anywhere? If so, I've overlooked it.
I do not, sir, but if it's not, we certainly can make arrangements and have it sent to you.
I think if it's there at the appropriate time when the case is with you, if you can just at that point just sort of direct me where in the materials it already exists, and if it's not, I'll ask you to file it as a late exhibit because it is referenced in several of the appraisals. Okay.
We do that.
Right.
We can do that, sir.
Those are the two documents I was looking at.
I got it.
I should have footnoted that. I apologize.
That's fine. We've cleared it up, and that's all I want to
believe
do.
That's the document.
As I say, I'm just filling in a couple of gaps here. Back on page 4.4-1, as I recall, your appraisal, the effective date of your appraisal is February 14, 2022.
That's correct.
And on page 4-1, you're using data as of June 30, 2021. You made a reference to this in your answers to Commissioner McKissick's questions yesterday, but I want to just clean it up and close it up. You didn't, at least on the written materials, consider the revenue impact or the potential revenue impact of the rate increase enacted by the Board of County Commissioners in 2021.
Correct.
And we all know what the facts were. They were initially 95% rate increase and then 20% reduction and then elimination of the water district tax.
You're correct.
My question really is, why didn't you consider that? Why didn't you consider that material?
I didn't consider it because I didn't have the impact of it on the system. I didn't have any actual data, historical data uh, with that change. There is something called price elasticity, and sometimes people don't use as much water when the rates go up so much and go down, and because of all that, it was uncertain.
At the point you did it in February 2022, you didn't have part year data or any reliable data as far as you were concerned?
Not enough under my practice. My practice looks back at least 1 year plus, we go back 5 total to get the trend. And with such a change, it was to understand the impact was not within the practice I do.
Great. Thank you, sir. I think Commissioner McKissick covered everything else I had, so that's all I have. Thank you, sir.
Thank you.
Please, Mr. McKissick.
Yeah, thank you, Mr. Hartman. Just 1 or 2 questions for clarification purposes. You indicated in the record this morning that the number of households that had paid in, I guess, an impact fee was 237. Is that correct?
They paid a minimum charge,
Paid a minimum charge.
and therefore the impact fee was going to be waived. It's like a sign up and save program.
Okay. And do you know how long that program had been established, or
The duration of it, I don't recall.
you don't recall? All right. And in terms of what they had paid, do you know what the totality is that they paid in over whatever period of time it was?
I did not do that analysis.
Okay. But these are people who have paid in a certain sum, but they are not connected to the system at this time.
That is correct.
All right. Thank you, sir.
Thank you, sir.
Commissioner Kamara?
Mr. Hartman, thank you for your testimony. I just have one follow-up question from that you just heard about. You talked about that you didn't provide an analysis about the impact of the rate increase on the system because you didn't have the data that you needed. And just for clarification, what data would you have needed in order to have performed that analysis?
For what I do for value to have a credible result other than a projection, I look at historical data for at least a year, at least a full year. And then I like to go back 5 years also.
Okay. Thank you very much.
Okay, any further questions? Okay, I know you did not have pre-filed testimony. I believe your appraisal's already in the record, but just confirm that. Okay, and now we have questions on commissioner questions.
No questions, no questions from the public staff. But we defer to the county first, yes. We would like to have the ability to cross last. So defer to the county first. Go ahead.
In general, our order was going to be public staff, county, and the company, but
I just know Commissioner Hughes, again, William Creech with the public staff. I think traditionally, and that may not always be the case, that the public staff has had the ability to cross last. But that may not.
this isn't, this is just clarification.
Okay, yeah, right, companies. But no additional questions.
Yeah, and this is the company's witness, so traditionally the company would go last. Anyway, let's, County, sorry about that. County, any questions on, this is a question on commissioner question period. Anything that you want to clarify?
Yes, sir. Based on the commissioner's questions, this appraisal was done on Valentine's Day of this year. And I'd like to ask Mr. Hartman if he were bringing that appraisal up to date to today with the inflation that has been occurring and the increased cost in piping, steel, and those sort of things affect his appraisal? And if so, how much?
I
Generally, we want to have just a question that's referred to Commissioner question, and I see a loose connection there, so I'll allow the question, but
Thank you. I asked for indulgence that this is off the top of my head, and so it's not going to be exact or anything like that. But in the February to October time period, based on the engineering news record, cost indices and those types of things, as well as cross-check back to Handy Whitman and others. It's going to be the highest inflation year this year for construction in the last 45 years of that record. And in that period of time, truncating February and truncating October, it would be 5% and and then that would be 5% of 10 million is about 11 million, so about 550,000. I'm doing the calculation as I talk. And depreciation would be in the order of a couple percent, so it'd be say 200,000. So there would be an increase of at least 350,000. Probable. I mean, that's just probable.
okay, thank you for that.
No problem.
Okay, Commissioner definitely has a question that she forgot to ask, so we're going to break order a little bit. And
Many apologies. The overnight made me forget. I had one more question. So yesterday you testified that you had only looked at one of the appraisals and not the other appraisal. I guess the appraisal for the county you stated you did not look at, but you looked at the appraisal performed for the public staff. And my question is just why did you only look at one appraisal and not both appraisals before testifying today and yesterday?
I just didn't get them. I just did not have them in my data file, and so that's why. If I had them, I probably would have looked at it in detail. But yeah, I was not asked, so I did not go into it. My appraisal is my opinion of value, and I stand by it. And so what other people say in appraisal is what other appraisers say. I'm not going to be impacted by any other appraisal by another outfit.
Okay, thank you for that.
Both of the other two outfits are good. I know Michael Lane and I know Harold's firm, and they're both excellent firms. I'm not trying to say anything bad about them.
okay, I think that brings us to company.
Thank you. Just a few questions here. You were asked early on about how many cases you had represented consumer interest. And so I wanted to ask is it the normal practice in your business to either represent a buyer or a seller?
Typically it is, unless like CMUD and others, both sides, because they know me and they do a lot of acquisitions. Both sides hire me, and I render my opinion, and that's the purchase price. In fact, I think I did one where Utilities Inc. was involved, and I've done others where others were involved, Landon and other systems with CMUD. So many Greensboro, Spartanburg does the same thing. So sometimes they split your fee, both pay 50-50, both waive any conflict, and we go ahead and I render my opinion of value, and typically that's the purchase price. So but most of the time it's one side or the other.
Mr. Drews, pardon me for interrupting. CMUD is Charlotte-Mecklenburg Utility Department,
Yes, correct.
now Charlotte Water.
Yes.
Okay.
I'm sorry, I'm used
Everybody in the room may not know who you were referring to.
I've got some gray hair on me. I'm used to CMUD.
it's a memorable acronym. So do you have a rough idea of among your clients, the balance between municipalities and utilities?
Yes, I've served governmental entities, non-for-profits, authorities, districts, things like that, about 40% of the time. So in my practice, about 280 times. And then relative to investor-owned utilities, I've served 8 of the top 11 in the United States, and that's the remainder.
So you were asked a series of questions about the engineering cost valuation coming from Draper Aden and why that's different from appraisal values. Can you explain the role of the engineering valuation versus the appraisal valuation?
Yes, typically the engineer's evaluation is a costing exercise and a condition costing future capital improvements, or CapEx, what we call that, and regulatory compliance, as well as operational issues, and which are all covered by the DA report. And why you go to a local engineer for the costing aspects, because they have done the most projects in that area for construction costs. So they typically do the cost. Now, past cost to the appraisal is a totally different thing. You have land value that the engineer doesn't do. And so I deleted that out of their work. You get an MAI for a land appraiser, not an engineer.
And could you explain what MAI is, please?
Made as instructed? No, that's a joke. I'm sorry. There, that's a real estate appraiser. I apologize.
It's okay.
The C mode thing is in my brain.
We can all get a little punchy here, but
It was a long night.
in your appraisal, what is MAI?
That's a real estate appraiser, forgot what, I'm drawing a blank.
That's okay. Is it attached to your appraisal report?
Yeah, Chris did the Mashburn Group, excellent group here in North Carolina, understands utility real estate appraisals. And he's done several throughout the state, and he's who I used. He's a signed and sealed report, opinion of value for the real estate at $425,250.
So getting back to this engineering versus appraisal valuation, does the engineering look at the book value of the utility system assets?
Well, that is one aspect, but one consideration. But actually, the engineer is supposed to be looking at that and also the costs, the local costs in the area. And that's why you want to do that. And they come up with their costing. It's not their appraisal, it's their costing. I take that, modify that to, first you test it, you talk to them about it, which I did, and then you either accept it or reject it. I accepted it with modifications, and I talked about the modifications I made, and then you convert it into a value, opinion of value for that one approach, which is the cost approach.
And so that process that you just described, is that the standard practice for professional appraisals?
For utilities,
Not the engineering side, but what you do
what
with
I
the
do,
engineering.
yes, is the standard, it follows USPAP.
Okay.
Uniform Standards for Professional Appraisal Practice, which I'm accredited in.
Okay, and when the engineering cost is done, are they looking at both the historical cost and the replacement cost?
They can.
Okay,
Mhm.
and how does that differ from the fair value that an appraiser is estimating?
With it doesn't have all the adjustments. It doesn't have It has physical or age life depreciation, but does not have functional and external obsolescence. In my report, you saw almost $724,000 in functional obsolescence that you take away from the cost estimate. It's a deduction. And so that's what the appraisers do. The
Okay.
other types of, all three types of depreciation, et cetera.
Thank you. There was also a question about use of I guess, the special taxing district funds, and including them show at least under one calculation, a small profit. And I wanted to ask, for appraisal purposes, are tax revenues counted as part of the revenues that would support a utility enterprise, if you know?
That is a Board of County Commissioners typically decision relative to the utility facilities. Your word typically, no, it's not. And the only way that you could include it is if there was an agreement by the county that they would transfer such funds in the future for some term to support the utility. And I found none.
And if the utility were sold to a private company, would that source of funds be available as supporting the operation?
Not just generically, but if there's an agreement between the county and the investor-owned utility to supplement rate revenues through taxation for some long period of time, and taxes typically are year to year, so it's very difficult to get something like that.
Okay, thank you. Last
Okay,
couple of questions here. In your market sales comparison approach, I believe you came up with a list of comparable companies. And how many utility sales were in your final list of comparables?
14.
Do you know, of those 14, did you do appraisals on any of them?
8. I
Eight.
knew them well. I had been out there. and seen them.
Eight of the 14 you did appraisals on.
That's correct.
Okay, thank you. That's all my questions.
Okay. I think we've already dealt with your appraisal report. It's Exhibit 1C in the application, which is already on record. So I think with that, no further questions. Oh, no, I spoke too soon.
Mr. Drews, you prompted one question just so that I have it. And if I may,
Please.
Mr. Hughes, Mr. Hartman, looking at page 5-18 of your appraisal, which is the 14 companies, can you just, so I can put check marks beside and tell me which of the 8 you did appraisals on?
Oh, surely. You're talking about table 5.
Table 5-2.
Two.
Yeah, which of those were the 8 that you appraised?
Hardin, Mount Pulaski, Park Water, the Waverly system. I testified in that one. I was one of the appraisers on the Commons. And I had done Anna Lucia, Hillview, and Skyland.
Hillview, you mean Hallsville?
No.
Oh, Hillview, I'm sorry.
sorry.
All right. And Skyline?
Yeah, Skyline.
Thank you, sir.
The breakout is 7. I did 4 of the 7 that dropped, and I did 4 of the 7 that were kept for the deal.
Tell me what you mean by that.
I participated in 4 of the 7 that I found not to be used, the bottom half, if you will. And then I participated in 4 of the 7 in the top half that were used.
Okay, well, Again, apologies, Mr. Drews, but I want to get the accurate information here. So of the ones
There's 8. I gave you
eight total.
And some of those I did not.
And which of those 8 are the 4 that you used and which are the 4 that you dropped?
Hardin, Mount Pulaski, Waverly, and Alucia.
And that means you did not use the other 4: Park, Water, Commons, Hillview, and Skyline, right?
No, I used Park Water. I used Commons. I used Diversified, Hillview. Oh, excuse me. The 7 that I used, Bellflower, Georgetown, and Skyline.
Okay, thank you. Of the ones that you appraised, of the 8 that you appraised, how many of those transactions went to closing? Do you know?
Hardin did, Mount Pulaski, Park Water, Waverly, the Commons. Diversified, I believe, is in the process. Hillview, I believe, is done also. And Lucia and Skyline.
Those actually
Almost all of them that I appraised closed.
went to closing.
Yes.
Okay, thank you.
With that, you may step down. Thank you very much for your
Thank you very
testimony,
much.
Randy. And Mr. Wheatley, the commission has requested to have Mr. Walker testify at this time to answer commission questions about his evaluation opinion. So we'll follow the same process that we did
Yes,
with
sir.
Mr. Harden. So we'd ask that he take the stand, please.
County would call Mr. Walker to come to the stand, please.
Chair Hughes, if I could, just for one moment, ask in terms of clarifying here, with respect to the county witness, when, in terms of questioning, could the public staff go after the company in the questioning? If we have questions.
We're comfortable with that. It may increase the number of public staff questions, but we are happy to work with them on this.
Okay, I'll allow it.
Thank you. Thank you, Chair.
Yeah, proceed, sir.
Okay. Okay. Good morning, Mr. Walker.
Good morning.
Can you please put your left hand on the Bible and raise your right hand? Do you swear that the testimony you are about to give shall be the truth, the whole truth, and nothing but the truth? So help you God.
I do.
Yeah, proceed, sir.
Okay.
State your name, please.
Harold Walker III.
What is your address, Mr. Walker?
My address is 1010 Adams Avenue, Audubon, Pennsylvania.
And what is your occupation?
I am manager of financial studies, employed by Gannett Fleming Valuation and Rate Consultants.
And what do you do in the course of that business?
Provide, well, as it pertains to this assignment, I provide appraisals of utility property.
How long have you been doing that, sir?
Appraisals for probably 30 years, 25 to 30 years. I've been working in the financial consulting industry for in the utility industry for over 35 years. So I've been involved in all aspects of rate cases, cost of capital, lead lag, depreciation, touching on all different aspects of the utility industry regulation.
Did
as
you
well.
make an appraisal of the Carter County water system, sir?
Yes, sir, I did.
Did you prepare a report?
Yes.
And to the best of your knowledge, is that report before the commission now?
That is my understanding, yes.
If you would, please answer the commissioner's questions with regard to that report.
Yes, sir.
Okay, I believe we'll start with Commissioner McKissick.
Thank you for being here, Mr. Walker.
Good morning.
How are you this morning? You doing pretty good?
Good.
Excellent, excellent.
Thank you.
We're going to be asking a few questions related to your report. Were you here yesterday when the prior appraiser was testifying?
Yes, sir.
All right. So you're familiar with his testimony?
Yes and no. It was a long afternoon. I might have daydreamed here and there. So, but generally, I think I can answer. But I'll be honest. If I was daydreaming, I'll tell you, I have no idea what you're talking about.
Well, that's completely understandable since we started at 1 o'clock.
Yes.
You would not be alone. All right. Now, in applying to be on the list of approved utility evaluation experts, this commission maintains you attested that a utility evaluation expert owes a fiduciary duty to provide a thorough, objective, and fair valuation. What does that mean to you?
It means thorough in the sense of looking at all aspects of information that is available, not being swayed by outside influence, and making sure that the appraisal is consistent with USPAP as well as financial theory.
Now, if you had to make a judgment call and it was a kind of a close call, I mean, how would that affect your fiduciary duty in terms of making a decision?
That's a good question. The judgment call will be swayed by as much outside evidence as I can find. When I say outside evidence, I mean published evidence, as opposed to my personal opinion or the firm's personal opinion. If it is, there's more evidence in the sense of personal opinion, then it gets swayed in that direction. I can give you an example. Within the income approach, there were questions yesterday about growth of customer serve. And with the income approach, we typically look at growth from state agencies that provide projections. And that's what we defer to, regardless of what our opinion is. As of the appraisal date, there were not local projections available for the local communities. The most micro projection available was for the county. So we used that county population growth as an estimate for the customer growth. And that worked out to, my recollection is 0.29% per year, which is about three and a half customers a year are added. Looking at the system, the way it's designed, my personal opinion is there's a lot more pocket for growth there. That because the lines are, the mains are located as they are, there's a lot of incentive for developers to come along. Because typically developers have to contribute property if they're developing systems far outside existing systems. But the way the configuration of the system, to me personally, invites it. But as I said, I deferred to the projection put out by the state on the county's projection, population growth. So when I say tipping, in terms of personal opinion, that's what I'm trying to describe.
I understand. So you relied upon the projected rate of growth of being about 3.5 customers per year for the system?
Yes,
All right. However, you think it has greater potential, but there wasn't data to substantiate that. Is that what I'm understanding?
that is correct.
Okay, very good. Now, have you provided opinions in other utility fair market proceedings?
Yes, I have.
Okay. Have you ever been retained by a consumer advocate to give a valuation opinion in a utility matter such as this one?
No, but I don't believe I've ever had the opportunity as well.
Okay. Now, has a utility commission ever declined to consider your opinion in making its ultimate determination of fair value?
No,
All right. Now, has a commission ever applied adjustments to your valuation opinions to the best of your knowledge?
there may have been one adjustment, but ended up being rounding at the end. They did not adjust my appraised value, so it might have been rounded out.
So can you
but-
explain the context that was done within? Or
My recollection is in a Limerick township proceeding. It was in Pennsylvania. And there was some adjustment done to a market multiples approach. However, in the weighting and the ultimate appraised value, it did not impact the number because it was rounded out to thousands as opposed to tens of millions. The appraised value, I'm guessing, was 75 million. So this little adjustment maybe was a couple 100,000. So it rounded out at the end when you went through. So when you look at if you look at the commission's order, their final decision regarding my appraised value is unchanged from what was actually filed.
thank you for providing that
Sure.
explanation. Now, as a part of your analysis, you developed a comparable group of water utilities shown in Table 2 of your report. Is that correct?
Yes.
All right. Now, how did you use the comparable group in your analysis?
The comparable group of utilities was used, one, to gauge the financial and risk characteristics of the system in question. And two, it was used to develop the weighted cost of capital for discounting purposes. And three, it was used in a market multiple method in which the multiples from that group were adjusted downward by 30% to account for what we concluded was the risk difference between the system in question versus the comparable group. So for example, when I say downward by 30%, if the comparable group's multiple were 10 times, we would say after a 30% adjustment that the same multiple applicable to the system was 7 times. So that's a 30% adjustment in the multiple. I'm sorry, I'm trying to recall where else
That's
we use
okay,
it in
that's
I believe that covers everything.
Oh, sure.
Yes.
Now, were you aware of the statutory requirement in North Carolina that in the process of doing your fair market assessment, appraisal, I should say, that you were required to use three valuation methods, both the cost, the income, and the market approach?
Yes, sir.
All right. And did you comply with that requirement in doing your appraisal?
Yes, sir.
All right. Now, can you explain how you developed the list of comparables that you use? Because every single company on your list has larger revenues, greater number of customers, and serves a much larger population. For instance, the smallest company by revenues is York Water Company, which has revenues of over 55 million, which is 43 times the revenue of the county system. And the York Water System also has the smallest number of customers in your comparable list. I think it's 73,144, which is 58 times the number of customers that the Carteret County system has. So how did you develop this list and how did you go about using it for comparability, considering the vast difference between the list that you have assembled and the stark contrast between those comparables and what we're dealing with in Carteret County?
Okay. The criteria for their selection is listed on page 13 of the appraisal, where there were 7 separate criteria for their selection. And the purpose of the group is to look at a market-based group. In other words, companies whose stock is publicly traded. So that's sort of the initial step. When you look at water utility stocks publicly traded, there are very few. In fact, there are about 9. So this group is 7 of those 9. So two companies, I believe, didn't make the screening process. I can't tell you offhand why, but they didn't. So the universe that is available is limited. So that was the basis for why we use these companies. Now, these companies that are used here are the same exact companies that I believe are used by any witness who testifies in a water or wastewater case before this commission regarding cost of capital. So they're the same exact companies. They're the same companies that any commission around the country uses, and they're the same companies that anybody on Wall Street who does the same type of analysis use, because simply put, they are the universe. There is nothing else to choose from. In a perfect world, I believe what your question is getting to is, would you want a more comparable group in terms of size and absolutely, but they don't exist.
I think I understand your testimony. So are you aware of sources of data for smaller water system transactions?
Oh, for transactions in terms of actual sales?
Yes.
Yes, and we did that separately.
Okay.
So we did two within the market approach. There are two methodologies. There's the market multiple methods, which is where you look at the multiples in the stock market, which is what this comparable group is used for. And then there's a second method called we term the selected transaction method, where we look at asset sales. And those groups are more comparable to the system here than in terms of size. And we did look at them. We looked at 18 of those transactions.
All right. Now, have you ever valued a system in the past with fewer than 2,000 customers?
Yes.
You have.
Yes.
On how often? If you have any idea what the frequency might be?
I couldn't, dozens of times. I don't have a
Can't
figure.
recall a number.
It doesn't.
That's fine.
If the question were under 500, I'd probably say very, very few. But once you get to 1,000 tends to be the number that people are looking for appraisals. Once you get into once you get up over 1,000, that's when appraisals are more often needed than not.
So you've done quite a few appraisals of systems with 2,000 customers or less.
I would think so.
Okay.
I mean, I'm just guessing off of the top of my head. I don't.
That's fair. You don't have to speculate. I was just.
Yeah, I mean, in terms of the systems that are purchased under fair market value rules, most of those systems probably are in excess of 2,000 customers by far, because it's just not, it's cost prohibitive for, a really small system. But I'd say 1,000 is the cutoff there. But that's just my, instinct in terms of when a suitor is looking to perhaps move in that direction.
All right. Now, why did you use a different set of companies on Exhibit 18 of your report when performing your selected transactions market approach? Would that set of companies have been appropriate to use as comparables for the other portion of your analysis?
Well, no, because the same type of information wasn't available. The one on 17, on Exhibit 17, that's the comparable group. They're the publicly traded stocks. So we can look at that and see what a stock price is and compare that stock price to the plant and compare that stock price to earnings, and we can see what it's fast, it's rapid, it changes on the second in terms of valuation of assets. We can see that. So that's one method. And then you referred to Exhibit 18, and they're transactions. They're slow-moving transactions. Maybe it takes 2 years for them, the entire process to, wind down. So we looked at two different groups for, basically two different purposes.
Got it. Now, could you please describe your cost approach methodology? Just the methodology right now. Mm-hmm.
Sure. The cost approach, we utilize the engineer assessment as the beginning point for inventory. For certain items that we did not have an installation date, we then relied on the same source of information that the engineer relied on, and that was the depreciation schedule, the county's depreciation schedule. So we made those adjustments for date, and we developed an original cost of the system. We then trended that for cost changes to bring it up to current value. And then we reflected the loss in value due to depreciation.
Okay, now on page 21 of your testimony, you stated the original cost method begins with determining the original cost new. And you take and measure that original cost new and look at the cost of assets when it was first constructed, just kind of verify that. But original cost new is based upon a review and summary of the utilities, accounting records, contractors' invoices, and bid tabulations to determine the most appropriate data. Did you at any point in time go back and check and verify that or obtain that type of information? Where did the data come from that you used to determine the original cost new of the Carteret County water system?
It primarily came from the engineering assessment because
Assessment.
that was their task in this proceeding.
Now, on page 6 of your testimony, you state that for the year ending June 30th, 2021, the Carteret County Water Fund showed 5.7 million, I think the exact number was 5.759 million in net utility plant. Did you use that information in your cost approach? And if not, why?
The number you just referred to is from their audited statements. And their audited statements reflect shorter than applicable service lives for the assets. For example, if you take the depreciation expense and you relate it to the gross plant and any one of the 4-year period that we looked at on Exhibit 1, the effective depreciation rate is 3%, which means plant life has on average 33 33 years. The largest accounts in terms of plan accounts for this system would be mains and water treatment. Well, clearly, both of those accounts have asset lives far in excess of 33 years. Our analysis determined an effective depreciation rate of 1.75% versus the 3% used by the county on the audited statements. So that's why we did not use that. Secondly, in around the year, well, it's 22 years ago, I think. GASB 34 came out. GASB 34 is Government Accounting Standards Board, in which the financial statements of government were going to no longer be reported on a cash basis, but be reported on an accrual basis. Accrual accounting is what is typically used by public utilities regulated by public utility commissions. Beginning at that time, this is 22 years ago, I assisted or oversaw our firm's effort. There's 2,500 people in our firm in helping municipal clients convert their cash basis systems to complete inventory, including roads, bridges, streets, water systems, wastewater systems. So I'm quite familiar with the limitations, if you will, of municipal audited statements. It's been my experience that typically they undercapitalize. In other words, there is more assets there than typically reported. Secondly, they over depreciate, and as a result of over depreciating, once an asset is fully depreciated for accounting purposes, it is removed from the gross plan outstanding. So in theory, that plant no longer exists. In other words, there might be pipe out there that, hey, no longer exists. Well, I can walk out there and look at that pipe and know it still provides service. In terms of value, that pipe still exists, and that pipe still has value. And that's why we did not rely on the audited financial statements in terms of net plan.
And when you refer to audit financial statements, do you want to be more specific in terms of saying how those statements were provided and who those statements were provided by?
It's not a question of who provided. It's just a generalization. That's it. What I'm saying is true with regards to just about any municipal system. I'm not saying those financial statements are wrong. They're just prepared for a different purpose.
I understand.
They're prepared for a different purpose than what we're using them for appraisal purposes.
So these were Carteret County.
Yes, sir. They were Carteret County, and that actually.
That's what I was trying to get into the record.
Yes, sir. And actually, there was a question earlier about audited financial statements in the record. My recollection is on if you just want the without the footnotes, if you just want the financials, they're in Exhibit 21 of my appraisal, and I believe it's on page. They begin at page 102, I believe.
Thank you. That's
Sure.
what I was trying to get into the record.
Sure.
Just in terms of that reference. Now, can you please explain the source of information in Exhibit 7 of your report? And how did Draper Arden update to present value water system in its updated report dated December 2021?
I'm sorry, I don't understand the
Okay,
question.
could you go to Exhibit 7? Your Exhibit 7?
Yes.
All right. Where did that source of information come from?
Exhibit 7, if you turn to page 4 of Exhibit 7.
Okay.
There's a comparison between the numbers that we relied on ultimately versus the engineering assessment. We primarily relied upon engineering assessment, but because we were recalculating service lives, we needed installation dates. So in certain instances, we had to go back and look at accounting depreciation records just merely for installation dates. If the dollar figures were different than what the engineer used, because we were using the date, we also used the dollar figure from the depreciation schedule. This is the same schedule that was provided to the engineer. There's also 5 different asset groups that were not included in the engineer's assessment. However, in the clarification letter that I believe the staff asked questions of the engineer, and he provided certain clarification statements. And those clarification statements clarified that, in fact, he had not included the items which we show on Exhibit 7, page 4, as not listed, which we ultimately included in the inventory because, number one, they have value. Number two, they are part of the transaction.
Okay, so in terms of the use of the December 21 report by Draper Aiden, you basically went back, used it, relied upon it for the purposes that you just explained.
Yes.
All right. And when you talked about obtaining additional information from the engineer, and you talked about certain clarifications, did you communicate with Draper Aiden directly to get those clarifications, or how did you go about contacting the engineer who did the assessment, or people with Draper Aiden to obtain information that you might require?
The engineer was asked clarifying questions by, I believe it was the staff, but I please correct me, but that's my recollection. There's a letter in which the engineer replies to those clarifying questions, in which he lays out various items. For example, he clarifies that services or meters are not part of his inventory. And so we included those as part of the inventory because they're part of the transaction and there is value related to those assets. So this was in our view, a public document. It's wasn't a secret conversation with the engineer. It was a letter, and I know it's in the appraisal. There's a date on the letter. We cite to the date of the letter to the staff. If need be, I can find it in the appraisal. But
Okay. Now, let me ask you this. Is it your understanding that the figures found in the Draper Aiden summary tables represent the original cost new?
yes,
Okay. And did you rely upon those tables?
yes, with the understanding of what I explained previously.
Or
Yes.
now you might notice in the report that now we're talking about the Draper Aiden report, that table 1 is titled Estimated Book Value Carteret County Water System, and table 2 is titled Present Book Value for Carteret County Water System. Do you know why one is identified as being the estimated book value and the other states it is the present book value?
No, I can't answer that question.
Okay. Now on table 2, there's also an asterisk next to several entries and a note at the bottom of the page that states that the value has been increased by approximately 5% from the 2019 study, feasibility study. Can you explain why Draper Aiden increased the values on this table, and if they are meant to represent original cost new?
I can't explain why they were changed. We removed that escalation. It's footnoted on page 4 of Exhibit 7. We excluded the 5% escalation.
Excluded the 5%?
Yes.
Okay, very good. Now, on page 25 of your testimony, now, wait for a minute for you to get there. Okay. You state that the original cost new of the water system is not less than $14.9 million. I'm rounding that off. Is that correct?
That is correct.
All right. And is that consistent with what you believe that original cost new was?
Yes.
All right. And then the Carteret County water system assets selected audit financial information that is attached to your report as Exhibit 1 shows gross property, plant, and equipment of $12,195,043 in 2021. Can you explain the discrepancy between those numbers and the assessment that it's not less than 14.9 million?
Well, I can give you my rationale for why they're different. I don't know that this is factual, but as I mentioned previously, the depreciation rate used in the county financials is 3%. So that's 33 years. So once an asset is fully depreciated, it is removed. So that 12 million on the financials, you reference Exhibit 1, that $12 million is after the removal of assets that, according to the accountants, had been fully depreciated. If they if those assets are still providing services, they would be included in the 14.9 million that we included in our analysis. So you're talking about $2 to $3 million, which I believe can just simply be explained by the difference between a 1.75% depreciation rate, which is what we believe is appropriate for the system, versus the 3% used by the county. I believe if you went back in time, mathematically, you're getting pretty close to that difference in the number.
Now, the Draper-Arden report,
Yes.
which is essentially the engineering assessment, also provided financial valuations. Did you use or rely upon the financial valuations that it contained in preparing your appraisal?
I believe the answer is no, but I don't know exactly what you're referring to. So, we treated their report we looked at the report mainly for two things. One, condition of the system, and two, an original cost inventory. That's what we're looking for because we believe that's what the law requires. Now, obviously, we read the entire report, but I don't know what you're referring to when you say valuations. But I don't believe we wouldn't have used those other than what I just indicated, condition and inventory.
Were you aware that the original Draper-Arden report that was done in connection with the proposed merger of the county's water system with the town of Beaufort?
Yes, I believe that 2019.
Yes.
Yes, 2019. Yes.
And that it was done at that point in time as a tool that could be used to evaluate whether the merger was in the best interest of both
Yes.
the town of Beaufort and the county.
Yes, that is my understanding. I did review that report as well.
All right. And at that time, it was proposed that the system would be transferred to the town of Beaufort for $1. Is that correct?
That's my recollection, yes, but I did not follow the logic.
Okay. Thank you. I don't have any further questions this time.
I'm just going to take over on the next approach, the income approach.
Yes.
At a very high level, can you just explain how you utilize the income approach in this particular appraisal?
We're assessing the income or cash producing capabilities of the assets in question. So basically, we look at revenues less expenses and adjust for depreciation, capital expenditures, and that value in any given year is a net of debt cash flow, which is discounted over an extended period of time, and we take the present value of that discounted cash flow to develop a value for the system.
Okay, so following up on that, you mentioned discount. discount value, discount factor.
Yes.
It appears that you used several different ones and you kind of made justifications for different ones. Just in general, is it mathematically or from a finance analyst standpoint, the lower the discount rate, the higher the valuation, all things else equal. Is that correct?
All things else equal, that is correct. In the analysis, all things were not equal between the municipal ownership versus the investor ownership. So I just want to clarify that.
Well, and speaking of those two sets of ownership, do you think the income approach valuation for a fair value proceeding, so for this type of proceeding, should focus on establishing the income that the buyer will receive after purchasing the system, or on the income that the seller would receive if they did not sell? Does that make sense? Those two approaches? Because like, as you said, they're not apples and oranges. So
Yes, yes, I believe I understand what you're saying. In fair market value, we're looking at hypothetical buyers and sellers. They're not, it's not Carolina and it's not the county. It's somebody very similar to them. It's sort of a composite, if you will. So the buyer is a composite out there, potential buyers. If we used Carolina Water as the buyer, that would be known as investment value. Now, there's a difference between investment value and fair market value, and they fall under what's known as the standard of value. When you appraise something, you state the standard of value. What is the purpose of why am I valuing something? And depending on that standard, you make different assumptions. So by law, we're required to appraise these systems under a fair market standard, fair market value standard. So Carolina, under that standard, Carolina Water is not the buyer. It's a hypothetical buyer, so it's a composite.
okay, thank you for that. So it is actually a composite of both investor and potential other county.
Yes, yes.
Okay, that helps because for our
Yes.
purposes, we are looking at Carolina Water.
Absolutely, yes.
Okay,
Right.
okay.
So it's sort of like a house. That, right, when a house sells, somebody appraises it, it's worth $100 or whatever it's worth. People go out and bid, and there's bid prices all around. Those bid prices are not necessarily the same as the appraised value. The appraised value is just a fair market value for that house. Anybody's going to bid something different than that, so.
Okay, well, sure. Thank you for that. Do you know, are there any jurisdictions that would, I guess overrule the standards and say that for their income approach, since it is dealing with an IOU that is going to be buying the system, an investor-owned utility, that they would require the income approach to be done with just that? And I mean, I understand you did a good job of saying the standards, but what if the law under a particular fair valuation said that we are dealing with investment value, so we want you to use that? Are you aware of any of those?
Personally, I am not. I assume it could, well, under law, anything could be done. So I shouldn't say anything can be done. But I believe it could be done. I'm not aware of what you're describing actually existing elsewhere.
Okay. So on page 36 of your report, you state that your capitalization of earnings method suggested a value of 10.8 million based on pro forma 2012 results. Should that have read 2021? Was that just a
Yeah.
typo?
That is a typo, sir. That should be 2021.
Okay. Looking at your summary chart, Exhibit 19, it appears that you disregarded your capitalization earnings analysis and only used the DCF, the discounted cash flow. Is that correct?
That is correct.
Can you explain why you made that?
The capitalization approach was calculated based strictly on current owner and current operator. And we did not, we don't believe the current owner and current operator is representative of a hypothetical buyer.
That makes sense. And so just jumping to the market approach now. Thank you for the, can you just explain your market approach assessment of value? Same thing, just at a high level.
Yes, in the market approach, there are two methodologies. There's the market multiple, in which we use the comparable publicly traded stocks. What is that multiple of their stock price? And then there's this selected transaction method, in which we look at actual sales of utility assets.
Okay. Very good.
So the selected transaction would be similar, or I should say, went through a process similar to what we're going through today. They're also the result of fair market value legislation and other regulatory jurisdiction.
Okay. Thank you for that. I'm going to pass it over to any other of my colleagues that have questions. Chair Mitchell.
Just a quick one on your, for the income valuation.
Yes.
Am I correct that you all assumed a scenario of no growth and then a scenario of minimal growth?
Yes.
Okay. The minimal growth, help me sort of quantify what the minimal growth rate was.
0.1%
So what is that? 0.1% of what?
of cash flow. So cash is growing in the future at 0.1.
So okay, got it. Can you help me understand more your assumptions about earnings? Where's the starting place for earnings for these two systems?
The starting place for earnings is the cost of capital calculated for the comparison group.
Okay, and so we're in that instance, we're looking at it's a muni cost of capital, is that right, as opposed to an IOU cost of capital?
Well, there's two. We did both
Okay.
muni and investor owned. So we for the muni, we use muni cost of capital, and for an investor owned, we use investor owned cost of capital.
Okay, did you hear Mr. Hartman's testimony about income approach in this context? The income valuation approach in this context?
I guess yes, I was, yeah.
Well, can you tell me what you heard him say?
He was explaining why he didn't do it. He was troubled by not knowing the growth of customers. He also, and I don't mean to put words in.
I'm not asking.
This is my recollection.
Understood. Just
and he also looked at the financial statements through, I believe it was 2020, because he was looking at actual financials and he saw they were losing money and he did not think it was a meaningful calculation.
Okay. So what we have, the folks up here who have to make a decision in this case, is we've got one appraiser who says the income valuation approach is of no use here for these reasons. That's what I understand Mr. Hartman's position to be. Your appraisal includes an income valuation. So defend, in light of the testimony we've heard from Mr. Hartman, defend your decision to use the income valuation and why we should give it weight. Why should we give it weight?
Well, part of the difference is we included budget 2021. So budget 2021 includes the change in the structure of rates as opposed to terribly low rates subsidized by taxes to eliminating the taxes and pushing basically those dollars up into rates. So the revenue stream increase by roughly 95%. And that was our beginning point in the valuation. So that I know is a difference from Mr. Hartman and what we did. And I only know that from sitting here today. I
Okay.
did not review his appraisal at all.
So then for the
Yes.
I'm just a lawyer.
Yes.
And I'm trying to understand this technical information that you
Yes.
all are putting in front of us. So bear with my questions because they're going to be remedial. Why does that matter? Why does it matter that you all use the most recently in effect rate structure, rate design?
Well, one, it eliminates sort of that problem of a money losing system without the taxes. I mean, the system has been subsidized for, I don't know, close to 10 years because of taxes, basically $400,000 a year. I believe that's the figure, between $400,000 and $500,000 a year. And taxes were basically moved over into the water fund, which acted as a subsidization of the rates. Had the budget not reflected the tax, the elimination of the tax dollars and the perceived correction in the rate, our perceived correction in the rate, I can't say that we would have been able to do an income approach. That was a big starting point, to be able to have revenues, to at least have some profitability in the system. Without that, it's difficult. We've done appraisals before where we've said we can't do an income approach because of there's no money there.
Okay.
So the approach makes no sense. So
Thank you. You've answered
Sure.
my questions. Thank
Sure.
you. I appreciate your
Sure.
your responses.
sure.
Commissioner. Commissioner Claufelter.
Mr. Walker, I've got a couple of detailed questions for you and then one general education question. The detailed question follows on what Chair Mitchell was just asking about. On page 6 of your appraisal report, you discuss your approach to the income evaluation, and you indicate that the date of your appraisal is, effective date of your appraisal is December 1, 2021, correct? That's the effective date of the appraisal. As of 12/1/21, right?
31, December 31st, 2021.
I'm sorry, did I write it down wrong? December 31st is the
I'm not
effective
looking at the
as of
page, but I
date?
just know offhand that it's, you were saying,
It-
it should be, if it's not,
In either case, it's in December of
Yes.
2021.
yes, it's
Right.
December 2021.
And so for your income approach, you sort of base that off of the water rates that were approved in July of 2021.
Correct.
Did you make an adjustment or did you do a revision for the subsequent reduction of those rates in September 2021?
No, we did not.
Tell me why.
Because we relied on the budget. Had they revised the budget, we would have done so, but
You didn't do it because you were relying on the official adopted budget.
correct.
There wasn't a subsequent budget amendment when they reduced the rate?
As far as we know, there was not. There
Okay.
could have been, but
Thank you. As I say, my questions are detailed, so apologies for being in the weeds. I want to go, Commissioner McKissick asked you some questions about this. I just want to go back and be sure I'm really clear on what you gave us. Exhibit 7 to your appraisal report,
yes,
page 4.
yes.
Do you actually have that open in front of you?
Yes.
Okay. Am I correct that the pages following that page are the depreciation schedules that you obtained from the county?
No, sir.
And what are the pages that follow that page?
That is our determination of the estimated accrued depreciation at December 31, 2021.
That is your depreciation.
Yes.
Okay, that's not the county's Schedule 6.1.
I don't know it's not the counties. I do know that.
Okay, well, that helps me, and thank you for that. I guess the question really I have about page 4 is in any case where from the county's schedule, you had an original cost figure and an installation date, did you always use the county's figure and the county's installation date when you had it?
Yes.
Thank you. That's the detailed question. I just want to confirm. Now, the question just for general education purposes has nothing to do with this case, all right? So I'm familiar with why for-profit companies use accelerated depreciation. But you and Mr. Hartman both have alluded to the fact that local governments sometimes use what I would call accelerated depreciation. What's the benefit to a local government of using accelerated depreciation? Just general education.
General education.
Why would a local government find it beneficial to depreciate an asset more rapidly than its actual useful life?
Because primarily because debt is paid with cash and depreciation is a source of cash. So it helps with debt service coverage, regardless of the type of, that's my, as a financial analyst, that's my rationale for it. I've never worked in that field. So in terms of, I've never, been a accounting officer for government. So I don't know that that's a fact, but as an outsider looking at it, that's what I believe to be the reason.
Okay. Thank you. That's, as I say, it's not material to this case, but both of you referred to it, and I just needed to understand something.
Yes.
Thank you. That's all I have.
Sure.
Okay, Commissioner Cameron?
Just one follow-up question to make sure that, that I understand your testimony about the income approach, and it relates to Chair Mitchell's and Commissioner Clodfelter's question about why you believed you could provide a value based upon the income approach. And you testified that you used the 95% increase in rates. But explain to me why that that value or that reliance what remained valid after the rates were decreased. In other words, after the county decreased the rates again, why would it still be appropriate to use that 95% increase in rates?
Well, we relied on the budget, and the budget not only reflected the 95% rate increase in the revenues, it also reflected what expenses had to be covered by those revenues. In other words, the need for that increase.
Mhm.
I would assume that if they reduced that rate by 25%, they better have found 25% savings in expenses. We didn't know what those numbers were. And the reason we don't know is we don't know that there's a revised budget, at least published. There might be an internal revised budget. But if rates were reduced by 25% subsequent to the adopted budget, then I would assume they'd have to have similarly reduced expenses by 25% because the two have to sort of mirror one another.
Okay. Thank you.
Sure.
Any further commissioner questions? Okay, we're going to have questions on commissioner questions, and the order that we agreed on, I believe, is that we are going to start with the company, go to the public staff, and then go to the county.
One brief question to clarify the last question you got from the commission regarding an income approach and using the rates the county had that covered approximately 95% of their cost. Is it appropriate to reflect an income that would cover the cost of the utility enterprise without tax subsidies when doing a fair value appraisal?
I'm not sure that I understand your question. I think you're asking, would we had include the tax subsidies? We would not include tax subsidies in our appraisal if they existed, but it was eliminated as a result of the budget that was adopted.
Okay, and maybe I can reword, I think we're on the same page here, but would the income approach that you use properly rely on rates that covered the cost?
Yes, with the 95% increase, yes.
Thank you, that's all.
Mr. Creech?
Just one question, and this is also kind of an educational. You talked a lot about depreciation, and I believe that you mentioned full depreciation. Was it after 33 years? And coming off the book?
Yeah, that was just in round numbers using the 3%. You know, obviously that's a composite number. It's going to vary by account, by type of assets that's in that account. So if there's a 5-year asset or a 10-year asset, you know, they retire when they do. And
Do you know which portions of the Colorado County system are older than 33 years?
33 years. I think the wells are offhand, but you know, other than that, but again, that's a composite number.
Understood. All right. Thank you.
Sure.
Mr. Walker, going back to the question asked Mr. Hart, Mr. Clodfelder pointed out your appraisals effective as of 12/31/21.
Correct.
And to bring it current today, do you have an estimate on how much the appraisal should be increased or decreased over the intervening 10, 11 months?
Roughly speaking, construction costs for water utility plant, I'm thinking of Handy Whitman indices. They've increased about 10% in the past 12 months. From that 10%, you'd have to subtract out depreciation, which, you know, ballpark is, we use 1.75, but if we just round it to 2%, there'd probably be an 8% increase in the appraised value based on the change in cost indices.
Thank you, sir. I have no further questions.
Okay, thank you. Any? Okay, well, I think again, we have your appraisal already in the record, and thank you very much for your time.
Thank you.
You step down.
Thanks.
Mr. Chairman, could we excuse Mr. Walker to leave, sir?
Oh, yes. Yeah, I don't believe there's any rebuttal questions for him. Yes, you're excused. Thank you.
Thank you.
To stop his meter to us. That's the real reason, sir.
Glad I could help.
Thank you, Mr. Walker.
Okay. Mr. Creech?
Yes. William Creech again with the public staff, and we would like to introduce Mr. Lane, our appraiser.
I think just income. You're welcome. Start at the income. Yeah. Yeah, I'll do it and then give you the question after. Yeah. Okay, welcome. Mr. Lane, could you please put your left hand on the Bible and raise your right hand? Do you swear that the testimony you are about to give shall be the truth, the whole truth, and nothing but the truth? So help you God?
I do. Mr. Lane, will you please state your name, business address, and position for the record?
My name is Michael Lane. Our business address is 49 Music Square West in Nashville, Tennessee. Position is partner and chairman of the board at NewGen Strategies and Solutions.
Thank you, Mr. Lane. And Mr. Lane, on October 14th, 2022, did you prepare and cause to be filed in this docket testimony consisting of 4 pages and 2 exhibits marked MGL 1 and MGL 2.
I did.
And do you have any changes or corrections or supplements to your testimony?
To my testimony,
Yes.
no.
What about to the exhibits there too?
Yeah, we have one clarification. As I was sitting in the hearing room yesterday, I noticed there was a print range error on one of the tables, and so there were footnotes that were referenced on the page, but not included at the bottom of the page. So I had the print range error corrected last night. We have a revised table that includes all the footnotes.
Mr. Lane, do you have the actual page number on
It
that?
is exhibit, I think it's exhibit 1, table 2.
Exhibit 1, table 2, and so,
Let me just verify that. Yes, it's exhibit 1, table 2 of my appraisal report.
all right, just a moment, I'll hand out these corrections.
It's not substantive, but I wanted to make sure it was complete.
Do I get one seat?
Yeah.
Okay. What is that? This will hurt.
And other than that supplement or correction to the print range error, Mr. Lane, if you were asked those same questions today that were posed to you in your testimony, would your answers be the same?
They would be.
Okay. Chair Hughes, I move that Mr. Lane's direct testimony be copied into the record as if given orally from the stand, and that Mr. Lane's exhibits MG1 and 2 as corrected for the print range error today, and be identified as pre-marked when filed.
Okay, and just so I understand, for the, we have the existing appraisal already in the record, but with this correction, in an abundance of caution, is your motion to just put in the entire appraisal with the correction?
Yes.
Okay. So moved.
Mr. Lane is available for cross-examinations and questions from the commission.
Okay, Mr. Lane, we took away some of the surprises here by you being third, but we may be able to make it a little quicker if we can start by just understanding something fairly basic. It appears the bottom line of your appraisal is you focus on the income approach and using the income approach to come up with your bottom line number.
We considered all three approaches. We relied primarily on the income approach. Yes.
Okay. Primarily meaning the number that is at the that you put forward, that is the number that's coming
Yes.
directly from your income
It's our
approach.
opinion that that's the most reliable indicator of value in this case.
Okay. Very high levels. So we maybe can avoid going through all the details of the approaches you didn't use, but could you just briefly
So
say why you didn't use the other ones again?
I want to be clear. We did use them. All three approaches inform our opinion of value. We considered all three approaches. All three approaches, we like to say, hung together, told us a complete story, and affirmed our opinion that the income approach was the most likely indicator of value. We don't typically rely on the market approach to value because there are so many differences between utilities: customer density, regulatory environment, political environment, general economic area, that it makes it a very difficult exercise to make adjustments to get them to be apples to apples. In addition, and probably more importantly, the transactions that we get the data for that are publicly available, they don't tell the whole story. We don't know what strategic synergies there were, what strategic incentive there was for a particular purchase price. We know of instances where utilities intentionally overpaid, and had to write down the overpayment simply to keep a competitor out of their backyard. Those don't show up in the data, in the newspaper, right? So we don't know what their incentives were, what their motives were. We can't account for that. And so we don't typically use that approach as a primary indicator of value. We use it as a check. The cost approach we use to set the lower and upper bounds of value. We know that no prudent seller would sell for less than original cost depreciated. And no prudent buyer would buy for more than replacement costs depreciated. Right? So those set the lower and upper bounds. It tells us that if we do an income approach and the number is beyond replacement cost less depreciation, we've done something wrong. We need to go back and look at it. The market approach comes in at a different number that's outside those bounds. We've done something wrong. We need to go back and look. All three approaches should tell you a similar story. And in this case, they did for us.
Okay, that's helpful. I did just have to comment or get a follow-up question on one of the things you just said, that no willing seller would sell below the original cost.
Outside of some other motivation.
Okay, that last part.
Yeah.
Okay, because we do have some evidence that the county was
outside
one.
of some other non-economic motivation, yes.
Okay, because we do have evidence in the
Sure.
record that the county did make a potential sales offer to, or
Right,
merger
right.
offer to Beaufort. Okay, so let's focus on the income, just because you primarily relied on
Sure.
that. Okay. So I'm going to jump right into some of your calculations. So on page 4 to 6 of your report, you state that you developed a regulated retail revenue requirement for the system and performed a discounted cash flow analysis to identify the income value for the system.
Yes.
So I take that to mean that, and correct me if I'm wrong, that regulated retail would actually be what I think the previous speaker referred to as an investment value, or it is a value for somebody that is underneath our regulation as opposed to, say, a municipal government.
No, it's not the same. Let me just clarify. Agree completely with Mr. Walker's characterizations of investment value versus fair market value. Two different standards. The standard here is fair market value. We differ slightly. That might surprise you that two appraisers differ slightly. That the hypothetical purchaser should be the most likely, or the most likely purchaser. In our opinion, the most likely purchaser of a utility such as this is a regulated investor-owned utility, right? And so we looked at a basket of market comparable investor-owned utilities to develop a return on equity and a weighted average cost of capital, which gives us a discount rate, which also gives us a return on rate base that we could apply to the rate base, which we based on the county's accounting records, to develop revenues. And then we used benchmarks to develop expenses for that hypothetical third-party product. So we have revenue that's derived from rate base and return on rate base, expenses based on a benchmark of other utilities to develop a cash flow that is then discounted back to present value.
No, it makes sense. But if I'm looking puzzled, it was to your remark that you based the rate base on the accounting records of the county. Could you just say a little bit?
Sure. We worked with the county. They gave us their audited financials. We have the original cost less depreciation that was in their records. We looked at the differences in depreciation. Our calculations showed that they should probably be 53% depreciated. It was actually more like 50% depreciated. So it was close. We didn't feel like we were so far apart that we should substitute our opinion. And so we used their accounting records. And I think, that number would be $5,750,000. On table 4.1, you can see.
Okay. So that makes sense. Are you aware that under our fair value regulatory regime, what the application today, or that's in front of us today and yesterday, is what it's actually trying to do, and it's in the title of the application, is to establish the rate base?
Yes. I am.
So, so my challenge with the understanding the income approach is you're using the income approach to establish the rate base for fair value purposes under our requirements, yet you are taking the rate base from accounting records from a county government and plugging it into your calculations. Isn't there some circularity in this approach and logic?
I wouldn't call it circularity. What I would say is that if an entity is going to make a purchase of an asset, this is the approach they would use. They would look at what they consider to be appropriate rate base, what they could earn a return on, which is invested capital, and they would apply their ability to earn a return and an appropriate discount rate, and they would come up with a value or a range of values based on that income approach.
Okay, so following up on that, it was difficult. There's a lot of tables. I'm an engineer. I like tables. I like Excel. To the best that I could tell, your final number that is put forth is using a rate base, and correct me if I'm wrong, of $5,904,123. There's a line in I think it's table 6, where it says that it's one of your tables in the calculations. Carteret Water System income approach, revenue requirement, water system, table 6 of your calculations. And this is some of your detailed calculations where you are determining what the revenues would be for this system. So I think in your description, that would be what the revenues the applicant would hope to be getting.
Yes.
Do you have that table?
I'm not finding the number that when I look at table 6, it does not.
It's line number 9 of table 6.
In the report or in the exhibit?
Exhibits, I'm sorry.
Exhibit 1?
It's exhibit 1B. And I apologize. Sometimes we have 3 labels on this because on these
It's
exhibits.
1B in the application.
Yeah.
It's table 6 on your appraisal, in your appraisal report.
In the body of the report or in the exhibits?
It's
And which exhibit? This is the problem.
Somebody
I'm
get
sorry.
somebody get the table in front
It's
of
in
them.
Exhibit 1B.
Yeah, and again, apologies. There's some multiple labeling here going on. We're not.
Table 6, 1B.
And which,
It is page 32.
and which, right, line number 9, rate base 5,904. Yes, sir, I have that. I was looking at it all along.
No, and I apologize. I have an excerpt of the table, and just in this little excerpt, I have 3 references. So I apologize for that.
Like, you can see, just for clarification, you can see on row 3, we have that net utility plant 5,749,000, which came from the county's records. And then we had working capital, took out some accumulated deferred income tax, and then that gives us the 5,904 number. So that's what our assumed rate base was.
So yeah, okay, I appreciate that clarification. So you didn't pull a number directly from the county's.
This is the basis of our calculation, but we did further analysis to it. Yes.
Okay. So again, This spreadsheet and this model is designed to produce a value that we are to consider as the rate base for
Yes,
the applicant.
yes.
Embedded in this model, and I mean, it's a little buried, but it's pretty clear, you even call it rate base, is a number of roughly $5.9 million. And then you put that in, and that produces the fair value from your income approach.
Yes.
Circular or not, if it turned out to be that the fair value hypothetically was 9.5 million as the applicant has put forth, and you replaced in your calculations the rate base number of 9.5 million, I mean, you replace the 5.9 million with 9.5 million and ran it again. You don't have to run it now, but would the income number that came out at the end, would it be, in your opinion, significantly higher or higher than what your math produced by putting in 5.9 million?
It would be higher than what's in there now, yes.
Okay.
It would be in excess of the 9.5.
Okay. So if you put in here, then your income approach would have produced a higher value that you put forth.
It would, yes.
Okay. So the value that you put forth is dependent on, mathematically, not in theory, but it is dependent on you establishing a rate base in your formula of 5.9 million.
It is. It's also dependent on, the discount rate and the return on rate base and all of the assumptions that go into the calculation.
No, I understand. And your discount rate, I think, is, you probably heard us talking about discount rates in some of the previous ones. I do think that you use the discount rate which is pretty comparable to what Carolina Water's weighted average capital cost. So,
Yeah, and we actually did an analysis using their numbers and didn't, for illustration purposes, didn't rely on it, but it's in the report.
okay. Did you do it? You didn't do an analysis using their 9.5?
No.
Okay. Okay. In other states that you've done this with just gone through a similar exercise, is this generally the process that you would for the income approach?
It's a very similar process. The whole process is very similar to other states. Yes.
Okay. I think that's it for my questions related to it. Do other commissioners have any other questions? Okay, we will now go to questions on questions. We didn't get the order, but I'm gonna assume public staff, you in this case want to go last.
It's true.
Okay, okay, and you're closer, Mr. Deers. I'm gonna go with you.
I'm good with that. And these are our cross questions, as well as any questions on commission questions, if that's okay. Because I think this is the only time he's up here.
Yeah.
Thank you. Okay, just to sort out page numbering up front. What I have in front of me is a copy of your filed testimony with an MGL2 attached to it. Do you have that?
Yes.
And at the top of your MGL2, you have pages 1 through 97. Is that correct? I just want to make sure we're all using, or the two of us are using the same page numbering convention.
Oh, for the report. Okay. Okay.
Looking at
Yeah.
the
Yeah.
exhibit, your normal testimony. Yes.
Okay. Yes. Okay.
And where possible, I may also reference the page number down at the bottom, which was the way it was filed, the application, just to help others. Okay. So I understand, as you stated in your report, that the purpose of your appraisal is to assist in determining the fair value of the Carteret County water system in accord with applicable laws and statutes and the uniform standards for professional appraisal practices. Is that correct?
Yes.
Okay. And the applicable law and statutes would, in this case, be General Statute 62-133.1A, the fair value statute. Is that right?
That's correct.
Okay. And I believe you defined fair value as the price at which a willing seller and a willing buyer with both having knowledge of the relevant facts and not being under any compulsion would agree to a price for the sale of the system. Is that fair?
That's fair.
Okay. Is that essentially a fair market value?
Essentially.
Okay. So you, if I'm correct, and please let me know if I'm not, is it sort of a starting point for at least your cost approach, and also as help for your income approach, you use the Draper-Arden report on the original cost value of the Carteret system?
We use the Draper-Arden report for the condition assessment, and we also for the inventory, and we utilize the replacement cost as an allocation methodology to allocate the county's plant accounting records to asset accounts. Their records weren't separated by asset account, and so in order to get appropriate depreciation rates, we wanted to get it into separate asset accounts, and so we used Draper-Arden's replacement cost calculations as that allocator.
And in doing that, did you look at the cost of assets that were contributed as well as those paid for by the county?
The contributed assets are included in that number, yes.
And the reason for doing that is a buyer would be obtaining the value of those assets, whether they are contributed or funded some other way.
Well, we did it because the way that the statute is written requires it to be done.
Okay.
That distinction about including contributed assets or not including contributed assets is handled differently in different jurisdictions, and so it's really a policy question. And I had no, I had no leeway there.
Right. So have you read Mr. Junus's testimony?
Yes, I have.
And you're aware that he recommends a value that deducts the value of the contributed assets?
I'm aware of that.
Okay. That's not how a professional appraisal would do it, is it? Under the USPAP?
Well, I mean, no, but I don't think Mr. Junus was doing an appraisal, so.
Right. And the purpose of the appraisal is to recommend a fair value?
That's correct.
Okay. So on page 13, you begin talking about the cost approach, and you've got an OCLD, original cost less depreciation, and the other one is the replacement cost less depreciation. I think you described one as the lower bound and the other is the upper bound. Is that right?
That's right.
Okay. So for the land value of the Carteret County system, I believe you have a number of $98,126. Is that correct? Table 1 of MGL, or that's on your, I think that's at your page 23 of your MGL 2.
$98,126, is that what you said?
Yes.
That's correct.
And that's in the column that you have labeled as original cost, right?
It is.
Okay, so you're using the original cost of the land and not the present value of the land. Is that correct?
Or original cost? Yes.
Yes. Okay. in terms of coming up with an appraisal value, would it be more appropriate to use the current value of the land?
I, I think if you're appraising land, then you use the current value of the land. That's not what this was an analysis as a part of an appraisal. It's not the complete appraisal.
But the land for the county's water system is part of what is being purchased. Okay. I think Mr. Hughes stole some of my questions. You, but I'm going to ask a little bit along these lines. Looking again at your table 1, which is in your MGL2, it's on page 23. It looks to me like the bottom line 33, you've got for the Carteret County water system a replacement cost of 25 some million dollars and a original cost of roughly 12.3 million. Is that correct?
Yes, roughly.
And then you take in column R, you take accumulated depreciation of 6.5 million, and you subtract that from the original cost to get your $5,749,000 figure. Is that correct?
That's correct.
Okay. Also included in your MGL2 at page 67, this is the Draper-Aden report.
I'm there.
Okay. And this is frankly just because I'm not sure how all this is done, but this is Draper-Aden describing what they did, the theory of asset valuation. And I see a line that says they're trying to estimate the present worth of an asset as the historical cost minus accumulated depreciation plus current depreciation. Is that correct?
I see that.
And is that how they arrived at the 12.3 million original cost that you show on your table 1?
Did you say original cost?
That's what your label says
Yeah.
on table 1.
I-
And it says
That would not be how they arrive at original cost. That would be how they would arrive at their original cost less depreciation, I believe.
Okay. So that's their original cost less depreciation. And do you understand they updated that in March of 22 to, I think, roughly 12.7 million?
That's my understanding.
Okay. So if let's just work with what's in your table, the 12.3 million in round numbers. If that is Draper-Aden's original cost minus depreciation, accumulated depreciation, why in column R do you do a subtraction for accumulated depreciation again?
I said this, so if you go back to 67, that calculation they do there is how they get to so we're not understanding each other. I did not use their original cost less depreciation. I only used their replacement cost less depreciation to allocate the original cost of the assets on the county's books to asset classes.
So how do you get to that 5.7 million? Is it not subtracting depreciation from the 12.3? I haven't even done that math, but if you can walk
Yes.
me through that.
Let me get back. Okay. So we have a replacement cost estimate in column, it's not labeled, but it says engineer replacement cost estimate,
Mhm.
25 million. The original cost says in footnote 4, original costs from Carteret County audit fiscal year 21. Costs are allocated based off of the Draper Aiden Associates engineering report dated March of 2022. The 12.3 million comes from original costs from the county, not their net, but their original. That number is allocated to these asset classes based on the replacement cost estimate in the Draper Arden report.
Okay, so the 12.3 million from the county audit, is that net of accumulated
Not-
depreciation?
That is not,
Okay,
that's gross.
thank you. Well, that helps. You have calculated a replacement cost, and what is your number on that? Replacement cost less depreciation.
There we go. Replacement cost, new less depreciation, you can see it on table 2, which is on page 24, on row 33 of $13,032,241.
Could you,
Sure. Yep. 13,032,000. Just making sure. Yep. $32,241. Okay. Can you, are you not hearing me well? Okay. Chairs don't scoot.
So what weight did you give this replacement cost less depreciation in your reconciliation?
So we don't reconcile approaches in our opinion of value because in our opinion, as a firm, it is too subjective to weight approaches. We utilize, as you can see, we utilize the cost approach in our income approach. We utilize market-based approaches to arrive at a cost of capital and a return on rate base in our income approach as well. And so the income approach includes aspects of both the cost approach and the market approach. So it's a much more holistic view of value that captures all of the economic and functional obsolescence associated with the assets. And so in this case, not in all cases, but in this case, it was our opinion that the income approach was the most reliable indicator of value.
And the income approach looks at a stream of payments over time discounted to present value. Is that right?
It is.
And the stream of payments is essentially based on what you believe the revenues are to cover operating expenses plus revenues that are the rate of return times the rate base. Is
That's
that right?
correct. Yes.
Okay. And for that rate base figure in there, what did you use?
We used the 5 million. Bear with me 1 second. I want to get the exact right number. It's roughly $6 million, but I want to get the exact right number. $5,904,123.
Okay, you did not use a rate base number derived from replacement value, did you?
We did not.
Okay. This is more derived from the original cost value, is that right?
That's correct.
Okay. So you used the lower bound, but not the upper bound for your income approach.
Yes, because I don't know of a utility that's allowed to earn a return on its replacement cost.
Well, that's an interesting question here. But the terms of a new statute. But did you consider, since you had an upper bound and lower bound, doing the calculation based on the average of the two?
I also don't know any utility that's allowed to earn a return on an average of the two.
Is it
I've never heard of it.
typical for a utility return to be granted on a rate base that looks at original cost less depreciation?
That is a component typically of determining what rate base is, yes.
And fair market value may well be higher than that Is that correct?
Fair market value typically is some small multiple of that rate base, yes.
So you're looking in your income approach at using a rate base amount based on original cost less depreciation with whatever appropriate adjustments
Yes.
Under a traditional regulatory framework to produce a rate base amount under a fair value.
That's correct.
Okay.
If-
And again, you don't see a circularity in that.
There's, to the extent that there's circularity in rate making, there is some circularity in the income approach, but it's an accepted methodology.
Couple minutes here.
Excuse me, I think we're going to take a break for the court reporter, but I do apologize. You did request cross. I jumped the gun with my questions. So just to make sure everyone is straight, we're going to take a break until 11:15, come back, finish your cross. We will allow public staff to do any redirect on the cross. I don't think anyone else has any cross. You do have cross. Okay.
Just a few.
Okay, so we'll come back in 11:15. We'll finish the cross. You'll do your redirect. That very well might have led to some more commissioners' questions. So again, I apologize for going a little out of order, but that's the way we'll proceed.
Thank you.
Thank you.
Okay, Mr. Drews, I believe we are with you with your last few cross questions.
Thank you. Your discount factor used in your income approach, you were looking at an overall weighted average cost of capital. And as part of that overall weighted average cost of capital, you assumed a return on equity of 12%?
We estimated
Okay.
cost of equity of about approximately 12% using the capital asset pricing model.
If and I believe you've reflected this in your testimony, if the actual cost of capital for Carolina Water was lower than the number you used in doing your income approach, then basically that's going to reduce the discount factor and increase the number for the produced by the income approach. Is that correct?
The lower the discount rate, the higher the value.
Thanks. You did look at the sales, the market sales comparison approach as well?
I considered it, yes.
Yeah.
And did the analysis.
I think that's in your table 4.2, but as I read that, it says you looked at a median sales price per original cost less depreciation and a median sales price per customer. Is that
That's
correct?
correct.
Okay.
Yes.
Do you know, have you done an analysis to determine if the Carteret County system is comparable to the median in those sales?
I'm not sure I understand what you're asking. Can you clarify that?
Well, your sales approach has numbers for medians.
Oh, we applied those to Carteret County to arrive at an estimated value using that market approach.
Right.
And you can see that in table 4.2, the indicator of value applies their metric, the county's metric to those.
And my question really is, do you know if the Carteret system is comparable to a median?
As I testified earlier, it's very difficult to know whether Carteret County is comparable to any of those utilities in that transaction. The transactions are typically not, well publicized. They don't publish in the paper what their strategy was or why they made the purchase offer that they made, but it's very difficult. So no, I don't know whether I would not know how to characterize their comparability.
Okay.
Beyond the numbers.
Okay, thank you. Do you know if the UPAS, the USPAP, professional appraisal practices, requires a reconciliation among the three approaches if you consider all three approaches?
It requires you to consider all three approaches. It requires you to use your judgment as to the reconciliation and which approach is the most likely indicator of value.
And in your judgment, only the income approach was appropriate here?
I don't think that's a fair characterization to say only the income approach was appropriate. I think that the income approach was the most likely and appropriate indicator of value. They're all appropriate.
The other appropriate approaches didn't move your number off of the income approach, did they?
No, because for several reasons that we've already talked about, but also because the numbers didn't differ appreciably from the income approach.
Almost done here. If you will, turn back to page 23 of MGL2, which is your table 1.
Okay.
And for the lines 14 through, I guess, 22, you've got distribution system. And in column D, you show an in-service date or install date of 1988 for all the distribution system. Is that correct?
That's correct.
Are you aware that the vast majority, if not all of that distribution system was installed after 1988?
We didn't have that data. So if I'd had that data, I would have put different dates.
And if the dates were much more recent, there would be less of an accumulated depreciation deduction from the value of those assets. Is that right?
Possibly, yes.
Okay. Thanks. That's all my questions.
Okay. Redirect. I'm
I believe the county.
sorry, the
just
county,
went
yeah,
across.
I apologize again. Mr. Wheatley, it's with you across.
Thank you, sir. Just a few questions. Mr. Lane, what is the total figure that you contend the fair market value of this property is? As of what date?
As of January 1st, 2022, our fair market value opinion is, I want to get the exact number for you. Well, sorry. $7,332,000.
Which basically is a little more than half of the cost approach less depreciation. You had 13 million on that, somewhere like that.
Essentially, yes.
Now, in your process of doing
I'm sorry,
appraisal,
I'm sorry, can you, which, I may have
the
misheard.
cost approach paper that was handed out today
Excuse me, could both of you speak to your mic?
Sorry.
was $13,032,241, figure that you just read a few minutes ago.
Mhm. That is, I believe, the original cost. That's the replacement cost, new less depreciation.
Yes, sir.
Yes.
Now, when you do your appraisal work, you go back and look at what has happened from when you're doing your appraisal backward to see what has happened in the market. Right?
Yes.
And yet, Carolina Water Service and Aqua Service, they're basically working in the future. Right? I mean, they're making plans for the future. You can tell them what it was in the past, but they know what it's worth in the future, don't they?
Well, the income approach inherently looks at future revenues. And capital expenditures and expenses. So it's looking in the future as well. I'm not sure I'm understanding your question.
And yet, you know, there are two reputable companies who made offers to purchase our company in excess of your appraised value. Two companies, North Carolina. Right?
Yes, sir.
Why? Why would they do that?
Why would they make offers in excess of my opinion of fair market value?
Yes, sir.
There's any number of strategic reasons they might do that. I don't know their internal reasoning.
There's some value that they know about those water companies that you don't, isn't it?
There may be, I don't know the answer to that, sir. I don't know what they're thinking.
And
I can't possibly insert my opinion into their calculations.
So if this deal goes through, then we've got market data information now showing what a system of this size is worth, don't we?
You have market data that shows what a particular investor was willing to pay for that particular system.
And the fact there were 5 upset bids where it was competitive, and how of all that transparency, that should be a benefit to an appraiser looking to value a small system, wouldn't it?
Again, I'm not understanding your question.
Let me ask you another question. What do you contend the percent of inflation has been on this system? And if so, would that change the evaluation date effective from your date?
over what period? In the last year?
Yeah.
10% or more has been what the inflation is. And it changes the number. I can't, without running the numbers and doing the calculations, tell you how much.
Well, you know, we've heard the figure 5 plus the depreciation, bringing it to 3. We've heard a number of 10, depreciation of 2, bringing the number to 8%. And so you're at 10. Do you also agree on the depreciation at 2?
Roughly.
So you're contending that your report should be increased by 8%, to be fair.
Sir, I don't think it's appropriate to do that kind of calculation on the stand without doing the due diligence and running the math. Does it change the value? Yes, it changes the value. I cannot tell you how much it changes the value.
Well, you do these appraisal work all day long, every day, don't you?
Not all day, every day, but
Pretty much.
quite a bit.
And you're aware of the depreciation issues, and you're also aware of the inflation that's happening with regard to components used in water companies. Are you not?
I am.
And I think you said that it was generally 10% increase based upon the last year.
Yes.
And the fact that you don't have the time to do those absolute calculations, the best value we got today, you sit on that stand, would be an 8% increase, would it not?
I can't put a number on that, sir. If you would like for me to run the calculations again, I could do that. But I don't think it's appropriate for me to sit here and pretend that I can run those calculations in that spreadsheet in my head. That's not appropriate.
I have no further questions, sir.
Okay, thank you. Mr. Creech?
Mr. Lane, we talked to, I think, a little bit at the outset relating to the statute. And I think Mr. Drews had a question on that. You're not a lawyer, are you?
I am not.
And but you've taken a look at the statute there, have you not?
I have.
And how would, on the top of the statute there, again, we're looking at the fair value statute. Does the word public interest, is that anywhere in the appraisal aspect of there?
I don't believe so, no.
I also have, I need to approach opposing counsel first momentarily. I have one exhibit I'd like to introduce if I could. And this is public staff data request number 8. It had originally, it does not have the attachment, which was a confidential attachment. This is entitled Corix Acquisitions, and this is just the substance of the Word document, but not the attachment of that document. So I've been apprised by counsel for the company that this is no longer a confidential document, at least this Word document, and I'll approach counsel and confirm that.
Please do.
Zeke, can you get me one too? Zeke, can I have one too?
Yes, sir.
We don't even get one.
Through there.
I was worried about it, Charles.
All right, Mr. Junis, if you'll give a copy to Mr. Lane, then we'll go ahead and start. Mr. Lane, if you will turn to the second, well, this is, again, public staff data request 8. And it's a 2-page Word document, front but back, that you have there. Can you turn to the back page there and read, just, you can read the, starting in the second sentence there, or excuse me, the third sentence, you can read the response, please.
starting with that is?
Yeah.
That is, none were subject to the North Carolina statute at
No.
hand in the current proceeding, nor has any other CWSNC affiliate purchase been subject to the North Carolina Fair Value Statute. In addition, purchases of existing systems inherently include a variety of considerations such as seller type, asset age and condition, compliance issues, capital investment required, contiguity with buyer service territories, et cetera.
Thank you. Thank you. And Chair Hughes, my apologies. We'd like to mark this as public staff lane redirect exhibit number 1.
So it be marked and note for the record that, because it's labeled as confidential still, that the parties consulted and it's no longer confidential.
Yes, sir. Thank you. And with respect to that language, how does that comport with your discussion earlier on market comparables?
I agree with it, and these are all of the, the issues that I have with using the market approach as a primary indicator of value.
Okay. Thank you, Mr. Lane. No more questions.
Okay, so we will go back to commissioners' questions if there's any further ones. Okay. All right, go ahead. Commissioner Duffy, please.
So, good morning.
morning.
Did you hear the testimony of Mr. Walker today?
I did.
And did you hear the commission questions relating to the income approach and his testimony that he used the rates, that when the county increased the rates by 95% for that 2 to 3 months, and then he didn't revise
I heard that, yes.
the appraisal? Did you use those rates as well?
No, ma'am, we used a hypothetical third-party purchaser methodology. And so we used a return on rate base to develop the revenue associated with our income approach. So we didn't use the actual rates of the county because that's not how that third-party purchaser would, do rate making. They would do rate making in front of the commission, determining rate base and a return on rate base.
Thank you. And I think you testified to that already, but hearing it again, it sunk in this time. Thank you.
Okay, so just questions on commissioner questions, and both feel free on my original questions or Commissioner Duffy's questions.
None from the company. Thank you.
None from the county, sir.
No questions.
Okay. With that, it looks like your service here is complete. Thank you very much for your testimony, Mr. Walker, and for your time. And you're not on rebuttal, so you are excused.
Chair Hughes, if I could, I would like to move the admission of Mr. Lane's exhibits, 2 exhibits.
Oh, yes, that should have been done.
Right, his pre-filed testimony consisting of 4 pages and 2 exhibits marked MGL 1 and 2, as supplemented today.
Yeah, so those so moved, so marked.
Public staff would like to call Charles Junis.
So Okay. Just let me know when you're set. All right. You know the drill. Good morning, Mr. Junis. Do you swear that the testimony you are about to give shall be the truth, the whole truth, and nothing but the truth? So help you God.
I do.
Proceed.
Mr. Junis, will you please state your name, position, and business address for the record?
Yes, my name is Charles Junis. I am the Director of the Water, Sewer, and Telephone Division of the Public Staff. My business address is 4030 North Salisbury Street, Dobbs Building in Raleigh, North Carolina.
And Mr. Junis, on October 14th, 2022, did you prepare and cause to be filed in this docket testimony consisting of 37 pages, an Appendix A, and 7 exhibits marked Public Staff Junis Exhibits 1 to 7?
Yes, sir.
And do you have any changes or corrections to your testimony?
No, sir.
If I were to ask you those same questions today, would your answers be the same as in your pre-filed testimony?
Yes, sir.
Chair Hughes, I move that Mr. Junis's direct testimony be copied into the record as if given orally from the stand, and that Mr. Junis's appendix and exhibits 1 to 7 be identified as marked when filed.
So granted.
Mr. Junis available for cross-examination and questions from the commission.
Okay, and I believe we have two parties signed up for cross. So
Good morning.
Morning, David.
So I'm going to kind of walk through your testimony in sequence here, just as that's how I,
In order
If
makes
this
it a lot
sounds-
easier for references, so I think it's a good idea.
yeah, page 4.
I'm there.
You got a table 2, it shows county present rates, and by that you mean the average bill, and then a Carolina Water System specific rate. Is that correct?
Yes, sir.
And just for clarification, Carolina Water has not proposed system-specific rates in this case, is that
That's
right?
correct.
Okay. So what you show in that table 2 is not what's proposed.
That is correct.
Okay. Next, going to flip up to about pages 9 and 12. You referenced the Draper-Aden report. And this is just kind of ministerial, but you note it was dated December 2021, and you're aware that it was updated to March of 2022 with the new value of roughly $12.7 million. Is that correct?
Yes, sir.
Okay. Page 18 of your testimony.
Well, you skipped a lot here.
Well, lunch is approaching.
I'm hungry.
Okay. And around the middle of that page, I think it's line 11, you indicate that, I believe you got this from some Carteret County records. You said there's an audited profit total over the life of this system of approximately $3.5 million.
That's correct. And that's a reference to Junis Exhibit 3.
Okay. Does that number of $3.5 million include monies received from tax revenues in addition to the rates charged to the users?
Will you repeat that question?
Does that $3.5 million include revenues from taxes used to support the system in addition to the user rates?
Yes, sir.
Okay. And does it also include revenues from developer contributions, if you know?
Yes, sir.
On page 19, towards the bottom, you indicate that Carteret County does have sufficient access to capital. And so a couple of quick questions on that. Do you have expertise in municipal finance?
No.
And are you aware whether general fund for the county can be used for utility cost?
So they have made appropriations of general funds to the water fund in the past. And then they also have a water fund specific reserve that I know has certain restrictions.
And what's the source of money in that reserve, if you know?
You're talking about the water fund balance?
Well, I'm talking about the reserve you just mentioned. Yeah.
Yes. So it's my understanding that there are a number of sources, one of which includes income from the water fund.
And was there a special taxing district set up to help provide some of those monies?
There was.
Okay. Has the Carteret County water system been designated as distressed?
Yes.
And is it your opinion that Carteret County should correct that distressed classification without selling the system to Carolina Water?
I think it can be corrected. Now, if it was up to me, I would suggest that the Carteret County utilize that designation to its advantage and to the advantage of its residents and customers to gain access to certain funds. And that's detailed in my testimony, starting on page 20.
Wouldn't it be preferable for the county from a finance point of view to not be distressed rather than to take advantage of being distressed?
So that seems to have an insidious connotation, and taking advantage can also be a good thing. This is a benefit. Low cost or potentially no free working capital is a benefit to customers. It offsets costs. And it's my understanding that they even applied for funds in the fall. So that is something that they're trying to use and have clearly used in the past.
But really, in the long term, isn't it appropriate for the county to try to get out of the distressed classification?
There are certain factors that are up to its control that would be beneficial to correct. There are other factors that are not necessarily in its control that will naturally still lead to a point designation on the scorecard. For example, density of customers. That requirement is 100 people per mile of main. Well, they're currently at 51 people per mile of main. That density issue is not completely up to their control. That depends on further development. Clearly, the county has suggested that the installation of the system was an economic development project. And they've tried to subsidize connections, and those connections have not come through. And that's what Mr. Hartman spoke to. It's in my exhibits. There's 237 people that can connect to the system at basically no cost, and they are choosing not to for whatever reason. Likely they have a well that they feel sufficiently provides service to them.
And I don't think we have any argument on that. That really, again, where I'm going with this is, isn't it up to the prerogative of county government to decide how to address distressed system status and the best approach for them to take?
It is absolutely up to their prerogative. However, as an expert before this commission in rate making and evaluating the fair value transaction and really where rates are, I think it's appropriate that they utilize that access to those low cost or no cost funds.
I believe you were here when there was discussion by Mr. Danton about his testimony that under the traditional original cost approach, there was an obstacle to private utilities buying municipal systems. Do you recall that?
Yes, I'm very familiar
Yeah.
with Mr. Denton's pre-file testimony and his testimony yesterday.
Right. He struck the word insurmountable, but left the word obstacle.
That's
Yes.
correct.
Yeah. Now, if the county utilizes an upset bid process as allowed by statute and sells this property for $9.5 million, but the utility that's buying it is looking at only getting rate base of $2.5 million, do you think that might be an obstacle to this kind of transaction occurring?
So that really becomes a business decision of the utility. I recognize that it is unlikely for a utility to want to essentially eat a $7 million net on its purchase price. However, we are tasked with, and this commission is tasked with, is that a reasonable fair value and is it in the public interest? And that is the question that I'm responding to. I'm not trying to do an appraisal. And I think it should be noted repeatedly, the witnesses before me have mentioned the word market. The statute uses the word market one time, and that is the market approach to appraisals. It does not say the fair value, the fair market value statute. It is the fair value statute. So I think that's an important designation.
I'll go with that. So the statute it requires professional appraisals to give their opinion, right?
That is one component, yes.
Right. And if their standards for the industry require looking at fair market value, that kind of tells you where the statute's going with this, doesn't it?
I think the language of the statute is far more important. That's what's controlling here.
And speaking of the language of the statute, we look in subsection E and there are the words reasonable fair value. And if the commission finds the appraiser average is not reasonable, then they can adjust for public interest, right?
Yes, they can adjust the fair value as it deems appropriate and in the public interest.
Okay. And I'm looking at the statute, right?
Yeah, I just
Right.
read it verbatim.
Okay. And grammar question, is reasonable in that phrase an adjective that modifies fair value?
I think that's I imagine Mr. Junis can get, I have an objection to the statutory interpretation. I mean, getting into adjectives and of the statute here, but if there's a way that Mr. Junis can answer the question without getting into statutory interpretation, we're fine with that.
Mr. Junis has opined a lot on the meaning of this statute, so I think it's a fair line of cross.
I'll pine away.
Would you mind repeating the question?
Yes. Is the word reasonable modifying the words fair value in that statute?
Yes, so the specific clause we're talking about states, quote, if the commission finds that the average of the appraisals will not result in a reasonable fair value, comma, the commission may adjust the fair value as it deems appropriate and in the public interest.
And
Close.
so at the end of the day, whatever public interest adjustments made under this statute, the goal is still to arrive at fair value. Is that right?
I mean, the ultimate determination is what is rate base. So that's the question that is posed to the commission, and that's the question that I attempt to answer with my testimony.
Okay, let's look at page 22 down at the bottom. And the question is it your understanding the purpose of the fair value statute was intended to facilitate the sale and consolidation of troubled systems? And you say yes. The word troubled is not in the statute, is it?
That's correct.
In your opinion, does a system have to be troubled for the fair value statute to come into play?
It does not have to be troubled. However, the way that the justification here, and when you look at Exhibit 6, it implied that there was going to be a need here. So there was a need for capital improvement. There was a lack of compliance. Those things are not here to justify that. So distressed or troubled, I think it depends on the circumstances and what is the benefits to customers. Carteret County has shown that they can make capital investment, not only to construct this sprawling system, but to maintain that system and make replacements. I mean, they built 2 elevated storage tanks in 2012, have a water treatment plant that provides quality service, and they haven't had compliance issues.
So you referred to Junus Exhibit 6 as a basis for your statutory interpretation. And as I read their testimony, I haven't flipped back to that Exhibit 6. It looks like you're quoting from a statement made by Aqua North Carolina, and that's your guide for the statutory intent?
So as was discussed, I think with Mr. Dutton, that there was a effort by both Aqua and Carolina Water to lobby for this statute. And that document, it was supplied this summary in support of the statute and a draft statute, which was very similar to the version that was initially introduced in the House.
Thank you. So if the Carteret system cost were added to the consolidated system, to the cost of service that's used to derive uniform rates, there would be both a rate-based component and an O&M or operations and maintenance component. Is that a fair statement?
That's correct.
Okay. You are aware that Carolina Water has proposed to keep the current county rates for this system in effect for 4 years if they acquire it?
That's correct. That's detailed starting on page 25 and going on to page 26. I do think it's important, you know, that bid of 9.5, if you go back in my testimony to it's page 14. That bid occurred on April 27th of 2021. And as we talked about, as the parties negotiated, Carolina Water had offered to hold rates steady for a period of time. It's interesting that the county then, in the time in between acceptance of that bid and then ultimately the approval of the APA, it is detailed in Board of Commissioner minutes that they realized the rates were so low that they were going to incur losses. And so then they said, on second thought, we can't agree to that holdout. Then the county raises rates 95%. All of a sudden there is some feedback that, okay, that's too high. So they bump it down 25%. And then the county goes ahead and accepts the $9.5 million bid. And then they approve the contract with the hold steady on the rates again. So Mr. Denton testified that there was no influence on the rate increase for the county customers. But I would suggest that that string of events does show there was influence. Even if it wasn't directly said by Carolina Water, you need to increase your rates for us to do the hold on the rates. That's essentially what happened. So I think that's an important note.
Yeah, and I appreciate that something y'all wanted to get in the record, even though it didn't really relate to where my question's coming from. And I hope the public staff will ask the county witness about that as well. That's an invitation. So getting back to the rate-based component of including this system in uniform rates, and the 4-year freeze on the rates, does that mean that there would be an additional 4 years of accumulated depreciation before this cost went into the rates being charged for Carolina Water customers?
Can you repeat the question? I want to make sure that I understand.
Right. So let's say there's a rate-based component to the purchase by Carolina Water today or this year. In terms of what is put into rate base and charged to uniform customers, 4 years down the road, there will be additional depreciation that would reduce that rate base value by 4 years of accumulated depreciation, wouldn't there?
Yes.
Thank you. Did you take that additional 4 years of accumulated depreciation into account when you came up with your numbers for the rate impact on customers?
So again, we're looking at what the rate impact would be today. There is a variation there as you accumulate depreciation. Obviously, the return on the unaccumulated or on the undepreciated balance will decrease.
Okay, thanks. Okay, let's turn to the O&M component of the Carteret system costs going into Carolina Water's uniform revenue requirement. So as I understand, looking at what you have done with Ms. Fiesel's affidavit information, the public staff looked at a O&M component cost of $439 per customer. Is that correct?
That's correct.
Times, I think it's 1,254 customers on this system, the Carteret system.
So you don't need to multiply because we just take it from a per customer to a monthly rate. So you don't need to multiply by the number of customers unless you're trying to set an annual revenue requirement.
Okay, thank you. The $439 per customer is based on the O&M cost that the company had in sub 384 rate case?
That's correct. Now, Ms. Fiesel would be the best witness, and I believe she was excused to speak to how that number was calculated. But it is my understanding that she removed certain expenses such as depreciation.
Okay. She did not remove expense categories for rent, corporate overhead, rate case expense, general office expense, capitalized labor, did she?
You say that definitively. She calculated that number, and again, she was excused from this proceeding.
If she did not include those, then that would have been a mistake and they should have been deducted. Would you agree with that?
Can you run back through the list? I wasn't.
Okay, let's look at rent for the Charlotte office. That's an O&M expense. It's not going to go up when you add the 1,254 customers from Carteret County, is it?
It's an expense that is allocated across customers.
Is that a yes or a no?
Will you repeat the question?
Yes, there's the Charlotte office expense or Carolina Water. That's not going to increase as a function of adding these 1,254 customers in Carteret County, is it?
No.
Okay, thank you. Same for rate case expense. Is that going to go up as a function of adding these 1,254 customers?
Past rate case expense would not, but who knows going forward.
General office expense, would that go up?
The total would not go up, no.
Okay.
Well,
What about purchase water? Let me okay,
preface
go ahead.
on that because depending on staffing level, it could change. So, I mean, some of these expenses get pretty complicated in terms of how they're incurred and where the expense stems from.
You don't expect Carolina Water to add an FTE in its general office staff as a result of adding the Carteret system, do you?
So it was my understanding that they were possibly adding 2 FTEs to operate the system.
That would have been field staff down in Carteret County,
That's
is that
correct.
right? That's not general office, is it?
No.
Okay, thank you. So, I'm not going to go through the whole list, but I did want to ask about purchase water. Is that part of the O&M expense in sub 384? If you know.
So yes, it would be, but I don't know, again, what Ms. Fiesel's adjustments to this O&M expense was, and those questions would be best suited for her.
There is no purchase water expense for Carteret County, though, is there?
Well, there is the opportunity to purchase water from, there's shared services here with the interconnects between Beaufort and Craven County.
That would only be on an emergency backup basis, not a routine bulk service, would it?
Depends on how you operate the system. You might purchase water to do flushing. Depends on the circumstances.
You don't know that that's happened, do you?
I vaguely recall on our site visit discussion about a potential purchase, but I don't know for sure.
Even if they did purchase some water for flushing, that amount of purchased water expense would not be proportional to the amount used in the sub 384 case, would it? Per customer.
No.
So for depreciation expense, the public staff used a 4% rate,
That's correct.
and that's an O&M cost too, right? Isn't it? I mean, well, actually, it's an expense. It goes into the revenue requirement, I should say. Is that correct?
That's correct.
Yeah, and have you heard most recently Mr. Lane and before him other witnesses indicate that the depreciation rate for the Carteret system would be more appropriately about 2%?
So that would be if you were using the original in-service date, you would continue to use a life of potentially 50 years. And that's predominantly what Draper Aden used in their study. However, you wouldn't restart depreciation of the assets on that long of a life going forward. I think that would be irresponsible because those assets are depreciated. They do have use, and I would not expect a 50-year life for the entirety of the assets going forward. It is also very inconsistent with how the assets have been already depreciated by the county.
Yeah, and I'm really not asking about the useful life. I'm asking about the depreciation rate. Are you proposing that the depreciation rate be changed from 2% to 4%?
So again, if you are starting over with an undepreciated $9.5 million asset and depreciating going forward, and that's representative of the system, I do not think that that is accurate or appropriate.
And the 9.5 million would be related not to the cost of the assets, but to the fair value transaction, wouldn't it?
Which the company is applying to put into rate base. And I've seen no representation that they were going to accumulate depreciation consistent with the county on that $9.5 million. Otherwise, we're cutting that in half, essentially, for rate making purposes.
Page 30, moving along here. That's where you list your public interest factors, and I counted 4 of them there in the bottom half of the page. Is that correct?
So I believe you're referring to rate base per customer,
Yep.
rate impact of the proposed acquisition, potential benefits, and then the acquisition adjustment criteria as a consideration.
So, to your knowledge, has the commission ever used to establish rate base in a transfer or a CPCN case a comparison to the amount of rate base per customer of other systems?
So I think that is a factor that the public staff looks at for reasonableness of a purchase price. So, we're obviously looking typically at the lesser of original cost less depreciation and CIAC and the purchase price. But when looking at acquisition adjustments and the appropriateness, something that we could look at it is rate base per customer.
Right, but when the commission looks at the lower of original cost or purchase price, that is done regardless of what the rate base per customer of other systems is, isn't it?
Correct, because you're taking the lesser of the two. In this concept, the company wants to take essentially the higher of those two.
And they're doing that under the statute as they interpret it, right?
Correct.
Okay. And this is a new statute, so it's a little bit different from how rate base has been established in the past. Is that right?
It is different, and I think it's important to recognize that we are at an important case. I think Ms. Sanford said it, Mr. Dent said it, that, this is a case of first impression. And to Mr. Grantmire's point on cross of Mr. Dent, there are cases that get referenced for decades to come. This case might be that in the water and sewer industry of how rate base is decided on transfers. And it can have lasting cost impacts to customers.
You could become a historical figure here. So let's look at your fourth public interest thing, what you call the Commission's tried and effective acquisition adjustment criteria. And I think you talk about that a lot on pages 32 to 34. And again, just to kind of establish a baseline here, when a utility buys another system for a purchase price greater than the original cost, typically the Commission's policy and the public staff position is that you do not allow the difference between original cost and the purchase price to go into rate base. Is that correct?
Right. Some might refer to that as an acquisition premium, but essentially, yes,
Yeah.
if the purchase price exceeds the original cost, that is not allowed typically.
But there are exceptions where there is a good reason to incentivize a transaction because it's a troubled system and you want to encourage a buyer to pick it up and basically, for lack of better words, fix it.
Yes, that's one consideration. We're still mindful of rate impact to both the acquired customers and the existing customers of that utility.
So if this long-standing acquisition adjustment policy of the commission and the public staff's recommendations under that was sufficient to incentivize private utilities to buy municipal systems, there wouldn't be a need for the fair value statute, would there?
So to my knowledge, and that's spanning almost 10 years, I haven't seen a company bring such a transfer to this commission to test out that procedure. Instead, the route has been to lobby for fair value and now attempt to elect fair value to pay, in my opinion, a premium cost that harms both the acquired customers and the existing customers.
And would you agree that this fair value statute is intended by the legislature to incentivize private utilities to purchase municipal systems?
So I would argue that there has been no substantiation that this is a problem that needed solved. We've asked that question of the company. We did not get clear answers or any answer to the question. So how do you have a problem and represent that the system doesn't work if you never bring that to the commission to test? If there were failed purchases of municipal systems, then I think we would be looking at potentially new solutions with these potential benefits. This case does not have that string of benefits that would justify premium being paid and rolled into rate base.
And if there was a problem that needed to be solved, that could be addressed under the exception to the acquisition adjustment policy, as it's been done in the past. Would you agree with that?
So you're saying the problem with the lesser of original cost and the purchase price was then addressed with the potential acquisition criteria? It's acquisition adjustment criteria?
Actually, what I'm saying in terms of how I understood the question problem, if there are troubled systems or systems that need a new owner in order to operate better, then the acquisition premium, as you call it, could be granted under the existing commission policy to incentivize those transactions. Is that right?
With an acquisition adjustment, and again, Carteret County is not a troubled system.
Right. And the legislature decided that an incentive beyond that was needed when they passed the statute, or otherwise there would have been no point in having the statute. Is that a fair statement?
Will you repeat the question? I want to make sure I caught the front.
Right.
front end part.
Is there any need for the fair value statute if the only purpose is to incentivize purchases of troubled systems, given that there's already a commission policy to address that?
But we're not limiting it only to troubled systems. That's a frame of reference and a consideration in our evaluation. We didn't say the only way to use fair value is a troubled system.
Okay. I think we beat that horse. Page 36. At the bottom, you indicate Carteret County's unaudited financial records indicate total assets less depreciation amount of $5.4 million. You're there with me?
Yes, sir.
Yeah, and you use that as the starting point for the value that then you subtracted CIAC to get 2.4 million.
That's correct.
Okay. Regarding that 5.4 million in the county's financial records for the asset value, do you know if those financial records show a book value that assigns zero value to assets that are fully depreciated on the books, but still being used?
Let me turn to, I believe it's my exhibit 3. All right, and do you mind on that? So I'm looking at like top of the page says there's schedule of revenues and expenditure, budget and actual, and then on the next page it's note 5, capital assets.
Flipping through here, I don't have page numbers.
It's approximately,
I see note 5. I got you.
yeah, like the 10th page maybe,
Mhm.
ballpark. Okay, and your question was pertaining to this.
There may well be capital assets not shown on the books because they're fully depreciated, but they're still out there being used. Is that your understanding?
Yes, however, when you look at Exhibit 4, which looks at sort of the funding and capital investment costs, a majority of this system was installed after 2000. We even had the county go ahead and mark on a map the different phases that sort of tie to these investments. A majority of the system is not older than 33 years and would not significantly change in terms of assets still providing service.
Yes. Were you here when I asked Mr. Lane a question about that? And he had the depreciation start date as 1988, and that was a bit earlier than would realistically apply to those assets, wasn't it?
So it's my understanding of Mr. Lane's exhibit where you pointed out the 1988, that actually doesn't change his calculation of the net plant because he used the county's records. So he wasn't calculating the depreciation of those assets to get to that $5 million number. He took the county's number. So just an editorial note there.
Right. We may have different views, and I'm not going to ask you about his exhibits. So the book value, the 5.4 million, you are aware that's not the number that an appraiser would use in an appraisal opinion as their OCLD, or is that correct?
So this is original cost less depreciation according to the county's books.
Right, but that's not what an appraiser would arrive at for original cost less depreciation. Is that correct?
That's up to the appraisers.
That wouldn't be allowed under their uniform standards for professional appraisal
I am
practice.
not
would
an
it?
expert on those standards,
Okay.
and I don't represent that I'm an appraiser.
So you speak to the public interest in terms of your recommendation to the commission. And as I look at it, you are focused on the public interest to ratepayers, and that's the mission of the public staff, right?
So yes, and when you refer to ratepayers, in this case, it's both the acquired customers and the existing customers of Carolina Water.
And you heard Mr. Denton's testimony that actually the existing customers would not be harmed. There might even be a slight reduction in the uniform rates as a result of this acquisition.
So nowhere are those numbers presented in testimony, and never has the public staff had an opportunity to vet those numbers. So that is clearly an unsubstantiated representation.
Well, it was his testimony, and we actually offered to put the exhibit in, and I believe your counsel opposed that. So, but I shouldn't be arguing here. Let me move on with the questions. Does the Carteret County have a public interest in receiving a net $8 million to use for other public necessities and benefits down there?
So let's talk about that $8 million net. So there is $8 million that potentially is the net take from the 9.5 minus the basically 1.5 or 1.6 in outstanding debt principal. There's also the capital reserve fund that then they would be able to potentially reappropriate. So there's additional funds that are opened up for the county also. I think that's important to note. The focus is on the purchase price, but there are additional funds that all of a sudden become available for a different use for the county. We don't know what that $8 million is going to be used for, but what I do know is that essentially these acquired customers, if on a standalone basis, would have to pay back and at a higher cost that amount of $8 million, and really 9.5 at a higher cost than the existing 1.5 of debt. And potentially if it is spread across uniform, but I mean, the cost of capital is way higher. And then obviously the difference between 1.6 in debt at a lower cost rate and the 9.5 million at a higher cost rate will have a financial impact and harm to customers. It was talked about that Carteret County, if added to the uniform water, would be a 4% increase in customers. The $9.5 million is a 14% increase in rate base for uniform water. So I'm not sure how that all of a sudden gets smoothed out to where there's no impact to the uniform customers.
Right. The parties have some different calculations here, but my question really goes to, there's more than one public interest out here. You're focused on the public interest of customers, and regardless of whose numbers, are more credible. But the county has other interests, and those are public interest, aren't they?
So you keep referring to numbers that aren't in the record and weren't offered in direct testimony or rebuttal, and I have a serious problem with that. There's a procedure here for evidence to be entered. The company didn't use that opportunity to put that evidence into record, and I think it would be unfair if it were allowed to be introduced. But then on the point of public interest, my job for the public staff is to represent the using and consuming public, and that public interest is specific to the ratepayers. I do not know how you can suggest that the interest of that $8 million going to the county outweighs the cost burden to customers to pay this premium of $9.5 million at a cost of capital.
But you do recognize there is a public purpose that those $8 million be used for, and that is a public interest the county has.
And I also understand that there are alternate routes for the Carteret County to find $8 million to make that investment and make that public interest.
So you would agree, I assume, that your recommended rate base of around 2.5 million is much lower than the market value that a knowledgeable, willing buyer and seller would arrive at as a purchase price. Is that fair?
I don't necessarily agree to that's fair. This deal could have possibly ended up at 2.4 million, but instead it ended up going through an upset bid process that I think was influenced by the engineer's valuation that was done as part of the feasibility study, which did not factor in depreciation of $10 million of the assets that they valued. I know Mr. Hartman called it, I think, a facilities costing. So I think that inappropriately set the table here of what would be a reasonable price to pay, especially in light of the fair value statute that, okay, that's going to be our starting point. So I think Aqua and Carolina Water had it in their mind of, we can get pretty close to that, and an appraisal will justify it, and that's how we'll go about fair value. There could have been a sealed bid process. There were other ways to dispose of this property allowed by the general statutes for the county. But this was a race to the top of how much can we spend instead of trying to reach a reasonable fair value, because $2.4 million still puts money in the county's pocket. It still opens up that capital reserve to be appropriated for other use. So there's still a public benefit that would be allowed by $2.4 million. That's not where we ended up because of the process.
And I think at the beginning of that, trying to cast back, at the beginning of that long discussion, I heard you say that this transaction could have been done for 2.4 million. I'm going to leave it at that. I'm going to conclude my cross. Thank you.
Was that a question?
Oh, no, I think it's already in the record. Thank you. I'm just concluding my cross.
Okay. I believe the county has some.
Yes, sir. Mr. Jonas,
Good afternoon, Mr. Wheatley.
I'm really upset with you on those last few comments that you made. You know, you're supposed to be representing the public interest of this state. I represent 70,000 people in Carteret County. We have spent $5.5 million on this system, as you've testified to. And we now are in a position we can get out of the water business by selling it to Mr. Don Denton's company. And of course, we would negotiate with Mr. Ruffin Pool with Aqua. And you sit there and act like they don't know what they're doing. They don't know what they're buying. They don't have the expertise to know what they're going to purchase. And then,
Chair,
isn't it true?
We're going to get, it's great to have a question here, but I object. I just wonder here, at some point in time, will it be a question? That's my only comment.
No, it's a valid point. Is there a question here?
Yes, sir. So what's happened to Carteret County? Isn't it true that now you admit that this is a good deal for Carteret County? If this deal goes through, it's a good deal for Carteret County, isn't it not?
So I could argue that it's a good deal for both the company and Carteret County. The more they pay and the more they get into rate base, the more money Carteret County gets and the more money that ends up going into the pockets of Carolina Water, because a higher rate base means higher returns. But that's a cost to customers. And that includes the 1,200 people that live in Carteret County. and that's possibly the other 29,000 customers that are outside of that system.
I understand it's a matter of weight.
Could you please just get closer to the mic? Thank you, Mr.
So this is a matter of weight that is given to the various consideration of the two parties. Now, you're representing the customers, the 1,254, whose rate the county can change anytime it wants to. Is that right? We don't have to come back up the Utilities Commission to change our rates.
Right, that's my understanding. The Board of Commissioners can vote and change the rates to those customers.
And they did so, as you had mentioned, and raised it 95%. And then came back and reduced it 25%. Is that correct?
Yes, sir.
And you contend and basically made allegations that Carolina Water had something to do with that. Did you not?
So I certainly said, and this was discussed by the Board of Commissioners at their meetings, because as soon as we heard about this potential purchase, I was watching the meetings. If it wasn't live, I was watching them the next morning because they are recorded. There's also minutes from those meetings, and it was detailed in those minutes that because of the rates, they were not going to adhere to the hold. And then ultimately, after that point, the county did raise rates, and then Carolina Water agreed to that rate hold at the current rates. That is a string of events. I'm just pointing out the facts of those string of events.
Understand that in that string of events, the county then reduced those rates.
Correct.
And Carolina Water has agreed to keep those rates in place for 4 years.
Yes, and that's a business decision that is ultimately up to the commission to approve the setting of rates.
Well, I understand, but we contractually bound ourselves with them along those lines.
Well, my understanding from the testimony yesterday of Mr. Denton that rate hold is not actually in the contract. Now, there's some conflicting details. Exhibit O does have a note in it, but that was based on old facts and not completely up to date in terms of rates and timing.
You heard Mr. Denton under oath say that the company would honor that 4-year freeze, did you not?
That's correct. I was just pointing out the facts in terms of, you said contractually.
Well, that's a contract, isn't it?
I guess it's a verbal contract, but I'm not an attorney.
Now, the 1,254 customers, you want to protect because, now we have tried to protect them for 4 years. On the 5th year, it's up to this commission protects them, right? They protect us.
You're referring to the rate hold and then
I'm telling you that the 5th year, they got to get permission from this group of folks in order to raise their rates.
Correct. It's up to the commission to set rates for the regulated utilities.
So what it gets down to is the $9.5 million purchase price that they have agreed to pay us. And of course, we got to pay $1.5 million to that when you talk about your $2 million price. Does that net of the $1.5 million we owe?
No, so that's a gross amount, the 2.4, in terms of rate base. Again, I'm talking about rate base. I don't dictate what Carolina Water is willing to pay. If they want to essentially absorb the net of those two, the rate base and the purchase price, that is a business decision that they can make. And I have seen happen before in terms of a utility absorbing some acquisition premium.
I've only got a few more questions. But basically, Carteret County is now in a position that this $9.5 million, which is, you've agreed it's a good deal for us. You don't want to be their basis for this rate base situation that you've been arguing about. Is that right?
So, this $9.5 million, and this is described in my testimony, it's essentially a loan put on Carolina Water's customers at a much higher cost to borrow than for the county. You can get $9.5 million elsewhere. I've seen, and you know, this has been discussed with our economists, your bond ratings, your borrowing power, like the county, this water system is 0.7% of the county's budget and expenditures. So this is not some big albatross on the county's budget. County's budget's $163 million. This system is 1 million of that essentially.
When you keep talking about us getting this money, sure, we could go out and borrow $9.5 million, but for what purpose?
Well, I think that's the question for the county. What purpose are you going to use the $9.5 million for? I think the county has indicated that they would pay off their debt and net essentially $8 million. And there's been no clear representation of what it will be used. I think you testified at the public hearing. You know, I think there was discussion of airports, jails, schools. That will be up to the county board of commissioners on how that would be appropriated.
So, Mr. Jones, let's go back to the question. You're saying that we could go out and borrow $9.5 million if we needed $9.5 million, but we would have to pay that back, would we not?
Right. And so instead, you're getting $9.5 million and making your customer, your former customers in this situation, and Carolina Water's customers to pay for that at a cost of capital, which is likely higher than your borrowing rate.
So this is where I'll lose you. So you're saying that, well, first of all, the $9.5 million, whatever's net of that, we pay off our loans and have no debt. Whatever's left, if we have to repay grants, whatever's left, is money can be used by our commissioners to fund whatever projects they desire. They're the legislative unit in our county, right?
Yes.
Now, what I don't understand about us can borrow $9.5 million and how this borrowing this money is going to put a load on the current 1,254 customers in Carter County. It makes no sense to me. Would you explain it to me?
Can you clarify the question? I was referring to the $9.5 million purchase price being treated as rate base, and then Carolina Water customers and or the existing 1,277 customers having to pay that back. They would be responsible for that if it is rate base.
I don't know how they'd had to do that, but let me go to another issue where I think is where we're going. And I think this is going to be critical to municipal and county governments. County and municipal governments who own these water and sewer companies that are not profitable. And if they're eligible to sell them to a Carolina Water or to an Aqua, and they negotiate a sales price, and they're bound by the same rules of this sale. They can do it one of three ways. What happens when they're concerned that this commission can reduce the basis of their purchase?
Well, again, the commission doesn't change the purchase price. They potentially can change the rate base for rate making purposes of the acquiring utility if it's a regulated utility. I will also say to the front end of your question, that government entity decides what its rates are right now. You said the county can set its rates on basically a whim. And so why is it not profitable? Because you're not setting rates at an appropriate level. The commission sets rates to cover costs. And if you're not covering costs with your municipal rates, they will cover costs under this commission, and it will result in a rate increase that otherwise could have been implemented by the government entity.
Well, let's get down to the nitty gritty. The fair market value, we contend, is $9.5 million. Is that correct? The $9.5 million purchase price for Carolina Water is the fair market value, and the way we have to sell things in accordance with 168-269, the general statutes. Is that right?
So that is you're referring to the upset bid process?
Yes, sir.
Yes. So Article 12, sale and disposition of property, that's GS 160A dash, and then it's 265 through essentially 280 is my
Two
understanding.
69 was the process that we followed, is it right?
Right, and that was the choice of the county. There were 5 options. You couldn't use one, is my understanding, because it exceeded the threshold.
Well, let's go back to the key issue. You want this commission to set a rate base much lower than the purchase price that they're going to have to pay to the county.
Correct, and I think Mr. Denton addressed this. He would have 2 options. If it is lower, they could back out of the deal, or they could proceed through the deal, and it would be our understanding that the company would absorb that acquisition premium.
Now, in the event the amount rate base set is such that they don't feel they can make any money and walk away from the deal, that's a danger that you're creating for my county, isn't it?
I wouldn't characterize it as a danger. Obviously, the county has shown that they can operate the system and provide safe and reliable service. And they've shown an ability to raise rates that would cover its costs.
Well, basically, you keep saying we can get grants to do our operating costs. Have you ever heard of a grant covering operating costs?
I didn't say you could get a grant to cover operating costs. It's also interesting that there was all this discussion about an operating cost is depreciation expense. Because of the accelerated, what the appraisers have characterized as accelerated depreciation, essentially a life of 33 years, that increases the depreciation expense, which then offsets income and reduces the net income on the county's books. So that's also a choice being made by the county.
Well, you looked at our books and it's straight line depreciation that's been done, right?
Right. I don't have a problem with it. I have a problem with people undoing depreciation or trying to materially change depreciation or the value of those assets.
Well, that happens every time there's a sale, isn't it?
Not necessarily.
Well, usually when somebody buys something, the assets are revalued, are they not?
Will you repeat the question for me?
If I'm in a situation where I'm buying from a willing seller and they have certain assets and they have their own depreciation issues, right? And I buy that asset,
Right.
then I allocate my purchase price on those assets the way I want to, subject to the IRS rules.
Okay, sure. Yeah, I'm not a tax accountant, but I will accept
I understand.
that
I mean,
in concept. But I think this buyer is different in that if I'm buying a car or if I'm buying a house, I want to pay the least amount that I can pay to buy that asset. And that's not what happened in the sale of this system.
you think they could have bought it cheaper than what they agreed to buy it for?
Potentially. I mean, it's interesting that the appraisers relied on a report put together by Draper Aiden that had this been transferred to the town of Beaufort, he was recommending that it be transferred for $1 and the county continue to pay its $2 million in debt costs and continue to have the special tax district in place to pay for it for 11 years. So that's essentially a negative $2 million transfer. That's what the engineer recommended in this case. And then the county negotiated with Beaufort and basically offered the system if Beaufort would take the debt costs. So you essentially pay off your debt, net zero, and they didn't accept. That doesn't mean that there weren't alternate routes. There's potential regionalization funds from DWI that could have been used for a potential acquisition. That route was not pursued to my knowledge.
Wasn't necessary, was it?
What wasn't
It
necessary?
wasn't necessary to seek other monies they were going to give it to them for $1. Why would they want to seek additional funds?
Well, they could have sought DWI funds to potentially pay something for the system. If It really just depends on how you wanted this to play out. I don't think the other options were exhausted to that point.
Every time I try to get to a point, you make some assumption that we're going to have to go get some grant or do something, and we can do all these sort of things that don't appear to have any business necessity. Do you understand what I'm saying?
I think appropriate due diligence is appropriate.
So basically, the only problem that you have with our deal is that you want the commission or the tax rate to set it lower than the 9.5 purchase price.
For rate-based purposes, for rate making and setting rates for customers, my problem, yes, I want it to be lower, and have recommended that it be $2.4 million approximately.
So we were just lucky enough to come along at a time when we were going to be the test case and can't get our money. That's all the questions I have, Your Honor.
Okay. Redirect.
Thank you. Mr. Junice, to maybe take a sip of water here. Just to be clear on following up on the numerous questions that we had, in terms of an opinion as to a private water company, the local government entering into a contract separate apart from rate base. Do you have any real interest in that, at least that aspect of the transaction?
In terms of the negotiations, it's really the outcome that affects the customers that we represent before this commission.
All right, now, talk about the statute, and there was talk yesterday about the plain language of the statute. And just to be clear, though, we covered it earlier, you're not a lawyer, though, right? But you have some opinions on the statute, and can you talk about, with respect to your testimony, how it was that you viewed the top part of the statute and the bottom part of the statute?
So when you're getting into the fair value, there's obviously two options. That's the average of the appraisals, the lesser of the purchase price, or that average of the three. And then there is that commission discretion, which is subsection E.
And that's what you refer to in your testimony in reference to the Attorney General's reference to consumer protections.
That's correct. So the Attorney General in the rate making proceeding succinctly addressed this. Mr. Denton addressed it as a safeguard, that the commission has this authority to change the fair value if it's deemed unreasonable.
And you said rate making, that just then, I think you meant rule making. Is that right?
Correct. Sorry, rulemaking.
And speaking of rules, are you aware of what the commission's rules, applicable rules, say with respect to the burden of proof?
Yes, the burden of proof is on the acquiring utility.
All right, now, when we talked a moment ago, you talked a moment ago about, and there was a question about one of the exhibits to your testimony, and it's exhibit, it's Junius Exhibit 6, and that was, and it says Aqua at the top, it says Water and Sewer Utilities Valuation.
Yes, sir. And I really should have ate a Snickers before this.
Okay. Are you okay? Or-
Yeah, I'm fine.
Okay. Can you read the proposed, where it says proposed solution on there, if you will, please, Mr. Jennison?
Yes, this legislation removes these impediments by creating a beneficial, optional, and voluntary valuation appraisal process to determine the asset value while providing clarity to the valuation and rate-making process when a private regulated utility acquires the water or wastewater assets of a governmentally owned system.
And then, maybe I won't make you read so much, given what you just said, but below in the key points, will you accept that it says the legislation would help address the needs and opportunities arising from estimated $26 billion in investment needs over the next 20 years?
Yes, that's correct.
And you also, will you read the next bullet point there, just the very first sentence?
North Carolina's water and wastewater industry is both fragmented and in need of infrastructure infusion. This fragmentation and lack of adequate funding sources often result in systems that may lack operational expertise and access to capital necessary to fund investments that will keep their system safe, reliable, and in compliance with environmental standards, close quote.
Thank you. Now, I've got you were asked various statutory related questions, and so I do have a Junis redirect exhibit I'd like to hand out if I may. And
Please.
this is entitled House Bill 351, Utilities Rate Base and Fair Value Determination. This bill analysis reflects the contents of the bill as it was presented in committee. It's dated June 12th, 2018. Good luck.
Thank you.
Sir.
And could you please go ahead and mark it?
Yes, please. Thank you so much. I'd like to mark this Public Staff Junis Redirect Exhibit 1.
Let it be marked.
Thank you. And Mr. Junis, are you familiar with this?
Yes, I've reviewed this document before.
And will you see it where it says bill analyses?
Yes, sir.
And would you start reading where it says if the commission finds, well, excuse me, the system would receive?
Yes. The system would receive 3 different appraisals, one of which must come from an appraiser representing the public staff of the Utilities Commission, and the averaging of the appraisals would constitute fair value. If the commission finds, however, that the average of the appraisals will not result in a reasonable fair value, the commission may adjust the fair value as it deems appropriate and in the public interest. The rate base would be the lesser of the purchase price negotiated between the parties to the sale or the fair value plus fees and costs authorized.
And then we'll try to speed this up if we can. In the next paragraph, read the second sentence there, if you will.
The application would identify deficiencies in the system, needed infrastructure improvements for the next 5 years, and projected rate impacts for the next 5 years.
All right, now let's look at that sentence for a moment if we can. There are 3 different things mentioned there: deficiencies in the system, needed infrastructure improvements for the next 5 years, and projected rate impacts for the next 5 years. In this proceeding, in your view, which ones of these have been addressed by the company?
So the company has identified no major improvements or deficiencies necessary to address in the system over the next 5 and 10 years. So the first 2, there's basically not anything to identify. And then the projected rate impacts, we believe, are significant and unreasonable.
Very good. Now, the next questions I have related, you had some questions related to cost of funds, and Mr. Junis we have an exhibit here entitled Revenue Requirement by Year of 19.5 Purchase Price plus Estimated $175,000 in fees and closing cost depreciated over 25 years using sub 384 cost of capital. Is there a figure?
Commissioner Hughes, might I interpose a question for clarification as to the Exhibit 1? This is a committee analysis of the proposed committee substitute. Is that correct?
It is. It says what it says. It's dated June 12th, 2018.
But it's not an analysis based on the final bill?
I can actually.
Or is it the same?
We can refer to Mr. Grantmire's, the history of Mr. Grantmire's first exhibit yesterday, and this will tell you exactly where this is. in that process. But I'm pleased to cover that here at some point in time. But it's a more final version of the bill, yes.
It's the
I-
last,
It's dated June 12th, 2018. I can cover that here
Okay.
later.
thank you.
I will. All right, so I'd like to mark this exhibit, this exhibit, starting revenue requirement, public staff Junis redirect exhibit 2, please.
So marked.
And Mr. Junis, can you were asked about, you asked a lot of finance related questions. Can you explain this exhibit?
Yeah, so Ms. Fiesel prepared this exhibit, and it is the revenue requirement by year of the $9.5 million purchase price and the estimated fees of $175,000 if treated as rate base. So it's calculating every year as if you were setting rates every year. The total collected would be $19.2 million on the $9.675 million.
So just to break that down, to keep it simple, you're saying that this is the revenue requirement over those years.
Right, assuming depreciation over 25 years.
Anything else you want to offer based upon the questions you were asked before?
So, I mean, it was discussed, I think, with Mr. Drews about the first couple of years, if that wasn't captured in rates, which there's a lot of analysis of would it or wouldn't current rates cover at least part of the revenue requirement, especially in light of potentially changing the depreciation rate. But even if you sort of move down to 2027 and then go essentially every 5 years, assuming a rate case, that would be the revenue requirement incorporated into a rate case. You're talking about, so 2027, if you use that number, if you use 2032, 2037, and 2042. If those were the revenue requirements incorporated into rate cases every 5 years, you're collecting north of $15 million on the $9.5 million. This is purely to illustrate the full cost of this $9.5 million plus the fees being rolled into rate base. So when we're talking about benefits and costs, there is a significant cost to this capital.
And Mr. Junis, you were also asked, and you discussed county commission meetings minutes in the cross just a moment ago. I'd like to, Chair Hughes, if I could, I'd like to put forward Public Staff Junis Redirect Exhibit number 3, and these are our County of Carteret Board of Commissioner regular session meeting minutes from February 15th, 2021, September 20th, 2021, and October 18th, 2021. We thought we had all of them earlier. We have them all now, and I will pass them out, if I may, in that order. Again, February 15th, 2021, September 20th, 2021, and October 18th, 2021.
We'll see if we answer that.
And we do have the full transcripts available for the court reporter. These are excerpts.
This is our revenue system here. Spreadsheet D have.
Yeah, that will be done in that. Yeah, so you mean to have this entered in as one document?
Yes, sir.
Okay. So just be clear, read it in as one document now, if you don't mind.
Yes, sir. And I'll be able, thankfully, the way the county commission does it, their pages are numbered. And so you'll see a sequential aspect to this, at least in some regard. So those were the February 2021 meeting minutes, and these are the September 2021 meeting minutes.
So just what I have has excerpts from the February, September, and October, the version I have.
Yeah.
Okay, my apologies. Then I don't know that you need those, Gina. I don't think we'll need that. Okay. Let's see here if you.
Mr. Creech, before you actually clarify what the exhibit should be labeled, just from a court reporter and from a lunch standpoint, I think maybe Mr. Junis needs his Snickers bar. How much longer do you think you need to go on redirect?
Sometime, I'd say 15 minutes. And we're pleased to take a break, depending upon the. But I can also try to hurry it up.
Well, that's always a good option. Do you think you can, if you're offering that, I'm
I
going to
am
take you up
offering
on
that.
that. Okay,
Right.
okay, let's hurry up and let's try to get out of here in 10 minutes.
Yes, sir. Okay. So what you have in front of you at the start says February 15th, 2021. This is Public Staff Junis Redirect Exhibit 3. And at the top, it has pages 502. And you'll see it continues on sequentially. And then it gets to September 20th, 2021 board meeting minutes. And the top of the page there is page 111. And then next, on page 219, it says October 18th, 2021 meeting minutes. And Mr. Junis, were these the meeting minutes to which you were referring a moment ago?
Yes, this is a select group of those meeting minutes. The county met month after month for an extended period of time, considering different bids and the discussion of sale of the system.
All right, now let's just in the general sense though, I wanted to get those in. You referenced them. I'm pleased to ask you some additional questions about them. But I think the purpose of it, and especially since we're going to be cutting this short, is to talk a bit about the transaction history. And in your testimony, you have attached to your testimony the Draper-Aden report that speaks to the county and the town of Beaufort's possible transaction. Do you not?
Correct.
And you referenced earlier that in that scenario, that not only was the county going to retain, not only was the county offering, I guess, for $1, they were actually going to retain approximately $2 million in debt.
That's correct.
And so one of the questions that's come up is in the transaction history here is that negative $2 million valuation was the starting point here, was it not?
Right. So that's where the engineer sort of set an expectation of a transfer municipally, but however, they also did their valuation, which seemed to set, there's sort of a floor and a ceiling here between negative $2 million and a high of $12 million.
Very good. And you talked a little bit about the public upset bid process, and you characterized that as a race to the top. in terms of going from a negative $2 million valuation up to a $9.5 million purchase price, what's your view of how this transaction is played out, at least in that regard?
Right, so you had the upset bid process play out between Carolina Water and Aqua, and in the matter of essentially 3.5 months, this potential sale went from, that floor to now the $9.5 million.
And in your view, is this taking all these things into account? You've talked about the statute, you've talked about the burden of proof on the company, you've talked about the explicit statutory discretion of the commission here. We've talked about the appraisers in this process. Is this the right test case for the implementation of this statute?
So, I mean, to start with where you began, obviously there was discussion of that process in terms of the discussions between Beaufort and the county in the February meeting when they were talking about the offers from Carolina Water and Aqua and to proceed with the upset bid process. And then the September, there's actually consideration of, should they keep the system or not? And then accepting that bid. And then in the October is when they actually approve. But in terms of a test case, I mean, we talked about the statute and the summary and the support for the statute. There is not this material need to address deficiencies or capital investment for the county. And so that's counter to the stated intent.
And you had a conversation a moment ago with counsel for the county relating to not the contract price, but the implementation of this into rates. And can you talk a moment more about the concern that you have with respect to the impact on not just the ratepayers in Carteret County, but the ratepayers in the 37 other counties where Carolina Water is located?
Right. So, if this system's acquisition at $9.5 million is consolidated into uniform rates, that will have an impact and create a continued upward pressure in rates that the company's already facing with increased expenses, the full amortization of CIAC for original plant, and continued investment in its existing systems. And this will just exacerbate that.
And I think this is the final question here. You talked a moment about kind of precedent here. I remember growing up, there was a commercial that was kind of said, and so on, and so on, and so on. If this becomes the precedent and the company is able to socialize or share the cost of the premium on other ratepayers across the state, what is your fear about the impact that'll have on rates and kind of like a rising tide sinks all boats scenario?
Right. It was interesting, Mr. Denton, in response to, I believe, commission questions about, well, what is a fair value that is too high? Or how many acquisitions do you foresee? And I apologize for being maybe a little crude, but he basically said they hadn't figured out their puke point. What was too high? What couldn't they handle? And that creates the legitimate concern of where does this go if this full $9.5 million gets put into rate base, and that is then the precedent going forward for acquisitions for a system that doesn't have the issues that were intended to be addressed. It is a safe, reliable, compliant system that they're paying a significant premium for. That sets the bar pretty low to get a fair value and a premium into rate base. And we all recognize that there's already increased investment in infrastructure. And if this pushes up rate base like it would, affordability of rates become an even bigger concern.
No more questions.
We're gonna, back here, if there's any doubts, we'll we will be finishing. Okay, I understand there's been a request on the part of one of the witnesses. Do you want to explain the situation?
Yes, the appraiser for Carolina Water, Mr. Hartman, would like to be excused so he can catch a flight. We understand that Puck staff has no question for him. I don't think the county has any questions for him.
We have no objection.
Okay, and
Let me go
so,
home.
thank you.
Well, let me just check out, your opinion's worth a lot, but let me check in with the commissioners. No question? All right, he is free to be excused.
Thank you very much.
And thank you for coming. He's already gone anyway.
We like to have it on the record, even though there's de facto and de jure, right?
You might have some questions.
It's a Friday afternoon. We'll get through this, everybody. All right. Well, so we're back to, is Mr. Junis here? Yep. Yeah, there he is. He's right there.
For the record, you did get a Snickers during lunch.
Okay.
For the record, if I may, Presiding Commissioner Hughes, I
please.
question the sanity of anybody who puts up a witness that's got 2 degrees from Duke. So
Let the record show
let the record reflect.
All right. So with that, we're going to finish. I have some questions for you. I think some have been asked and answered, but let me just get through these. So Mr. Junis, in your testimony, you state that on June 21st, 2021, the Carteret County Board of Commissioners voted to increase their water rates by 95% and reduce the water tax rate to 0. Then on September 20th, the Carteret County Board of Commissioners voted to decrease water rates by 25% after receiving complaints from customers. In Table 2 of your testimony, you cite $70.12 as the amount customers pay under the current rate structure for 4,000 gallons. Did you calculate what a customer using 4,000 gallons per month with the rates that were put in place prior to the reduction in June 2021? Did you calculate that?
So I did not specifically calculate that. However, that July 1, 2021 rate was a $53.65 base charge, including the first 1,000 gallons, and then a $13.45 per 1,000 gallons volumetric charge. So quick math, that's about pushing 80 some odd dollars. Check me on that, but
I would say pushing 90 some odd dollars, but we understand where you got your degrees
you
from.
guys are
So
putting the pressure here right after lunch, but you got the rates. We can all do the math.
okay, so we're talking about a difference of high 80s, low 90s versus $70.12. Just in your opinion, having looked at this this utility quite a bit, it seems like, do you believe that rates put into place and then changed? So the original $90 per household rate or the $70 rate, do you have an opinion about what rate it would be closer to actually fully cover costs needed to make this system sustainable? So in other words, we have 70, we have 90. Do you have an opinion about what it would take to actually have this? We hear testimony was losing at 70. So do you have an opinion about that?
So correct. The 2023 budget that utilizes essentially the $70 average bill, they are projecting a $75,000 sort of deficit that will be offset by the general fund, or I'm sorry, the capital reserve for the water fund. And that equates to, I think I did the math, like $4 per customer on a monthly, let's see here. Yeah, I think it was on a monthly basis. So it is also a projection of expenses that includes depreciation expense. I would say you are very close to sustainable rates at a $70 bill.
Oh, okay, but you did just talk about like a by your calculations, it would be $4 more. So,
Right.
so do I understand you to say it's closer to the 70, but it is higher than the 70?
Correct.
Okay.
Correct.
Um,
Now that I will add, that budget assumed 4.78 full-time employees dedicated to the water fund, and that is in that 2023 budget.
Thank you for that. In your alternative recommendation to the commission, that's an alternative, if your first recommendation being we deny, but in your alternative recommendation to the commission, you propose a calculation to establish the rate base of Carteret County water system that is based on two approaches: the weighted average rate per customer of the 5 water rate divisions in Carolina Water and Aqua, approved by the commission in the last rate cases. And then number 2, the original cost less depreciation and amortization of the contributed capital based on Carteret County's unaudited financial records. Please explain why you weight method 1 twice what you weight method 2 in the calculation for your ultimate recommendation of a fair value of $2,444,347.
Yeah, so just a point of clarification, I weight the second method, which is essentially original cost, less depreciation and amortization of CIC twice, and then the rate base per customer once to get to the 2.4 million. The 2.3 million, which is the original cost less depreciation and amortization of CIC, is specific to this system and the county's records. So that's why I weighted it more heavily. But I was trying to give some consideration to sort of a fair value and a premium being paid for the system with that rate base per customer.
Okay, thank you for that. And I understand your clarification. So the way you just described doing it, how is this recommendation consistent with the North Carolina General Statutes, Section 62-133, 1A, B, D, which states that the, quote, original source of funding for all or any portions of the water and sewer assets being acquired is not relevant to an evaluation of fair value?
So number one, I don't care who the source was. You know, it could be the state revolving fund, it could be a developer, but what matters is the rate making consideration of those funds. So those are contributions in aid of construction. That is not investment by the county. And so that should offset that cost. It shouldn't be rolled into your books. A regulated utility wouldn't say, oh, well, we were given this asset. They paid for phases of installation of the system with contributed funds. So number one, that addresses it, but also Part E, I don't think it is held to that requirement. You know, the commission's authority, if the fair value is not reasonable, may adjust the fair value as it deems appropriate and in the public interest.
And I appreciate that. So let's separate out D and E. So E, I'm not asking you about, I think, but D, so your position for the actual calculation of fair value is that if it's provided by a developer and contributed capital, it should be dealt with differently than if the county had done so.
I think what I'm trying to say is that the source of funds is not not a limiting factor to the commission's authority to establish a reasonable fair value that is appropriate and in the public interest.
So you're pushing hard on E.
Yes.
Okay.
Absolutely.
Okay, that's what you're standing up for. Okay.
Yes.
So would you admit then D is you're not on as strong footing?
And it's B1D, right?
Yep.
Yeah, I'm just making sure our letters are straight and what subpart we're getting into. Yes.
Okay.
That's a restriction to essentially the appraisal process.
Right. Okay. I just, so I think we're on the same page. Given that the fair value of a water and sewer system is almost always going to be higher than the depreciated book value, under what set of circumstances, in your view, would an acquisition of a county or municipal water system be in the public interest?
So, I mean, there are a number of ways that an acquisition of a government-owned utility could be in the public interest. It's what is that rate base set at that will significantly impact that. There are factors including the condition of the plant, its ability of the government entity to have expertise to provide service, the quality of service being provided, the investment necessary in the near future. I mean, we sort of talked about that in my testimony, that, you know, there's a number of criteria we believe would be relevant to that. I don't know if I answered your question.
Yeah,
If you want to ask
the question might not have been clear. I think you partially did, but I think it's essentially, we're essentially asking that, just from experience in mathematics, the fair value calculations as laid out in statute are very likely to almost always have a higher value. You focus so much on the actual depreciated book value in your testimony, and I think you cite the differences between the depreciated book value and the fair value as being one of the arguments against it being in the public interest. So I'm just asking, is always going to be against the public interest if we have a fair value that is higher than the depreciated book value?
No, and that speaks to, there's a number of factors, customer benefits, and you're looking at the rate impact to both the acquired customers and the existing customers of the acquiring utility.
Okay, thanks for that. Do you consider Carolina Water's existing customers to be adequately protected by the commission's ability to create system-specific rates for Carteret County water system? So I'm not talking about the acquiring systems customers. I'm talking about the existing Carolina customers. So the statutes, would you agree the statutes allow us to, as one protection mode, create a separate rate
Yes,
class?
that is a protection. It's explicitly addressed or sort of emphasized again in this statute. I don't know what the commission's appetite to do that is, and I think it is a challenging effort to decide which systems will be standalone and which will not. I think here, if they are the ones that are potentially benefiting from the purchase price, you know, these are residents of Carteret County, so the net proceeds should to some degree benefit those folks, then that would be at least one reason for standalone rates.
Okay. This is just a quick accounting clarification, which hopefully you can answer. In attachment 2B to Junus Exhibit 3, their system's 20-year unaudited profit loss statement shows a $372,670 transfer from the water taxing district, even though the tax had been set to zero as of June 21st, 2021. We just want to clarify, is this a timing issue, or the tax rate had not been changed again?
So this is, I believe you're referring to Junus Exhibit 3 that then has an attachment. You said 2B?
Yep.
Yep. Just want to make sure I'm there. The chair is gonna get frustrated with me as I'm flipping pages here. So I think there is a timing issue. They do show for 2021 or 2022, some tax district income. And I think it is just a matter of timing that was going to be a no longer go forward interest rate. And again, that's I think an unaudited book amount.
Okay. Pursuant to North Carolina General Statute, Section 62-133A, Section E, if the commission finds that the average of the appraisals will not result in a reasonable fair value, the commission may adjust the fair value as it deems appropriate and in the public interest. I think we've heard that a number of times today. In this proceeding, if the commission were to determine a fair value less than the $9.5 million agreed upon purchasing price, the company would record an acquisition premium on its books for the difference between the purchase price and the fair value. That would be the default treatment. Is that your understanding?
So when you say an acquisition premium, essentially it would not go into rate base.
Right, right.
Yes.
I think that's the way you refer to it, as acquisition
Yeah.
premium.
Yep.
Okay, so that would be sort of the default expectation. So in your testimony, you actually provide a number of examples where that occurred under rules before fair value, and I think you just cite a number of examples where an acquisition price was higher and there was this premium placed. It's my understanding that at least in one case in the past, the commission set up an acquisition incentive account to allow the acquiring company to essentially recover some of that premium that you're talking about.
Yes, sir.
So that they could eat down that. If in this case, if the commission accepted your alternative recommendation to set the rate base below the purchase price, would establishing some type of acquisition incentive account to allow the company to regain some of that rate base, would that be in the public interest in your view?
Obviously, there's some complicating factors there. Is it the entirety of the magnitude of the acquisition premium that would potentially go into that AIA account? And then what are the criteria to sort of work down that acquisition incentive account? We have typically, I think you're referring to the Aqua case, acquisition of heater. And that has been sort of reserved for the acquisition of troubled systems that specifically need investment. And it's sort of a dollar for dollar matching of that investment up to a certain threshold on a case by case basis. Obviously, that would push the public interest in terms of consolidation of some of these fragmented and troubled systems. Again, how big that AIA, I think, would be of at least some concern to the public staff.
Okay, thank you for that. So switch over to the something new topic regarding the Draper Aden engineering assessment. On page 12, line 6 to 7 of your testimony, you state that it is unclear why Draper Aden provides an estimate of the present book value of the county's assets in the amount of $10,241,142 with no original cost, discount rate, or depreciation. You further state that this value Draper Aden provided was not explicitly required by the merger and regionalization feasibility grant. So just with that kind of testimony, does the public staff have concerns with the Draper Aden engineering assessment?
So that piece of the puzzle here, I know there was some discussion with, I think it was witness Denton, about have they met the requirement of having an engineering assessment of the condition of the system? I think you have that in Form FV1 and this report. That form was required to fill out a lot of information. Mr. Grantmeyer and I had a significant input in that form as part of the rulemaking. So I think they have sufficed in that aspect. But in terms of this valuation done by Draper Aden, we absolutely have concerns because it sort of fueled a number of the appraisals and seems to have set sort of the ceiling here for what everyone's calling a fair value. Because you can see there's no accumulated depreciation on this present book value. And so it's a representation of what it currently is. But I mean, number one, most, if not all that pipe was contributed or paid for by low cost debt. And it shows zero depreciation on those assets. And then, I mean, the land is relatively immaterial, but land is usually a pretty low value for utility rate making because its best use is for providing utility service. And so it has almost no value to anyone else with those assets on it.
Okay, thank you for that. So from the engineering assessment standpoint, you're okay with it? It's the concerns of the valuation?
Right. In terms of condition, we conducted a site visit. We went through the system. We saw all the elevated tanks, and we're, I think, in general agreement with the representation of the condition of the plant.
Okay. The last question relates to some of the discussion we've had earlier about the impact of this, whether it's contractual or oral agreement to wait 4 years. And then did you hear the earlier testimony where the county went on record that they did not intend to ask for any deferral treatment or any other dealing of that amount that would be depreciated between now and when?
Yes,
When
it's
this-
my understanding, Mr. Denton represented that they were not seeking a deferral.
So, yeah, I know there was some concern about some of the specific numbers thrown out from your part, but just based on those, based on that, knowing that there's going to be this deal, and knowing that the rate setting world that we live in, is it now then your understanding that when this actually became rate based for rate setting purposes, in practical terms, it would be lower than the 9.5 million from that? Okay.
Yes, I accept that there would be accumulated depreciation that would offset a portion of the 9.5.
Okay. And to the extent of how much that one you'd want to have
It
comments on.
absolutely
Yeah.
depends on the
Okay.
depreciation rate. Obviously, there was discussion from the company side of a 2%. We utilized a 4% for the calculation of our numbers. That difference is 50 years versus 25 years. You're talking about leaving these assets potentially in rates for 50 years. I do not think, with the exception of possibly pipe, that most of those assets will still be in use at 50 years from now.
Understood. But you, from a standpoint of that 9.5 being the number to just fixate on,
Right.
that it will either be lower through with a 2% depreciation or 4% depreciation.
That's correct.
And then you'd also agree, not looking at how much money it would be, but that there would be foregone returns during that period.
It's hard to say what would be in rates. Obviously, they have priorities. Return on equity is usually the last thing that sort of comes out of income when we're calculating returns. So it really depends on how they control their costs when providing service and how well those current rates would cover their costs.
Okay, I think I understand that. That's all the questions I have. Let me see if my colleagues have any additional questions from Mr. Jones. Chair Mitchell.
All right, Mr. Junis, I'll be quick because Commissioner Hughes covered some of the ground that I wanted to cover. So a couple of things. Look at your testimony, page 14. The table that you provide there goes through the bids made during the upset bid process. And we've got Carolina Water making a bid on the 1st and the 23rd of March.
I also struggled with that, Chair Mitchell, and I did my best to review the record in terms of the Board of Commissioner minutes and what was available to us. I am not 100% sure what happened there. I think it would be appropriate to ask Mr. Denton on his rebuttal.
Okay, will do. All right. I did have a question for you about your concerns about Red Braden and the accumulated depreciation. You've covered that with Commissioner Hughes, but just so I'm clear, did you all ask any questions about that? Did you talk to the county about your concerns about the fact that depreciation wasn't shown or wasn't included?
No, we did not. We relied on the county's books, so we were happy with, they have detailed records that are representative of original costs. So we weren't overly concerned with trying to vet out exactly what was going on with the Draper-Ayton numbers there.
Okay, even though you're concerned that this is setting that what you refer to as the ceiling on this bidding process.
Yes, but I mean, even if we vetted out and said, okay, instead of 12, Draper-Ayton's number should have been X, it wouldn't have changed what has already happened. It's too late in the process. Had we been aware of this document before this system, before they negotiated, before it was put up to interest of Aqua and Carolina Water, then it would have potentially had a material impact and it would have made sense to get involved with that.
Okay. We also covered this ground some with Commissioner Hughes, but just want to be clear because earlier this afternoon, I heard you testify that the public staff's view of the appropriate usage of this statutory mechanism isn't so limited as to only troubled systems. Did I understand that correctly?
That's correct.
I mean, the public staff can envision this statute's being utilized for systems that it would not define or describe as troubled.
Right. I think it certainly is dependent on what is that difference between original cost and fair value, because if we're talking about, percentage wise, I mean, huge percentages or tens or hundreds of millions of dollars, that does not make sense for the long-term viability of our regulated utilities. Affordability becomes a huge concern if this is a pattern of basically paying 5 times the book value.
Well, and I'm clear on I'm clear on your testimony, the public staff's position on that issue. But need to understand better. I think you described earlier, you called it a puke point. Did I get that right? I'm using your
Sorry,
word.
yeah,
Okay.
and I apologize.
I embrace I embrace that terminology and will now incorporate it into my everyday. As I am there often. So the question I have for you is this, in seriousness. So, but you haven't, in my mind, I'm still not clear where the public staff is on the utility of this statutory provision that we now have on the books, this tool that we now have. You've said you can use it in instances that don't involve troubled systems, but you haven't gone much beyond that, other than what I hear right now, which is it just can't cost too much. There can't be too much of a rate impact on the acquired customers and the uniform or the utilities existing customers. But that just doesn't provide me with enough guidance on sort of when the public staff would deem the usage of this tool as appropriate in the context of a non-troubled system. So help me. I mean, what other criteria are you guys going to consider? Are you only looking at rate?
So again, we're looking at quantification of benefits, some of that consolidation, economies of scale. The company didn't quantify those. We asked twice. It's in the DR responses that are.
I understand that. What benefits? List out the benefits that you want them to quantify.
So, I mean, cost savings. So when you talk about consolidation, you would expect cost savings. So if it takes 4.78 employees for the county to operate this system, how many is it going to take for Carolina Water? That was not provided in response to 2. We sent 1 and then a follow-up data request for them to quantify these savings, even an estimate, and they did not. Their opportunity for the burden of proof is passed. And that was a point I made earlier. Like, you were given, it's sort of the asked and answered, right? And we asked it twice and it was answered twice without responsive information. I think there's a factor of, when you're saying not troubled, I think you're probably moving on a spectrum. If the system's not troubled, the fair value should probably be closer to its book value, because there's less benefit to be provided to those customers. And then you might move further away when there's more benefit to customers, that it sort of offsets the cost premium that we're talking about. I would love to give you some equation. Problem is, there are too many complicating factors for this not to be a case by case basis.
And the only follow-up question I have for you, and I actually don't want you to answer it, I'm just going to leave you with it to go away and think about it, is, but the statute doesn't say book value. It says, you've got to come up with an appraisal using these other 3 methods. So that's what we have to work with. All right, next question. You can respond to that if you want to. I'm being facetious, but I mean, that's the reason for my question.
I do want to answer it. I understand the pickle we're in here. That this is, the utility wants certainty. I think, everyone involved wants some level of certainty. This is new. This is different. We're working out the kinks, right? We've seen it procedurally in this case. We've seen it in terms of what the expectations are in terms of the information provided. But ultimately, I think subsection E gives the commission the ability, when it feels that that fair value is not reasonable, that it can adjust it. I also think we need to be a little bit skeptical of a process that essentially just pushes the price higher. Cost of service going higher does not make sense. Acquisitions going higher does not make sense for the affordability of service. I think that there was a puke point in the reverse direction for the county of how low they were willing to go to transfer this system. And apparently that number was as low as, at the very least, just having their debt offset by Beaufort. That was the offer to Beaufort. I mean, if you're going off of Draper Aiden, who they paid to do the feasibility, well, the state paid to do the feasibility study with the grant, they were willing to go to negative $2 million.
But I'm going to stop you there. But the deal didn't go through. The deal didn't go through. And so here we are.
Well,
so you can tell me what you know about why the deal didn't go through if you know anything, but I'm also mindful of time, so I want to keep
yes, I know we
here.
want to get done today, and some of those responses are in my exhibits of the county represented how that negotiation with the town of Beaufort went. We have not heard from the town of Beaufort. I didn't talk to the town of Beaufort. Maybe that's a road I should have went down. But at this point, we didn't want to look like we were meddling in terms of the agreement that has already been made and is in place currently. But I think our utilities, Mr. Denton talked about an eagerness to utilize the state revolving fund and to open up those funds. His company did not apply in the spring, where there was a record-setting award of over $700 million. They did not apply in the fall. And so there were channels for potentially funds to help facilitate either a different transfer amongst different utilities. Was Craven County talked to? Was there a reverse situation where Carteret County went to Beaufort and or Craven and said, let's regionalize?
All right, I understand your testimony, and I've talked to Mr. Denton when he was on the stand about accessing the low, no interest money that's available. But my question specifically was about the deal between, or the what appears to have been a deal between the county and Beaufort, that what we know now didn't go through.
So to your point, Chair Mitchell, that means that the low point is essentially $2 million, right? To offset their debt at the time. And so now that number would essentially be 1.5, 1.6 million to offset their debt. And it also opens up that capital reserve funds that's north of $5 million that the county also has. There was never an offer. There was never a potential sale at 1.6. They didn't even start there. Carolina Water started at 4.9 million. Now, why? Why did we not start at the lowest point possible that the county was potentially willing to transfer the system? And then we skyrocketed to a point of 9.5 million.
All right. You're asking me the question and you're supposed to be providing the
I'm
answer.
sorry. I should know
I'm
better.
kidding. Let's move on. All right, you've talked some today and you've provided us some minutes from, Carter County, commissioners meetings. And now you tell me if I've heard you wrong, because I hear you insinuating that there was some reverse engineering going on here and that the deal was struck only after rates were established that were satisfactory to Carolina Water. Is that the nature of your testimony, or is that what you're trying to get? Is that what you want me to hear?
I am laying out a progression of events that would suggest that at least influenced to some degree the county raising its rates. I can, that's the only thing I can deduct from the set of information in those minutes and watching it and the process that played out, that they were not going to adhere to the rate hold after already representing that they would, when they realized that a 24, the rate was, it was 27.50 for a base charge and 6.90 per 1,000 gallons, which is pretty close to the ballpark of Carolina Water's current rates, lower on the usage charge. But again, this is a process to just push the purchase price up.
So are you saying, I want to be clear
Okay.
on what, to make sure I understand what you're saying. Are you saying that the county raised the rates in order to get Carolina Water to agree to go through with the deal?
I can't read their minds. All I have is the information that was in the board minutes, having watched some of the meetings, of the progression of events. The $9.5 million offer was in April. They start negotiate, they're starting to negotiate and work through this. The county should have raised rates. And I think there was discussion of, should we be building a reserve? What if this doesn't go through? But I think there was also an influencing factor of they weren't going to do the rate hold. So what do we get the rates to that they will agree to the rate hold? And so you jumped them up 95%, and then you're like, ugh. Yeah, people didn't quite appreciate that. That might have been a little extreme. We might have been going on a little bit of a whim, and they dropped it down 25%. And then in September, the 9.5 is accepted. And then all of a sudden you have a contract in October. So things moved real quick once all that had happened.
So you're just connecting dots. You don't have any information beyond those dots that you've connected that add to your understanding of the events.
That is my understanding
Okay.
of the events between the board minutes, the progression of negotiations and the information we had.
Okay, all right. You are more in the weeds on municipal finance than I am, so I want to make sure I understand this one point. You said that you referenced in your testimony today a capital reserve fund, and you said additional capital would become available to the county. What does that mean?
So they're required to have certain reserves, and if you look, so from their 2023 budget, which is publicly available, for the projected fiscal year 2022, they showed actually a gain, which now fiscal 2022 included the high rates in July of 21, and then the decrease in September, and then forward, those charges forward. So that the income ends up into this reserve fund, which is approximately $5.8 million. There are certain restrictions of what they can do with those funds. When it's my understanding, once they sell, if they were to sell the water utility, that then they can appropriate those funds. Now, I don't know exactly all the restrictions there. I'm not a municipal employee or a county employee, but that is my understanding.
Okay. All right. Last thing. it's hard for me to reconcile your testimony with the appraisal report and recommendation that the public staff's appraiser has made and has provided to this commission. I don't even think you mentioned your appraiser's testimony, and I'm not sure Ms. Fiesel does as either. So, what are we to do with the fact that you have an appraiser that gives much more robust valuation to the system than you recommend in your testimony?
So correct, but the discrepancy between myself and Mr. Lane is less than the discrepancy between Mr. Lane and Mr. Walker.
Oh, all right, but that doesn't
So,
answer the question.
I mean,
You're just
and-
pointing out something.
and to Mr. Hartman's point, this is not a made as instructed. We didn't tell Mr. Lane, you need to get to this number. This is what we think is a fair value. That is Mr. Lane's representation of what is a fair value. Did we give some input on what is reasonable? Did we have him run the alternative at Carolina Water's return on equity? Yes, we did, but we did not dictate his analysis. And ultimately, I mean, I referenced the average of the three. Now, is it up to the commission if it deems that the average of the three is not reasonable? Could they choose one appraisal number and say, that's the magic number. We think that was the best appraisal. It's probably within, yes, that is, I think, in the commission's authority. I think it's also within the commission's authority to set the number at 2.4 million. And I think that is the right answer here.
Okay. One last question, then I'll stop. If the commission were to accept your recommendation of the 2.4, what the 2.4 thereabouts that you recommend, do you think the deal will go through?
It's ultimately up to Carolina Water. I probably doubt that it will go through.
Okay. I have nothing further. Thank you.
Mr. Junis, there was one piece of your discussion with Presiding Chair Hughes that I'm not sure I followed. And so I want to walk back through it again to be sure I've got right what your position is. And so for purposes of the question I'm going to ask you, I want you to completely forget subsection E of the fair value statute. Wipe it out of your mind. Okay? Forget it. The question I want to ask you relates to B1D. And he asks you some questions about your position with respect to B1D, which says the original source of funding for all or any portions of the water and sewer system assets being acquired is not relevant to an evaluation of fair value. I understood you to tell him that you thought that was a directive with respect to how the appraisals were to be performed. Is that correct?
Yes, sir. So
That's your position.
it is a subsection of B1. It's B1D, and I think it is a restriction of the appraisal.
On the appraisal.
Not the commission's authority.
All right, and that's what I want to be sure I understand. Is it the public staff's position that for purposes of the appraisals, that's an irrelevant factor, and we determine fair value based upon the appraisals without consideration of that? Forget E. We then take the fair value we determine into rate base, and in the next general rate case, we could apply traditional rate-making principles and reduce the rate base we've taken in as fair value by the amount of CIAC. Is that the public staff's position?
No.
All right, then tell me exactly what your position is
I'm
without
sorry.
regard to E.
Correct. So if ultimately that average of the appraisers, of the appraisals was the lesser of the purchase price and the average, then the fair value would be utilized. If the commission accepts it as reasonable, then that would be rate base. And to your point, CIC would not be a factor.
In the subsequent general rate case.
Correct. Under those very specific assumptions that the fair value is those average of the three, which is less than the purchase price. We don't have that in this situation.
Okay, I think I'm following you now, so let me ask you one final cleanup. Is so the way you get to 2.4 is you have to bring us back to E, right?
Yes.
Got it? Thank you. I just want to be sure I followed it very clearly how you were moving the pieces around on the chessboard.
Thank
Thank
you
you.
for the clarification.
Commissioner Duffy.
Good afternoon. So you had several exchanges with Mr. Wheatley, one of which was you were about to go into the 5 options the county could have employed to dispose of the property. And I feel like you were not able to fully answer that line of questioning. So if you will, go through Article 12 and answer that question.
Yes, so there is typically 5 methods of sale. They are private negotiation and sale, advertisement for sealed bids, negotiated offer, advertisement and upset bid, public auction, or exchange. It is my understanding that this transfer would exceed the threshold, so it eliminates the option of a price negotiation and sale. That is option 1. It is very unlikely that you would be able to utilize an exchange. That is option 5. And so you would be limited to sealed bids, negotiated offer, advertisement, upset, and a public auction.
And do you know why the county used the third option, negotiated offer, advertisement, and upset bid versus advertisement for sealed bids?
I don't know. I do know that that was basically the only option discussed in that meeting when they decided to accept the initial offer and push it to upset bid. I do not recall any discussion of the other options during that Board of Commissioners meeting. Doesn't mean that the county didn't talk about it before then, but that's the only thing that was discussed in that Board of Commissioners meeting.
Okay, thank you. And then I'm also going to give you one more opportunity to respond to a question. Mr. Wheatley concluded his cross that the public staff's position in this case, if accepted by the commission, means, and I'm quoting Mr. Wheatley, we can't get our money. What's your takeaway from that statement?
You know, ultimately it is up to Carolina Water if the rate base was set at 2.4 million to still proceed. They still have an opportunity to transfer this system. They can reopen the process. They could decide, basically restart. They could try a sealed bid process. You know, this can be negotiated down. They have options to go about this if they really do want to sell the water system.
Okay, thank you. I don't have anything further.
Commissioner McKissick.
I think Chair Mitchell covered basically many of the questions I had in the back of my mind, but can you kind of explain, kind of at a 30,000-foot level, the difference between a troubled system and a financially distressed one?
So it's discussed a little bit in my testimony, but troubled gets into, it's not just the financial piece. Troubled gets into compliance, condition of plant, and basically an inability to get back to compliance or financial health on its own. We have seen these situations for different utilities. A lot of times these are examples where an emergency operator is necessary. So the distress is specific to the viable utility reserve that was statutorily set up to be managed by the Water Authority and the League of Municipalities,
And in that
the Local
viable-
Government Commission. I'm sorry.
And that
I was
viable
getting-
utility reserve would be open to the county at this time. But I think you asked earlier, how might they utilize it and for what purpose? Could you state a little bit more clearly what you think that could bring to them?
Yes, so I mean, there are potential monies to facilitate the literal transfer potentially purchase dollars that could go through the state funding programs. DWI has really expanded its programs, especially specific to the utility reserve. They have a special fund only for the distressed systems, and then the distressed systems are also prioritized for funding.
And you would see this as a viable option for the county to pursue?
This is assistance. You could look at regionalization study. You could look at potentially a transfer. If there were an unexpected capital need, they could be applying for those funds. I don't know exactly what they applied for, but it is my understanding that they did apply for funds in the fall application period.
Okay. And in terms of troubled systems, I think when Chair Mitchell asked you about it, the way you see the statutory provision here, you reached the conclusion that basically you did not have to be a troubled system to fall underneath this section 62-133.
It does not have to be troubled. Troubled, I think, would be when we're looking at priorities and potential ideal cases and test cases, I think a troubled system would be towards the top of that list for sure.
Do you think that's what the General Assembly had in mind when this was enacted, or do you have an opinion on that?
I mean, based on the documents available to us, including the position of the companies and the legislative summary, it appears that the intention was where there is a need for capital investment, where there's a need for expertise, where there is potentially a compliance issue that needs addressed. And we're just not seeing those needs with Carteret County.
And I believe in your testimony, you state that the condition of the system is good. You didn't identify any deficits or any problems with it. Is that correct?
That's correct. The system's in good shape. The tanks are on a maintenance plan with Southern Corrosion. And that is corroborated with the Draper Aiden report. And it's corroborated by the company's representation that they have no major improvements planned in the first 5 or 10 years of ownership of this system potentially. But I think this sort of ties back to sort of a pragmatic Christmas gift. Is it a need or a want? And this acquisition looks like a want that is highly costly.
If the sale were to go through, the county would realize a substantial gain on this transaction. Is that correct?
Yes.
And I gather there were a substantial portion of the funds that went into the original construction of the system that were grant funds.
Yes, sir. So the best summary of that is Junus Exhibit 4, which breaks down the infrastructure by funding sources, and that was provided directly from the county.
And how much of it was grants?
So when you're looking at grants, there's a total, so the plan additions that are listed in the schedule total just south of $12 million. We'll just round it 12. 6.5 million was from grants, so over half.
I don't know if you would know the answer to this question or not, but based upon the conditions that were attached to those grants, if there were a sale of a system within the time frame which has passed, would there be any kind of requirement to pay back any of those funds?
I don't know the answer to that question. Mr. Foxworth might know that on rebuttal.
And I believe early in your testimony, your verbal testimony today, you expressed some concern about if we were to approve this transaction, that it would not be perhaps as consistent with what this fair value provision anticipated.
When you talk about the premium that's being paid, I do not think that this was sort of the ideal test case for fair value. It clearly is devoid of the word market with the exception of the appraisal approaches, which there are 3 accepted and one is the market approach. It does not say the fair market value statute. To open this up to market acquisitions is sort of the opposite of, these are regulated monopolies. So which is it? You can't have it both ways, because if you're setting market value for acquisitions, what's the next step? Why don't they get the statute for IOUs, purchasing IOUs? And we start just totally reevaluating rate base and establish a new fair value. We're undepreciating assets, essentially. And what does that do? It only pressures rates up. It doesn't benefit the quality of service to customers. Because you're not paying for improvements, you're paying for what you already have.
Thank you. I don't have any further questions.
Commissioner Kamari?
Yes, Mr. Juice, I'm going to try to be quick. I think I've got 3 questions. The first one relates to questions that were asked by Chair Mitchell and Commissioner Clodfelter about subsection E of the statute, and then also is related to subsection B1D. And so I just want to make sure that I'm clear about your reconciliation of those 2 provisions. Because you stated that if the average of the 3 appraisals, if the public staff or the commission believes is to be too high, the commission has the discretionary authority to determine a reasonable fair value. And you said that could be done on a case-by-case basis, but we don't have an actual standard for determining that. And I think that the standard that you're proposing is the original costs, or at least in this matter, the original cost less depreciation and CIAC would be the standard that you're proposing.
So that is one approach, and that's the approach that I weighed basically 66% or 2 times. And then I did sort of a comps analysis of what do we already believe is reasonable in terms of cost of service. And that would be the weighted average of the rate base per customer of Aqua and Carolina Water, the 2 parties that participated in the bidding process here.
Correct, but the majority of that number comes from the original cost.
Yes, Commissioner Cameron.
And so what I want to understand is your position about the subsection B1D, which is a very clear limitation on the valuation for clearly the appraisals of using that original cost. And is it your position that that prohibition on considering original cost of the system is only for the appraiser's valuation, but the commission is in no way bound by that prohibition? Is that how you kind of reconcile these 2 provisions?
Correct.
And think that we have the ability to consider original cost?
Yes, I think you had an original version of this bill that did not include this language in E, and that is a significant safeguard. And if it is limited in that fashion, then I don't think it provides the protection that we were envisioning or anticipating when this was a bill sitting before the legislature.
And do you think it's problematic that subsection E doesn't affirmatively state that, because it's a prohibition earlier in the statute, that it doesn't affirmatively state that the commission can in fact consider that original cost in determining reasonable fair value?
I think it would be just the same as if there was intended to be these restrictions. Why doesn't it say in consideration of parts 1B, B1D, or those other limitations? I don't think that the commission is held to that.
Thank you for that. And I've just got two more questions, I think. One deals with your testimony about potentially standalone rates for this Carteret County system. Hypothetically, if there was a consideration of having standalone rates for those customers, would the public staff's position about its recommendations of denial of the system and also adjustment of the purchase price, or excuse me, the fair value to about $2.4 million. Would that change if we were talking about standalone rates?
The testimony states that we would recommend, our first recommendation is denial. Because if you look at standalone rates, that those are not just and fair rates. When you think about just the basis for the way those rates would be set, those are not affordable, they're not reasonable. And what benefit did these 1,200 customers receive to now have their bill tripled? Well, under the old rates, now it would be less than doubled, but
So in other words, your recommendation would remain the same.
yeah, now you do get into the outcome of this case impacts then the sub 399 CPCN application. So the fair value could be set and then a CPCN application be denied.
Well, I think I won't go there at this point. But last question relates to the Draper Aiden valuation of the assets. And I think your testimony is that you disagreed with the valuation and that one of your concerns about it is because the 3 appraisers relied upon that valuation. But even Mr. Lane, the public staff witness, he didn't directly challenge that valuation in his report, did he?
He used the Draper Aiden to allocate the Carteret County's original cost less depreciation. He did not use the 12 million as the basis for his income approach. So yes, we can accept the pools of assets, but we don't accept the valuation of those assets. And I think it's also important, Draper Aiden didn't even consider the capacity issues here. You have potential for an excess capacity adjustment. There are 3 elevated storage tanks totaling 600,000 gallons for 1,200 customers. This system currently provides fire protection. It's my understanding those ratings depend on the distance from those sources. Is Carolina Water going to provide fire service and at what cost premium potentially? So there is still room for adjustments here on the system. There was not growth. Who took on the risk of growth here? The county, utilizing a lot of state funds. And so if Carolina Water buys this system, they are also taking on some of that risk of having this large sprawling system, which has a considerable amount of non-revenue water. There's a cost to non-revenue water. I don't see any projections of what those costs are on an operating expense level. So there are additional complicating factors, even if you accept a fair value of 9.5, should there be an excess capacity adjustment.
Yeah, I understand. And last question, though, is going under the assumption that you disagree with the Draper Aiden's valuation, did you provide anywhere in your testimony what the public staff's recommendation was about what we should do about it? If the underlying assumption of valuation you believe is wrong, is there a recommendation that was provided?
So that gets into the different approaches in the appraisals, and then you are really getting into sort of a nickel and diming the appraisals. I'm not an appraiser. I shouldn't be trying to nickel and dime the appraisals that were done. We thought that was basically a losing effort in terms of trying to get to what is a reasonable fair value. I pointed out a number of concerns I had with the approaches that were taken and the underlying assumptions. Clearly, there was not a lot of rebuttal testimony addressing those issues, but I think that this commission has asked a number of important questions regarding those appraisals.
Okay. Thank you very much.
Okay, I think Chairman Schultz, you had another.
All right, Mr. Junis, I'm following up on the conversation about standalone rates, and you were emphatic that you didn't, your position is standalone rates wouldn't be just and reasonable for those customers. Um, help me understand, though, how I reconcile the fact that these customers have paid rates for the years that this system has been in service, plus have benefited from, um, the system has been supported by revenues generated by funds other than those received from customers. I mean, the customers have benefited from not paying the full cost of service for this system. And so when you say not just and reasonable, rates that actually cover the cost of service aren't just and reasonable. Help me make that leap.
So I get where you have the tax district subsidizing. These customers also are paying that tax. Now, obviously, there's another pool of people that aren't customers. Now, some of which can be customers and have chosen not to be. But
Well,
all-
and North Carolinians and maybe even federal taxpayers have paid for this system too, right? I mean, so
Correct.
just sort of help me understand how rates that approximate or cover the cost of service aren't just and reasonable. And I mean, it's a decision that the county has made, right? To have their constituents pay rates that ultimately will cover the cost of service. How is that not just and reasonable?
So you're referring to essentially putting the 9.5 and all the fees and associated into rate base that then pushes rates north of $100 easily. My comment that I did not think that those were just and reasonable.
So my question specifically is, let's talk hypothetically about a standalone group of customers, because the statute gives us that right. And I understand that right as one way to mitigate impacts to the rest of Carolina Water customers, or perhaps just establish a just and reasonable rate class. But so what would happen here is you'd have these customers who had been customers of the counties become customers of the utilities, and they would be paying for the costs that the utility incurs to provide service on that system.
So
How is that not just and
if
reasonable?
the commission puts that cost into rate base, technically those rates are just and reasonable. I have serious concerns about the fairness of those rates and how we got to that point. And I don't think we should get to that point.
But why is that this commission's concern and not the Carteret County Commission's concern?
I mean, it should be. I mean, there are all these claims about they are the best to decide the public interest of their 1,200 customers, but they're trying to give away, well, not really give away, sell it for an abundance of money, those 1,200 customers. So they want to get rid of them. And so how do they have the best interest of those 1,200 people in mind when they're making this decision? Ultimately, they are looking out for the county as a whole. But to suggest how did we get here? They actively chose to set rates too low to cover their cost of service. That's their fault. That's their responsibility. And they should not now be rewarded for doing so.
So so you or the public staff would have this commission evaluate public interest from the standpoint of those, because we have the right under the statute to consider a standalone class, then we're focused on the public interest of the acquired Carteret customers.
Yes. So, I mean, we evaluated both.
Do we have that authority? I recognize you're not a lawyer, but do we have the authority to think about those customers that aren't at this moment jurisdictional?
Yes, I think you do have that authority we evaluated whether it's on a standalone or a uniform basis, because ultimately it is the commission's discretion to decide one way or another. And that is the case in other transfers of an IOU to an IOU, or even a CPCN application, to decide whether those rates are standalone or uniform. But the analysis ties back to the acquisition adjustment of, is there harm to both or both the acquired customers or the existing customers?
Okay, all right, thank you.
Did she ask your question? Okay, Commissioner Gladfelter.
I'm going to ask you the question, and you have permission not to answer it. And I will respect if you don't want to answer it, but it's been gnawing at me as I've been listening to you, and you finally touched on it. So since you opened it, I decided to ask the question. So I listened to you, and it sounds to me, or the feeling, I should say, I have about many of the positions that you've articulated on behalf of public staff are that those are positions that go very strongly to the question of whether it is in the public convenience or necessity for this transaction to occur at any price. Is it public staff's position that this is a valuation proceeding? We will later have a decision about whether to approve this transaction at any value. Is it the public staff's position that we can set a value here and then later deny the transaction in the public convenience and necessity? Or must we consider those factors now under subsection E if we're going to consider them at any time?
I think this commission can deny the CPCN application at whatever value. Now,
even if we refuse to exercise our subsection E authority, and we've had the issue in play, you've put it in play before us. The parties have debated it in front of us about what we should do under subsection E, and we say, all right, we're not going to follow subsection E. We set a value, and we come then later to the CPCN proceeding. We then sort of raise the public interest flag at that point and say, sorry, no dice. Can we do that?
I believe so, because otherwise these two evidentiary hearings should have been joined, and I should have had testimony addressing both.
Well, again, you don't have to answer that, and I respect that, but many of the considerations you articulate go very deeply to the question of whether it's in the public interest for this transaction to occur at all.
Right. I mean, subsection E is, I recognize it. It is a complicating factor here. But yeah, I believe that you have a CPCN proceeding that still has to happen with testimony specific to the CPCN.
Public staff would look at the other side of the room and say to them, regardless of what the commission decides today, we're going to be back in here arguing this issue next spring.
Not arguing what the dollar number is.
Arguing whether this transaction serves the public interest, convenience, and necessity.
That is correct.
Thank you. As I say, you didn't have to answer, but I appreciate your answer.
And we'll see if I get kicked for that answer, but that is my understanding.
Okay, Commissioner McKissick.
I guess following up on your comments a little earlier about excess capacity. Because you do have 3 elevated water storage tanks, each holding 200,000 gallons each. How much capacity would you estimate or approximate would be needed for a system that's providing water service to roughly 1,200 homes today? You can take a minute and
So if I recall correctly, the max daily amount for 2021 was 351,000 gallons. So that is essentially 2 tanks worth. So that would potentially put into question a 3rd tank. Now you have quality of service considerations here. But ultimately, you have 600,000 gallons of elevated storage, plus you have contributing wells that would supply the system. And then you have emergency interconnects. So, I mean, there is a great level of redundancy here. In terms of the minimum requirement of elevated storage for a municipality, that's 75,000 gallons when you get into the administrative code. So, yes, there is real engineering implications of what do you need? But I think a contributing factor here to those elevated storage tanks was fire service. And is Carolina Water continuing to provide that, and at what cost? Is the system designed to provide fire service?
And that's not been answered anywhere.
Not to my knowledge. And I mean, again, this is an abbreviated process. We put as much time and effort as we could into this. And we tried to uncover as many stones as we could, but you had to pick your priorities of the arguments you were going to make. And unfortunately, that was one that didn't get further developed.
Thank you.
Commissioner Duffy.
So I wanted to follow up on Commissioner Clodfelter's question with respect to the CPCN process. And you don't have, again, don't feel the necessity to answer, say I can't answer based on my question. But so let's take a hypothetical that we went with the fair value of the average of the three appraisals. In the CPCN case, could we, or is it your understanding that it could be denied based upon that amount and comparing it, doing kind of a cost benefit public interest analysis?
Yeah, I mean, I do not see any prohibition in 62-133-1A that addresses 62-110, that all of a sudden becomes null and void in terms of those considerations. Those are separate sections of the statutes.
And then my second follow-up is with regard to the excess capacity. When is, I mean, should that have been brought up in this proceeding with respect to the valuation versus moving? So the question is, again, hypothetically, you have fair value, we set it 9.5, but then in the next rate case, there could be excess capacity adjustment.
The timing is certainly complicated. I don't see any where that wouldn't be allowed. I get that that would be troubling for the utility to now have a new argument tossed at them. But this is the regulatory construct that exists. I'm raising that concern right now, and they have made no effort to justify the design of that existing system. In terms of burden of proof, yeah, it's there. It's providing service, but is that a level of service that goes beyond the requirement and is contributing to the cost premium potentially being paid here?
Okay, thank you for that answer.
Okay, let me make another call. Okay. Going once, going twice. Okay, let's move to questions on commission questions. We're going to start with the company and then go to the county and then public staff.
Okay, I think I'll pick up with where we just left off, the overbuilt plant possible adjustment down the road in another rate case. You know, a lot of this is a legal argument and maybe best addressed in proposed orders. But if you know, Mr. Junis, is the legal basis for an excess plant adjustment under the theory that it's not used and useful under 62-133?
So it's my understanding, yes.
And that's not the same as 62-133.1A, is it?
That is correct.
There's no used and useful standard in the fair value rate-based statute, is there?
So I would say that there have been excess capacity adjustments that are made in rate cases after rate base has been established, either as part of a CPCN or a preceding rate case, is my understanding.
I was going to leave this, but I got to ask, if rate base was established initially, and then in a later rate case, an excess plant adjustment was made to that same plant. I'm lost as to how that happened. Maybe you can help clarify.
So, I mean, I'm working off recollection here, and we've gone astray to what I was anticipating this afternoon. But I can think of, I think it was past aqua rate cases where an excess capacity adjustment was made and is adjusted and updated after a preceding rate case where there wasn't an excess capacity adjustment.
Okay, I'm not going to test you on the case law on that. And I do have a couple of questions which frankly are just for clarification. I wish I knew the answer. One, I thought I heard you respond to two commissioners that the Draper-Aden valuation of roughly 12.3 million, which their original cost, as they did it, what did not deduct accumulated depreciation.
A portion of it did not.
Okay.
Because there's two different tables. There's one table that does, and there's one table that does not, that represents that it's a present value, present book value, I believe.
Well, one of those tables includes real estate, doesn't it?
But it's not just real estate. It includes pipe and other infrastructure.
Right. So you wouldn't have depreciation on pure real estate, would you?
Correct. So land
Okay.
is not.
So I'm looking at Draper-Aden's report here. I've got MGL-2, page 67. And I can provide you with a copy if you don't have that number. And it's section 3.0 of the.
Yeah, I mean, I have that. You're referring to the original feasibility study?
Yeah, there was an update, but this is section 3.0 in that.
Yep. All right.
All right, and it has this 3.1 theory of asset valuation up there in the heading under estimated value. Are we in the same place?
Yes, sir.
Okay. And they say down there, present book value of asset equals historical cost minus accumulated depreciation, right?
Right, and that's nowhere shown in terms of, it's just a number that shows up in the table. And then with the update, the valuation goes up. So clearly that is not original cost less depreciation. If somehow the cost is now going up.
That could have been updated for increased added assets.
So, but was the increase for added assets? Because I don't think it was.
Okay, well, I just, when I looked at the Draper-Aden report, and really I'm asking it indicates right here their method for hitting the present book value of the assets is to subtract accumulated depreciation, and you're telling me they did not subtract accumulated depreciation. I'm trying to reconcile this.
I think that is shown in table 7, but they do not do that with table 8. So I see no representation of accumulated depreciation.
So table 7 did included some
Right, and I
deductions for
I
depreciation.
didn't say I disagreed with table 7.
Right.
I explicitly said the $10 million that shows up in table 8. I think I referenced the $10 million
Right.
when I answered.
And do those numbers there in table 8, are you understanding the present book value cost of the asset in that far right column? Was that the original cost without depreciation subtracted?
That would, this valuation done by Draper-Aden seems to match the system cost that shows up in my other exhibits, such as Exhibit 3, but not less depreciation.
Are you sure of that?
Am I sure that?
I mean, you said it seems, and so I just wanted to
Oh,
explore that
okay.
further.
So like Exhibit 4, for example, shows an investment of $12 million. This includes the major three phases of the system that were all installed basically 2000 forward. And that total cost is essentially $12 million. Now, when you apply accumulated depreciation like the county has in its records, it's over half depreciated. And so that's how you get down to the $5-6 million range. So
Okay.
that's where I absolutely disagree with the Draper-Aden valuation. Why not just use the per book when you have accurate per books and plant that is relatively recently installed?
Could it have been because the engineering cost valuation is a different methodology from the financial books methodology?
And again, this was not a requirement of the feasibility study. And so what was the purpose of this valuation done by Draper-Aden?
Okay, well, I'll honor you answering a question with a
Oh,
question.
I'm sorry. I mean, I have concerns about
I understand.
why this analysis was done and then the impacts it has had throughout this process.
So moving along, you noted in response to commissioners a couple times you had asked and answered twice for quantification of savings from the company, and they said it was not quantified. Is that right?
Right, that they gave a qualitative response, and that is exhibits, I believe, 1 and 2 of my testimony.
Right, and yet I do want to ask as follow-up on that, if you know, has the company provided cost estimates, including salaries, in its sub 399 filing?
Oh boy, I don't have that with me. Typically, a CPCN application has a representation of cost of service, but sometimes it depends on, are they,
If you're not sure, we can leave it at that.
yeah, because sometimes it shows basically the seller's costs that are not representative of going
Right.
forward, depending on how the application was.
The
put
record
together.
in that docket will reveal
Right.
what it, okay. Okay. You recall, I hope, and if not, I can point you to the page, the appraiser chosen by the public staff stated that his goal in issuing an opinion on fair value was to get fair market value. Do you recall that, or would you agree with
I'll
that?
accept subject to check. We
Okay.
don't need to run there.
There's an amount for the book value on the county's financial books for the original cost of these assets. Do you understand that that is calculated differently from the original cost less depreciation method used by appraisers? Original cost less depreciation for bookkeeping by the county is different from original cost less depreciation used in appraisal analysis.
So I believe you asked this in cross, and I think I answered that I'm not representing that I'm an appraiser, and nor do I have to adhere to their standards. And so
Right.
I'm not going to speculate. I don't know the answer to that in terms.
Well, let me guide you towards an answer. The original cost less depreciation amounts put into evidence in this case by the appraisers is different from and higher than the county's book amount for that, isn't it?
So I am familiar with some of the appraisals, like Mr. Hartman's. His number ends up very close to that valuation done by the engineer and does not, while Mr. Lane does seem to rely on that original cost less depreciation. So I think there's a difference of opinion in terms of how that process works.
When you say a difference of opinion, how the process works, I didn't follow that.
So I think in terms of what assumptions and what values are used by the appraisers. Clearly, you had a range of outcomes, so there was a clear difference of opinions there in terms of what those assumptions and inputs were.
But my question is not the difference between the appraisers, but the difference between appraiser methodology and that used by the county for its bookkeeping.
Correct, and I think I was pointing to that the appraisers took different approaches, and one did utilize to some degree the county's bookkeeping.
Which one was it?
I mean, Mr. Lane's schedule where he uses the 5.9 million.
I believe that shows he used it from the county audit based on the allocations from Draper Aiden Associates, right?
Right, but the original cost, he doesn't use
I understand.
dollar numbers from Draper Aiden. He uses an allocation of the assets and the depreciation. Because
Okay.
he's doing a forward analysis of the assets.
Thank you. That's all my questions.
Mr. Whaley?
Questions?
Mr. Junior, just have one question. Let's say a reader is skeptical of your reading of source of funds. And this is the only question. Irrespective of source of funds, you stated a moment ago that you have, irrespective of race to the top bidding, how everything is played out, you have issues that the initial kind of put forward fair value here is reasonable and appropriate because of the design of the system you talked about in response to a question and the future cost of funds to ratepayers. Isn't that the case?
Yes, that's correct. So, the starting valuation of what set sort of an expectation for potential buyers. And then going forward, the cost of capital in terms of this purchase has a material impact on customers of what they're going to pay for here.
That's all.
Okay, I think that brings us to the end of Mr. Junis. Do parties have any motions at this time?
Yes, please. We'd like to ask that we'd like to move Mr. Junis's testimony as well as his exhibits into the record. That's 37 pages in Appendix A and 7 exhibits marked Public Staff Junis Exhibits 1 to 7.
So moved.
We'd also, I think I neglected to enter, if I may, yesterday, it was the redirect exhibit for Witness Lane. It was marked as Public Staff Lane Redirect Exhibit number 1. I'd like to move that into evidence as well, please.
Okay, so moved. Okay.
Public Staff has, that concludes our testimony.
You may be released. Thank you, Mr. Junis. Okay, I think we have, we are now going to move to the rebuttal phase.
Yes, sir, and I realize the lateness of the hour. I understand there's going to be some other witnesses. I have Gene Foxworth with me and also Dee Mishaw. And there are certain questions that have been risen over several things. One, the ability to give grants. How did the water rate get raised? And these sort of issues that if we wanted to go directly in them, let staff start asking questions and get clarification. I certainly have no problem in trying to get out of here today. But I'll do it, whatever y'all say. Okay, he's here ready to testify.
Well, we expected to hear from Mr. Foxworth. I mean, that was, so if you're saying that for sure, we are happy to entertain.
Well, sir, if that's the case, I'll call Mr. Gene Foxworth to stand. Just summary in.
Okay. Do you swear? Do you swear that the testimony you are about to give shall be the truth, the whole truth, and nothing but the truth? So help you God?
Yes, sir, I do.
Thank you.
May I proceed, sir? State your name.
Please introduce your witness.
State your name, please.
Gene Foxworth,
And what's your address?
210 Turner Street, Beaufort, North Carolina.
What's your occupation?
I'm the assistant county manager for Porter County.
And in that capacity, have any dealings with the water system that exists in Carter County?
Yes, sir.
And what is that?
I have oversight of the water system under the operations division for the county.
Have you made a summary of your testimony?
Yes, sir, I have.
You have it in front of you?
Yes, sir, I do. You give me a second to find it.
Did we file this?
No, we just hand it out here. If you want, I'll go ahead.
Please, sir. Please, sir.
Keep copies for yourself.
Yes, sir. Yeah.
Yes.
I need one too. Thank you.
Mr. Foxworth, in front of you, do you now have a copy of the summary?
Yes,
of
sir,
your
I do.
testimony?
Yes, sir, I do.
And did you prepare this testimony?
Yes, sir, I did.
If you would, please read the summary into the record.
At this late game, we can enter the summary into the record without it being read.
Thank you,
So
sir.
it will be recorded as evidence. So,
Thank you.
but you can go ahead and make a motion to,
I move that the summary be admitted into evidence, if I may, sir.
okay, it will be admitted. And the pre-filed, have you made the motion yet for the, okay. So the motion to admit the pre-filed rebuttal testimony of Eugene Foxworth on behalf of the Carteret County consisting of 4 pages into the record as if orally given from the stand is granted. In addition, the motion to move the testimony into the record is granted.
Thank you, sir.
Excuse me, the testimony summary.
May I proceed in asking other questions not contained in the summary?
We would have, you know, we
Somebody's
would
gonna
object to
have if I
that.
don't.
Hold on just a second. I'm gonna. But before you repeat your request, you realize that there will be there will be commissioner questions, and then you do have the ability to do redirect and also address commissioner. We don't typically have an extended question period at this point, but I just want to make sure that you know that there will be some opportunities. But
Well, that's no problem. I'll be glad to do that and see, but as long as I can preserve, because Mr. Janis has said certain things with regard to county activities that those issues need to be addressed. If the attorneys don't address them or y'all don't address them, I'll reserve the right to talk to them about it. Thank you, sir.
okay, we'll proceed that way. Witness is open for cross. Public staff.
Is the company not going to, are you going to cross first? Or do y'all have any cross? You do not. Okay.
Yeah,
Then-
I'm
then
sorry, I
we'll
understood they
make
did
this
not.
quick.
but-
We have 2 public staff Foxworth rebuttal cross exhibits. One is a map, and then the other is a response to public staff data request number 11. And those are being handed out right now, effectively in a packet, so hopefully somewhat efficiently. And then let's get a copy. We'll get a copy to you as well, Mr. Foxworth. Now, Mr. Foxworth, just so we can go ahead and get these marked. Oh, sorry. So we can go ahead and get these marked. Are you familiar with the map here that show phases?
I am.
Okay. And that's a map that you provided to the public staff, I think, in response to questions about the phasing of the system itself.
I did.
Let me take one step back and say that as an introductory matter, whatever Mr. Grantmeyer said effusively for Mr. Denton, we share that as well. Working with you in your office has been exceptional in terms of your demeanor in the whole scenario. So
Thank
really
you,
appreciate
and
that.
vice versa.
I would like to mark this map as Public Staff Foxworth Rebuttal Examination Exhibit number 1, if I can, please.
Let it be marked.
And Mr. Foxworth, if you will, just for a moment, say what these phases represent and then when the phases were built.
I will tell you to the best of my knowledge.
That's
Of course, I wasn't working for the county when they were built, so
Yes,
I
sir.
only know what I've read. So these represent different phases of the Carter County water system. I think it's phase 1, 2, and 3. They're labeled here on the map.
Right. And do you know when the system was when various phases were built or how old they are?
Phases on the east side of the map, they're labeled, I believe it looks like phase 3 or phase 2, and then phase 3 were some of the first, phase 2 was the first part. That was a small part of the system. And I think it was built maybe in the late 80s. The others were built during the early 2000s. And
All right. Very good. And then let's move on to the second exhibit here. This is Public Staff Foxworth Rebuttal Cross-Examination Exhibit number 2. And it says it's Public Staff Data Request number 11. And I'll ask you a couple questions here as we get started here in advance of this. First of all, there are no environmental issues or other violations with the system that you're aware of, are there?
no, sir.
And of course, the county has the right to enter into the contract that it has with Carolina Water. If it wants to sell, it can sell. And if it wants to contract, it can contract. That's correct.
Yes, sir.
The reason why I have this data request in front of you is because we know that in your testimony, you say, and plain folks might agree, that the local county government is keeping in mind the public interest, the local folks there. Isn't that correct?
It is.
And but you would concede that there has been some opposition to the transfer, and it's reflected in a 4-3 vote. And regardless of level of opposition, there has been some opposition down there, has
Yes,
there
sir.
not? Okay. And so the reason why I attached this, we asked for, and y'all provided a copy of any petitions that you received. And so you'll see here, and the reason why this is an interesting data response here is because we sent the data response and the Carolina Water answered part of it, and then the county answered part of it. And so you'll see that on the first page here, page 1 of 3, below the topic rebuttal continues as CWSNC responses are incorporated below. Response from county will be provided by the county. Okay? So the first 3 pages are responses from the company. And then we go to the next page, which says page 1 of 2, and that's where it says the topic is rebuttal continued, and these were the county's responses, 1 of 2 and 2 of 2. And then we get to the petition. And so do you recognize that petition, Mr. Foxworth?
Yes, sir.
All right. And this is a petition of presumably based upon sending it to us, folks in opposition to the transfer, is it not?
I don't know whether they were in opposition of the transfer. I understand this petition was passed out in several locations. It simply says save our water. It could be the ocean water, it could be the sound water,
All right.
it could be the Carter County water system. I'm not certain.
That's fine. That's fine.
Yes, sir.
On one of the pages, it does say, and I think it's the 1, 2, 3, 4, 5. I guess it says, don't sell our water petition. It says, don't sell our water petition. Maybe the 6th page there. I don't know if that means water system or.
I see it. I
Okay.
see it. It's good too.
Well, just for the, so folks put in their name and they sign, they put in their address, they put in their email address, they put in their phone number, didn't they here?
It does appear so. Yes, sir.
And they even went about signing, right?
Yes, sir.
Okay, very good. All right. Let's move on here if we can. There was, one of the clarifying questions I think that have come up, and you talk about the bid process here and the funds that will be received from the county. What about, and you talk about how you and Draper Rating came into discussions. How, in the Draper Rating report, and we've got about 3 different copies of it, there's reference to the water fund and $5.8 million on that. Can you, what is that water fund?
Ms. Michelle is here, our finance director and other assistant county manager.
All right.
She would be more appropriate to answer any of these questions about finance on this.
All right, all right. Can you take it, well, understood, just one clarifying question. Do you have any expectation that any of those funds, if they're not paid back to government sources and et cetera, could be available to the county after the closing? Do you know that?
I don't know.
Okay, very good. All right. So, I'd like to set up for you just quickly if I can. Obviously, we said the county has the right to contract in here. Y'all think you're working in the public interest. And that sales kind of I'd say I'm a former transactional lawyer. That's a pre-closing kind of scenario. And then you get to closing and you get your money. Okay. And this is not exactly how this works, but we're here talking about really the post-closing treatment of these funds, right? So that you understand that the county's working in the best interest of its taxpayers and some of its ratepayers there is contracting getting that $9.5 million. Isn't that right?
Yes, sir.
And then, but the post-closing treatment and that's your purview, but the post-closing treatment of that, at least in theory, is with this commission. And that is really what a lot of this is about, determining the fair value, aside from the purchase price, with a fair value and how it impacts rates. You understand that? Okay. And you were at the public hearing there and you've heard feedback from folks, and you talked about a little bit about the opposition and you referenced in your testimony. You know that one of the things that came up was one of the questions that came up, well, what are you going to do with the money post-closing? And do you think that really what the county does post-closing, whether it's the airport, general services, even a jail, is that really, that's internal county business, right? That really should not impact the process here. Is that right?
I don't think so. That's
Okay. And so the county understandably doesn't want anyone telling it what it can do with funds post-closing, et cetera, right? I mean, not any.
That'd be a decision of commissioners as long as it's a public purpose.
Yes, sir. And one of the things.
Mr. Foxworthy, you may need to pull the microphone just a little bit closer to you. I can hear you, but you're faint.
Thank you, sir.
Okay.
Now, in terms of one question I have, and I wasn't exactly sure where to put it, and we talked about the contract here and what's in the contract, what's not. In terms of the post-closing rate base, how the rate base is going to be treated, how the North Carolina Utilities Commission deals with this, I see a section in the contract that goes to, I think regulatory kind of participation, that kind of thing. But is there any condition in y'all's contract with Carolina Water that explicitly says if this proceeding right here doesn't go the way that the folks want it to go, that the deal is off?
No, sir, not that I'm aware of.
Okay. Now, let's see here. All right, so you understand that Carolina Water has, or at least I've learned, relearned that Carolina Water, I think, and if you set this subject to check, has about 34,000 water customers, and about 21,000 wastewater customers, sewer customers across the state. Would you accept that subject to check?
Certainly.
Okay. And I think that's about 93 water systems and 38 wastewater systems. Okay. Would you accept that subject to check? And then I think it's in 38 counties from Corolla and Currituck County to Bear Paw in Cherokee County. And so it seems like the reason why we're here today is not because the county doesn't have the authority to sell at whatever price it wants to sell. Even if it's got some local opposition, that's for the county to decide. They can make that call. But one of the key premises here, and see if you understand, is, the way that these funds are treated post-closing and whether the premium, and one of the speakers at the public hearing talked about it, they said that it was whether the premium, whatever it is, 8 million above what is owed on the system and whatever goes to shareholders, whether that should be paid solely by them, or whether it would be, and y'all take the money and do whatever you want to do with it, or whether that's going to be spread out among customers all across the state. Do you understand that? Okay. So one of the main kind of brass tacks questions here is, why should customers, taxpayers, and other county commissioners, jurisdictions all across the state, why should their customers, taxpayers, in 37, 38 other counties, Currituck, Cherokee, anywhere else in between, effectively have to pay for, upgrades in what is a wonderful county, Carteret County?
Isn't it the purview of this commission to set those rates and decide that?
It is.
Okay.
It is.
All right. Just make sure.
It is. All right. Well, those are my questions.
Okay. So, redirect.
Mr. Foxworth, were you present during the negotiations concerning the sale of the water company to the town of Buffalo?
Yes, sir.
If you would describe to the commission and the public staff what occurred in that situation.
Mr. Burns and I went and met with the town manager, presented the study to him. He had already talked with Draper Aiden and had a copy of the study. And
Who did the study?
Draper Aiden Associates.
Why did they do the study?
The state funded the merger study for Carteret County to look at the feasibility of merging our system with the town of Beaufort.
Did any of these propositions with regard to merging the town of Beaufort ever come before our county commissioners?
No, sir.
And basically, you and Mr. Burns went to the town to see if they were interested pursuant to the study,
Yes, sir.
but you had no authority to enter in any kind of agreement.
No, sir.
And town of Beaufort did what?
They emailed us, the town manager emailed Mr. Burns and I to let us know that they were not interested in pursuing that.
And that's as far as it went?
Yes, sir.
Now, with regard to the rate changes that have been testified by Mr. Chandler with regard to the change that occurred after the meeting, according to the minutes that he looked at, what occurred while the commissioners raised those rates 95%?
I'd like to just momentarily object. This is beyond the scope of the cross. Having said that, the commission may want to hear this at some point in time, and that'll be entirely in the commission's discretion.
Yeah, as I said, I'm going to give you some slack, but just try to reference it as much as you can.
I'm trying to do it as quick as I can, sir.
Okay.
But also, Mr. Janice raised these issues on his direct, and it would be proper for rebuttal. So, at least that's my opinion, Donnie. The difference was yours, I'm sorry, sir.
Of course, the company should have, or county had the option of file rebuttal, in which we could have had discovery, but they never did on that subject. And now, all of a sudden, at the last minute, they're bringing it up here at the hearing.
May I proceed, sir?
Yeah. We're going to take a quick break. It's been about 2 hours and it looks like this is going to go on longer than 10 minutes. So I want to give a quick break for the court reporter. We'll be back here. We'll be back here in 10 minutes, let's say at 4:05. And then I'll make a decision. requests that I didn't really address about possibly having some people in the room that can answer some of these finance questions a little bit more appropriately. And just to expedite things, get things through, we're going to leave here today. If there is someone that you want to join the panel that you feel like that's here that can answer some of the finance questions, I see someone smiling there. Feel free, and I'll swear them in, and we'll get that started. As far as you continuing with your questions, keep going. Try to do it in 10 minutes, please. Try to get you done in 10 minutes. 5 minutes, okay. And just so you know, we do have some questions. What we want to know is some things related to the upset bid process. Related, we're going to want to know a little bit more about the history of the rates, so increases. So if you want to ask those now, otherwise, rest assured we're gonna ask those. So if you would, you can call the additional.
Mr. Foxworth,
I mean, one question. Would it be appropriate for that finance person to sit as a panel?
Yes, I'm sorry.
Mr. Foxworth, so she could come up now.
Yeah,
and be
no, that's
sworn in?
what I'm saying. I'm sorry,
Thank you.
wasn't that clear?
D.
So, Mr. Wheeler, you can just introduce her, and we'll get her sworn in.
State your name, please,
D. Michelle,
and what is your address?
302 Courthouse Square, Bedford, North Carolina, 28516 is my work address.
And what's your occupation?
I'm Assistant County Manager, Finance Director for Carteret County. I'm also a certified public accountant.
How long have you been Finance Director from Carter County?
A little over 24 years.
And were you there at the time the construction began on the water system?
Yes, sir.
Yeah, before you go, I thought, I trust that she was honest about her name, but before we go through some of the, please push your,
Page block.
no. Left hand on the Bible, raise your right hand. Do you swear to, that the testimony you are about to give shall be the truth, the whole truth, and nothing but the truth? So help you God.
I do.
Okay, you can continue.
Mr. Chairman, I'll continue with Mr. Foxworth right now, unless you want to start asking questions about all this, and it may be quicker to do it that way.
No, just, you go ahead. I just want to get everything done. Go ahead with your, and I heard you promise 5 minutes, so go ahead with your 5 minutes.
Mr. Foxworth.
Okay.
Mr. Foxworth, in June of 2021, were you aware of the time when the tax rate for the water district was eliminated and the water rates were increased?
I was.
Explain to the commission what happened.
As part of the budget process, the commissioners eliminated the tax rate in the tax district and asked us staff to put together a rate that would make the system whole, to make the system solvent. That was done. That rate was held during the month of July and August. And in September, because of the public outcry, the commissioners reduced the rate, I believe, approximately 25%.
Now, was there any collusion or involvement with Carolina Water during that period?
Absolutely not.
Now, have you dealt with Ms. Michaud in trying to come up with a current sustainable rate of what it would take to create water rates that would pay for itself, make the system pay for itself?
I have.
And what is the result of those calculations?
Be $98.77 for 4,000 gallons.
And going to Ms. Michaud, does that also include depreciation?
Yes, sir.
Okay.
It includes setting aside capital for future needs.
So I have some questions from the panel or anybody else, I guess, really.
Okay, we will move to the commissioner questions. Commissioner Clapfelder.
My question's for whichever one of you can answer. So whoever can answer, jump in. Have either one of you looked at Mr. Junus's pre-filed testimony, his written testimony?
Yes, sir. It's been some time back.
There was a table, and he was asked about it. There was a table in the testimony in which he tried to set out the sequence of the bidding process. Do you recall looking at that? Maybe your counsel can get a copy of that in front of you so that, okay, Mr. Junis is going to bring you a copy. It's table 3 on page 14 of the testimony Mr. Junis filed before the hearing.
Very good. Yes, sir. We have it in front of us.
You do?
Yes, sir.
Well, I guess I ought to ask you first, is that an accurate sequence of what went, how the bidding went?
I think, and let me look at my records right here. I think there may be a bid missing.
If it helps you.
So there was a bid we just found. There was a 7.875 bid.
$7.875 million bid.
Yes, sir. Between
Who placed that bid?
looks like Aqua.
Was it Aqua?
Yes, sir.
And when was that bid placed? Was it between March the 1st and March the 23rd, 2021?
21st of March. 21st of March.
21st of March.
Yes, sir.
Okay. With that added into the chart, is that chart, that table 3, is it correct otherwise?
To the best of my knowledge, yes, sir.
Thank you, sir. Can either one of you discuss with us why the county decided to use the negotiated bid followed by advertisement and upset bid process rather than to call for sealed bids for the sale?
We commonly use the upset bid process on most of our processes. Whenever we dispose of public property, we use upset bid. And in talking with our county commissioners, we feel like that was the best way to move forward with it.
Did you discuss using a sealed bid with them?
No, sir, we didn't discuss using a bid.
It just wasn't an option discussed.
No, sir, it was not.
And have you ever used a sealed bid process for anything?
We may have, but not to my recollection. It hasn't been recently. It hasn't been during my tenure here.
It's not something you're regularly familiar with.
Yes, sir. Well, I'm familiar with the process, but it's not something we readily use.
And thank you for that correction.
Yes, sir.
Okay. Now, let me make sure, I want to do this as quick as we can. So in connection with Mr. Junis's testimony, there was some minutes from the county commissioner meetings. It was Public Staff Junis Redirect Exhibit number 3. And I don't know if that's there in front of you, but I hope it is.
I have some of Mr. Junis's testimony
okay.
in front of me.
These look to be the minutes of the meeting on February 15. Well, I don't know if it's February 15 because the pages are not in sequence. Aren't it? The pages are not in sequence.
That was the problem in handing it out.
Mr. Foxworth, there's a page in that exhibit that's got number 149 up at the top right-hand corner of the page, and that's the one I want to look at. I wish I could do better to help you find it, but that's,
I see it.
okay. And now at the bottom of that page, there's Roman numeral 8. It says discussion regarding the county-owned water system. And just read to yourself that paragraph there silently. I don't need to read it out loud, but read it to yourself, and then I'll ask you the question. When you're done, let me know.
Yes, sir.
Did the fact that y'all were, the county was trying to get Carolina Water Service to commit to hold the rates, did that have anything to do with the commissioner's decision to increase the rates in the 2022 budget by 95%?
No, sir, I don't believe it did.
Didn't have any connection?
No, sir, I don't believe it did.
Okay. You have any different recollection?
I agree with Mr. Foxworth.
Okay. That's all I have. Thank you.
Commissioner McKissick?
Yes, a couple of quick questions. You mentioned this $98.77 per 4,000 gallons. Now, I take it that's the rate that would have be paid by basically the 1,254 customers that are currently
Yes,
part of the
sir. It's, that's based of the 3/4 inch meters. I mean,
Alright.
3/4 inch meter. Yes, sir.
So, and that would provide a sufficient revenue to make the system self-supporting and also provide a capital reserve fund.
Yes, sir.
All right. Now, I take it that I guess the revenue that might be generated from the water service district, those people, I guess, getting fire suppressing service, they wouldn't be paying anything in, or would that continue to exist, or what would happen with it?
If the County Board of Commissioners increased this recommended rate, if we maintain the system, there would be no need to levy this special district tax. So they would not continue to pay that 5.5 cents.
Even though they're receiving fire suppression service?
I don't think our system is really designed for fire suppression service, but I'm not an expert with that.
It is not. We don't provide, the system doesn't provide fire flows in most areas.
So there are fire hydrants there, but I guess the fire hydrants run throughout the community and
Ye-
provide service other than to, I guess, the 1,254 customers. You're saying the fire hydrants are present, but they're not utilized?
To flush the lines, yes, sir.
Just to flush the
To
line?
flush the lines, yes, sir. They also, some of the departments use them to fill tankers and things like that, but as far as flows, the system.
But they're not
in
used-
most areas.
All right, so it's really just for maintenance purposes?
Yes, sir.
As opposed for fire suppression purposes?
Yes, sir.
Yes, sir.
Got it. I was left with a different impression earlier. And let me ask you this. I've heard some discussion about some, I think it was 237 people that have paid in funds. Can you explain to me what type of program that is and how long a period of time it's existed and why these people perhaps are not connected to the system?
I can't tell you why they chose not to connect onto the system. I cannot give you the specific dates, but there were two programs, phase 1 and phase 2, so it's been in the early 2000s, maybe even up to 2005 and 6. And it was an incentive to try to encourage potential water customers to connect to our system. And so their contract would be that they would pay a certain flat amount for so many months. And then they had fulfilled their contract. The meter, it was put in the ground, and everything is done on the county side of owning the lines. And then at which time, when the customer decided to connect, they would not have to pay any connection like tap fees or anything like that. The homeowner would just incur the expense from their house to the meter box. We had a lot that connected and have connected over the years. We have maintained a list and flagged those people so that at whatever time, if they choose to connect our system, we know they have fulfilled their contractual obligation, and there are 237 of those.
237.
Yes, sir.
And why do you believe, I mean, obviously when this system was built, designed, constructed, it was anticipated that it would have, I guess, far greater number of users than it has. I mean, it looks like there are 3,875 parcels you cover and some 2,167 structures. What would you attribute the lack of participation by people actually connecting onto the system?
I just do not know. With the county, due to the size of the project, we contracted with an engineering firm that managed the design and everything with that project. That firm was the project lead all the way through. He had stated to the board many times at board meetings, like you would anticipate a certain percentage to connect. And that percentage just didn't come to fruition. It was a, significant disappointment to all.
And I take it that the people that have not connected have wells that they're utilizing?
Yes, sir, they do.
Are any of those community wells or?
No, sir. Well, I do not think any of them are. I think most of them are, to their homeowner, residential specific.
Thank you. I don't have any further questions.
Commissioner Duffley.
Good afternoon. So my first question's a follow-up to Commissioner Klopfelter's questions to Mr. Foxworth. So I just want to confirm that the sealed bid process is a viable option that's available to the county,
It is.
and they just chose not to use it.
Yes, ma'am.
Correct. Okay. And then I thought I heard Mr. Denton testify that if this commission determines that the fair value at a level, let's say that the public staff advocates, that his company can walk away from the APA. And I thought I heard you testify to something to the opposite. And so are you disagreeing with Mr. Denton's testimony?
No, ma'am. I think what I meant was I was not aware of any language in there. Either they could or they could not. I was not aware of any language.
But so I'm asking your
No.
understanding of the agreement. If the fair value, let's say we set it at $2 million, do you believe that CWS can walk away from the deal?
Yes, ma'am. I think they can.
Okay, thank you. And then I'd like to present a hypothetical that let's assume that we set fair value with public staff and the deal does not close. I heard Mr. Junis testify that the county, if they really wanted to sell it, they could go back to the drawing board. And I kind of wanted to hear your views on that. What would the county do if this deal did not go through?
I think we would have to go back to the drawing board. I think we'd have to go back to our elected officials and look to see how we would proceed with it. I'm not certain how we would.
Okay, thank you. And as an operator, I know that Carolina Water is the operator currently. I think they said July of 2021, since July of 2021. Or is that accurate? Or
No, ma'am. February of this past year. Yes, ma'am.
February of 2022?
Yes, ma'am.
Okay. And prior to that, was it the county?
Yes, ma'am. It was.
As the
Yes, ma'am.
operator? And then at the public witness hearing, there was some discussion about this $8 million and what the county might do with that. Has there been any discussion amongst the commissioners about providing some of this back to the water customers?
No, ma'am. That hasn't been part of the discussion.
That has
Not that I've heard. No, ma'am.
Okay, that has not been a part. Okay. And then I just want to make sure of your understanding. Let's say that the commission approved the application, the fair value application, and ruled the 9.5 million. And then the commission hypothetically decided to do standalone rates. Do you understand who would pay those rates? Who do you think would pay those rates?
I'm not certain. Would it be the customers in the district?
So the 1234, is that your understanding that it would be the 1,200, I probably don't have the exact 54 customers.
It would, just from what I've learned here in the last 2 days. Yes, ma'am.
So when you were making your decisions, you didn't realize that's a possibility?
No, ma'am. But I understand that y'all have the ability to set the rates where you see fit.
Okay, thank you. Nothing further.
One quick thing.
Sure, please.
And I believe I heard your explanation earlier, but if the county would sell the system, they net this 8 million, do they have to repay any of the loans or grants they received, grants they received? I guess it was about 6 million in grants that got received when it was constructed.
Commissioner, we would, certainly have to pay off our loans. That's due to USDA and the state revolving loan. We are in the process of reviewing the grants and contacting grantor agencies such as USDA and getting clarification on the language. So we're uncertain at this time if any of the grants would have to be paid back as well. But if we do, we'll fulfill our obligations.
Thank you.
Chair Mitchell, please.
Just a few quick ones. Will you all confirm for me that were the county to sell these two systems, the county would not own any additional water facilities?
Yes, ma'am, you're correct.
Okay. I read that. I think I read that somewhere in the evidence. I just couldn't remember. So that's why I needed your confirmation. Why, just provide a little context. Why did the county build this facility? I recognize that might have been before y'all's time, but just help me understand what you all know.
This is, my recollection is that, and there are some of the areas that we have customers now, and I don't know the section, but I remember people coming, in environmental health, talking to the county that there were some customers having trouble with wells and their wells needing replacement or going bad. And then I wasn't involved with general services work. And then the county started looking at options and it grew from there and ended up getting the almost $3 million North Carolina DEQ grant to build the plant and start doing some lines. And then after that, we got subsequent grants to build additional infrastructure. That's the best I can answer for the county's philosophy.
Okay. But there wasn't any precipitating event. I mean, you
No, ma'am.
mentioned public health
ma'am.
and discussion of wells that might have been reached their end of life or otherwise had water quality issues or something. to that effect?
There may have been a few wells, but gosh, it was so long ago. It wasn't a great number, but I do remember a discussion of a few.
Okay. And then again, to the extent that you all know, why does the county want to get out of the business of providing water service?
With it being a rural district as it is, and the fact that it takes us as much staff as it does to run it, we just think it may be better run in the private sector.
Okay. And why again, to the extent that you know, why did Beaufort not want to take the system?
They never gave us an explanation for that.
They just said no.
Just said
No,
no. Yes,
thanks.
yes, ma'am.
Do they have their own water system for their jurisdictional?
Yes, ma'am.
And do you know about how many customers the town of Beaufort serves?
No, ma'am, I don't.
Water customers?
No, ma'am, I don't.
Okay. What can you all tell us about the specifics of the system? I think 3,000 plus parcels are served or have access to the system, and about half of those, or less than half, have actually taken service.
That's right.
Are those parcels that have not yet taken service, are they, I recognize some of them may be served by wells, but are the rest of them vacant, unoccupied? But why aren't they, what can you tell me?
Right. So they're, so 1,254 households. There's 3,875 parcels in the district. Of those, I was looking for my exact numbers, just over, I think it's 2,100. Here it is. Sorry, 2,167 show some structure value on them. It's just, it's an area that's not one of the, it is a growing area, but not a very quickly growing area of the county. So we're just not seeing that escalation.
Okay.
There as far as growth.
Okay. So we're assuming from, I'm assuming you're looking at the tax rolls to find to identify those 2,100 properties?
Yes, ma'am.
Okay.
That was some GIS
Okay.
analysis we did on them.
Okay. So the 2,100 customers could be connected, presumably, just if you accept that there's something on there's a parcel, there's
some structure
yeah,
value.
there's structure on the property that needs
Yes,
to be
ma'am.
served. Okay. Okay. In establishing the tax district, does the district encompass only the area that's served by the system, or does it encompass area outside of parcels that could be served by the system?
To the best of my knowledge, it can all be served by the system.
Okay. So any parcel inside the tax district that was paying the tax could be served by the system?
Yes, ma'am.
Okay, that makes
No.
sense. I just wanted to confirm.
Now, how close it is, I mean, it may be greater for some and less than others, but I believe they can all be served.
Okay. All right, that's all I have. Thank you.
Okay. I have one question. Hopefully it's a quick one. Got two. We've heard a little bit about the fund balance. There was some reference, and I don't know if you were listening earlier, it was a over $5 million number. If I'm not mistaken, that just surprised me for a system with a revenue. Is that accurate that you have, and is that a county fund balance amount, or is that an enterprise fund balance?
Commissioner Hughes, I don't want to sound too much like a geeky accounting nerd. The 5.8 million is the net position, which is equity in the enterprise.
That's what I
fund.
thought. No, okay.
Which is not the same thing as everyone thinks of fund balance for your governmental funds and your amount of spendable money.
Yeah, no, that's what I sort of assumed. So what is your fund balance in terms of cash, or how the LGC would see it as for the water enterprise? Do you have a separate fund balance just for the water enterprise?
We don't calculate it that way. We probably have 1.9 of spendable cash that's not restricted. So
That's just that you could use for the water system, or that's county in general? Okay.
that you could use for the water system. That's in the water fund.
Okay.
And the water fund is the only place that
Yeah.
has the cash for that fund.
Okay. So that higher number wasn't, you're not going to be able to use that money to buy schools, to build
No, sir.
schools. Okay.
No, sir.
I think there was also mention that you may have applied for some state funds in the fall for this round for your system. Is that, to your knowledge, is that correct?
Neither one of us are aware of that.
Okay. I don't have any further questions. Any questions? Okay, we'll take questions on commission questions.
Thank you. Quickly, if I can, the source, Mr. Wheatley asked you all about a sustainable rate. Is that how did you go about calculating that? And can we, is that the type of thing that we can get a copy of and ask you
Yes,
some
sir.
questions of if we need to, even after this hearing?
Yes, sir.
And the Merriman add-on, what do you know about the Merriman add-on, how that occurred? There was this question about how this all occurred.
The Merriman system predates me. That was in the 80s. That was funded. I'm fairly certain that was community development block grant money.
And what was the reason for that?
I have no idea.
No idea. Okay. And question, you were asking about where things the source of the money. Would the county have built this system or maybe done the add-on for Merriman without grants and or low interest loans?
No, sir.
If the county has to pay back certain of these grants, would that deter the county from selling? Do you know?
I don't think it
I
would.
don't think so.
I don't think it would.
And then, real quick, we were talking about fire districts before, and I want this to come off the right way. But if the Department of Insurance records indicated that Mill Creek is rated a Class 4 fire district, would you agree with that?
There, yes, sir. There are some areas that have fire, but it's just not fire flows, but it's just not widespread.
All right, and is most county water system rated Class 4?
I don't think so. I have to verify.
Class 9? Class 9, my apologies. Class 9?
I'd have to verify.
So you don't know?
That's right.
Right. And then finally, economies of scale, that's been one of the key things. Y'all have, you're home to the state ports, you got historic Beaufort, you got an airport, your budget's about 160 million north of that a year. And you got HR, right? You got finance. You probably have, I don't know if you have motor fleet. There are economies of scale within the county itself as part of its apparatus, aren't there?
Yeah.
Okay. All right. Very good. Thank you.
Okay, company? Kelly, questions on questions?
No, sir.
Okay, parties have any motions at this time?
I would move that their testimony be a part of the record if it's not already. Thank you, Lord.
Yeah, I think it is, but an abundance of caution. So it's so moved.
Chair Hughes, I would like to enter into evidence, if we can, Foxworth, Foxworth rebuttal cross exhibits 1 and 2.
Yeah, they have not been entered in, so they will be entered in.
Thank you. And then additionally, and I, just as a housekeeping matter, would also like to enter in Junus redirect exhibits 1 to 2 and 3.
So marked, so moved. So
Thank you. Thank you.
Okay, I think the two of you may be released, and thank you very much for.
The county has no further witnesses.
Okay, I think we are, Ms. Sanford, I think we're ready for rebuttal testimony.
Calling Don Denton for rebuttal.
I hope you're going to sit on that box and not read from it.
Tried to get as many documents as I could this time.
That's just a summary.
And Chair Hughes, if I may, in conferring with counsel for Carolina Water, we'll.
We have confirmed that several times
Perfect.
and I've got it. So
Perfect. Yep, thank you.
just a second here and off we'll go with the commission's permission. Let me go ahead and start talking while they're passing out, if that's okay. There are two items that I need to bring up with the commission, and I'm going to go as fast as you'll let me go. So stop me if it's too fast. First of all, we owed this docket and this commission a report on the customer hearing from October 18th. It was due on Tuesday and we failed to file it. Partly we failed to file it because council forgot the date, but partly we are, and I apologize for that, and I'm going to file a motion that's at the end of this conversation. Also, we are continuing to do the investigation of the 3, I think perhaps 4 witnesses who spoke of 3 service quality problems: pressure, yellow water, and one person talked about chalky, foggy, that hard water kind of phenomenon. The company has been investigating that. Mr. Denton is here to talk about it. Mr. Zeke would like for him to talk about it on the record here. We're glad to do that. But we are continuing the process of the investigation because we haven't been able to substantiate either the problems or a cause for them because we couldn't find the problems. So motion coming your way. Mr. Creech has asked that Mr. Denton address these issues on the record in the hearing this afternoon. We are agreeable there'll be little to say because we haven't found out the answers yet. That is thing one, coming with my apology and a motion to come. The second thing is that I think Chair Mitchell had a question about revised Exhibit 12. Does that look familiar? And if you didn't, I'll drop this.
We're going off my notes here, and she asked
That's the
for
tariff.
confirmation of
The
the
confirmation.
county's rates. Yeah.
And so Mr. Denton is here with revised Exhibit 12, which has been filed in the docket. And, right? Yeah. And so he's ready to speak to that. So with your permission, and I guess he's still under oath, we would offer him for the questions that Mr. Creech and you might have about the service quality first.
And just for a point of clarification, we were attempting, when we learned yesterday, day before, that
Yesterday.
somebody wasn't going to be able to file the report, and then we hadn't received it, that we had asked if the company could address it at the beginning of the proceeding. We didn't, this is an interesting first scenario, so we didn't get to it. And so the company, in our discussions, made the most sense. It doesn't have to be under oath or anything like that, but we're just looking for an update from the company for the report that was to be provided before our testimony.
So was that update sufficient, or do you need to hear more from?
Well, we would like to hear from the company,
Okay.
from Mr. Denton, if at all
Okay,
possible.
that's fine. So this isn't a substitute for the report or the filing that you're going to explain when you're going to.
Motion for extension of time on the, if I get out it, well, you might not get it today.
Okay.
But asking until Tuesday, we want to reconfirm the investigation that's been done. So the motion is on the way to you, and then a report will come to you.
Okay, as
with
long
your
as
permission.
this is not
This is not
fulfilling
a-
that
this
responsibility.
totally,
Okay.
The public staff was interested in this, and we're trying to accommodate.
Okay, so if you want to say a few words, I heard the word brief or quick.
I'll be brief.
Okay.
I'll be brief. As Ms. Sanford indicated, there were three issues. One was the yellowness in the water. The other was pressure, and indicated normally pressure late at night or early in the morning. And then pressure issues, and then the hardness issue by one customer. What we've done is we've tried to go out and meet with each of these customers, our operations team. They've also checked at the locations where they claimed yellow water or discolored water, took water out of the tap, out of the spigots at the homes and looked at it. We didn't find any water that was discolored at the time. We also checked pressure at the homes, but we didn't do it late night or early in the morning. It was during the day. So one of the things we are doing on the pressure is we've ordered a pressure recorder that we will locate at one of these homes with the customer's permission to record pressure over a period of time to see if there's any indication of low pressure late at night or early in the morning. The other thing we did do was we looked at the SCADA data for the tanks, which would be an indicator as the tank level goes down, normally pressure in the system will drop. We didn't see any anomalies in the SCADA data associated with the level in the tanks. So we went ahead and moved ahead with trying to get this pressure recorder that we would locate at one of the homes, just to be absolutely sure. And then finally, the hardness issue, this system does have softeners on it. And the operators did check the softeners. They're operating within tolerance. Is it possible at one point that they may have gotten out of tolerance? It's possible. We don't have a record of that, but they have checked it, and right now it is within tolerance. So
I have a quick follow-up question, or one or two. Now, several witnesses that testified talked about low pressure.
Mhm.
And they said it starts about 8 or 9 o'clock every night, and it continues through the night. And all of them testified that the low pressure and the yellow water, those that testified to that, said it started this spring. And how many men or how many operators have you had out there working on this system since you took over the operations?
I'd have to confirm that,
Okay.
Mr. Kramer. I don't.
Thank you. Could you put that in your report?
Sure.
let's move on to 354.
Okay, we'll move to revised, I'm sorry.
Yeah, revised
Revised
Exhibit
Exhibit 12 in response to the chair's question, if that's okay.
I think the chair was asking me whether or not revised Exhibit 12 has the rates that are currently established within Carteret. Have that correct?
I wanted you to confirm that what was filed with your application, Exhibit 12, reflected the rates that were that were the rates presently charged under Carteret County's current rate design?
There are two variances that
Okay.
in the revised version of it. One was the meter testing fee. Currently, Carteret doesn't have a meter testing fee. The other was the finance charge for late payment. They currently charge 10%. What we have in this is 1%.
And when you say revised, you mean filed subsequent to the filing of the application?
Yes, it was a revised exhibit that came in as part of the deficiency.
Filed on August 11th.
Right.
Okay. Okay.
The original file had both Carteret rates and our rates, and it was a little confusing. And so our proposed rates, so we took out the Carteret component of it.
I'm just looking for compliance
Okay.
with 133, 1A, sub C 8. I think what I'm hearing is the revised exhibit gets us there. So just, thank you.
Shall I proceed with the rebuttal? Okay. Mr. Denton, did you cause to be filed in this docket on October the 24th, rebuttal consisting of 11 pages?
Yes,
Do you have any changes to make to that rebuttal?
I do not.
If you were to present that orally today from the stand, would it be just as you have presented it and pre-filed?
Yes.
I request that his testimony be read into the record as if given orally from the stand. There are no exhibits, so with that, he is available for questioning.
Summary.
I did want his summary read, and I thank you for that.
Public staff would agree that that could be entered into the record as evidence without having him read it.
That's fine.
It's certainly fine with us.
Yes.
And so we will request, well, I'm going to go through my list of things to be admitted, but that'll be on it. So with that, he is available for
So
commissioner.
let me just, the motion to admit the pre-filed rebuttal testimony consisting of 11 pages into the record is if orally given from the stand is granted. And then did you want to make a motion to enter in the summary now too?
Yes, I will.
Okay,
Thank you.
and that's granted as well.
Thank you.
Mr. Denton, do you realize you and I are the only ones holding up everyone from going home?
I do.
Now, could I suggest that the best way to get everyone out of here quickly is for you to agree with all my questions?
Well, I'm eager to hear what you've got to ask me.
Okay. Now, on page 4, lines 10 to 13 of your rebuttal testimony, you discussed the vote by the Carteret County Commissioners to sell the system to Carolina Water for $9.5 million. Do you recognize that?
Are you referring to the paragraph on line 10 that starts
Yeah,
with
it starts
secondly?
on 10, yeah.
Secondly, the public staff position? Yes.
Yeah. Now, do you agree that the Carteret County Commissioner vote was a 4-3 vote in favor of the sale? Do you agree with that?
That's my understanding.
Now, do you agree that a switch of one vote would have defeated the sale?
That's my understanding.
This is going to be quick, so don't worry about it. Do you consider a one vote margin an overwhelming display of Carteret County or County Commissioner approval of the sale?
I consider it approval.
Okay. Now, I had questions about the service concern, but we'll skip that, and we are getting near the end. I did say earlier yesterday that I thought you were doing a terrific job, and I still want to reiterate that, but that does not apply to the fair market value proceeding we're involved in, just clarify. Now, on your rebuttal page 10, lines 11 and 12, you basically say fair value is the price to which a willing buyer and a willing seller will agree. Actually, it's a willing seller and a willing buyer would agree. You agree with that still?
I do.
Now, Do you agree that Carteret County is a willing seller?
I do.
Now, this is going to be a long question, but I will get to a question. How is Carolina Water a willing buyer when Carolina Water is not paying the acquisition price? Instead, the customers are paying the entire rate base through return on rate base and depreciation. So therefore, Carolina Water shareholders are not paying anything. Isn't that true?
No, it's not.
Well, you're going to recover it all from the customers.
No, we're not. As exhibited in, I believe it was yesterday, at least part of the depreciation the shareholders will pay for.
Okay, but other than that, the customers are paying for the system. Is that correct?
Over time.
Now, you were bidding on this with Aqua North Carolina. Is that correct?
That is correct.
And there's been some discussion that you and Aqua North Carolina were together in putting forth this statute to the legislature.
That's my understanding. I was not part of the company at the time.
Okay. Now, just like Carolina Water, Aqua North Carolina is an investor-owned company regulated by this commission. So they would earn a return on rate base if they were got a rate base here and get depreciation just like you.
That's my understanding.
So therefore, if you were going to be treated that the customers pay everything except for those couple of years depreciation, that same thing would apply to them if they required it.
That's my understanding.
Okay. Again, I think you're doing a great job, but I'm done. And it is 8 minutes of 5.
Let me see if my colleagues have questions. I'm sorry, redirect, sorry.
No question, sir.
Mr. Grantmeyer asked you whether the ratepayers, and if I'm wrong, you can correct my phrasing of this, but if the ratepayers, customers bear the cost of these acquisitions under this fair value statute, isn't it true that they bear the cost in the same way if you were using original cost minus depreciation methodology?
Yes.
I have no more questions.
Okay, now we're counting nothing. Okay, now we're going to commissioner questions. The ones I have been asked. So, all right. Well, I think then my notes say that we're done. No, yeah. Are there any motions that you'd like to make? Any final motion?
I would like, if this is the proper time, to do my cleanup of moving things into the record. If
Please.
I might.
No,
I think I
please.
do better if I do them all at one time.
No,
I will try to zip through them. I want to introduce into evidence, and it's a series of things that are displayed in the docket, so I think I'll tell enough for you to identify what they are. The application filed July 26th, the cover letter and the narrative pleading, which had some attachments. Exhibit 1A, 1B, and 1C, which were the 3 appraisals, Gannett, Nugent, and Hartman. The direct testimony of Don Denton, consisting of 9 pages, and his summary, also filed on the 26th of July. But same day, the application, including the form application, exhibits 2, 6A, and 8. On August 11, the revised exhibits consisting of a cover letter and exhibit 12, 5D, 7A, 7B, 7C, and 7D. The rebuttal testimony of you've already moved that in. Thank you. Mr. Denton's rebuttal. The rebuttal testimony of Jerry Hartman, consisting of 5 pages. I think that is it for me.
Yeah, so granted.
Thank you.
Thank you.
Chair Hughes, I don't know if it's, I would like, in abundance of caution, to request that the commission take judicial notice of NCGS 62-133.1A, the commission's order and docket number W100 sub 30 issued December 30th, 2021, and the rules adopted thereby, and R741 and R1028 relating to acquisition of government water and wastewater systems of fair value.
So moved. Okay. I want to thank everybody. Oh, one detail, please.
Presiding Commissioner Hughes, just a reminder, Ms. Sanford, the outstanding request for a late filed exhibit, and just want to be sure that it didn't get lost.
Yes, thank you. It is on its way to Columbia, South Carolina, as Mr. Schellinger has left, but we
That-
discussed it today, and so we will.
Just want to be sure it didn't get
Thank you.
lost.
Thanks for the reminder. Always appreciate it.
Okay, well, the parties shall file any briefs and proposed orders within 30 days of the filing of the last transcript in this matter. Okay, again, thanks everyone for this first impression. And you may be released, and everyone have a good weekend. Thank you.
We would ask that the public staff be allowed to file comments on the service report since we haven't seen it yet.
Yes.
Yeah, that's going to be allowed, but that, I don't need to.
Great job.